It's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola. How is everybody today?
No, I'm good. I was told there would be delicacies.
I tried.
You did not try. I was with you the whole time.
I
from
tried.
New York.
He wouldn't let me carry them. He thought I was going to eat them.
That's valid.
Abba, Max brought you some cookies. I have cookies for you.
Yeah.
I might have a cookie for you. I mean,
thanks, Max. Max is the best.
They're going quick. I'm not.
He bought me chopped liver.
Max brought you chopped liver?
Yes.
You can't have chopped liver.
Well, I didn't because I ate it.
But it's bad for your gout.
It wasn't bad for me. It was great.
But it's a delayed onset effect, so.
It is the best chopped liver. It was so good. We actually ate it in the airport in the lounge.
Yes, we did. He even shared.
So you stunk up the lounge?
Enough that he could share.
I snuck Tony into the lounge because So hold on. We have to go. We have to go back all the way to the beginning.
Yeah. There's a lot that happens.
We have to unpack a lot. Okay?
Yeah.
So I go in Thursday morning.
Yes.
I got to do this television thing and a podcast and some other things. So we don't fly together.
Oh, yeah, you're a mover and a shaker. You're like a movie star.
I'm a mover and shaker.
Yes.
Right? So I got there about 2 hours before my TV thing. And so I'm around Midtown, right? Looking for a place to have lunch because I got to kill some time.
Yeah.
Can't find a good slice of pizza. End up with
I was in Midtown. We had some really good pizza.
Okay, well, maybe you found one. I couldn't find one. But anyway, so anyway, I'm doing my thing, blah, blah, blah. And then I have to go meet somebody for dinner after I did all my stuff. And then we had beautiful dinner at some French bistro down in the village. It's great.
Ooh.
What did she wear?
And go
You
back.
went to a French bistro in the village? Who are you, Taylor Swift?
It was really good. The steak was great. Anyway, so we had our team. We always have a team dinner before we do our events.
Yes.
And so then I got back to my hotel like maybe 9:30 at night. It's a long day for me.
Yeah.
Next morning, okay, he texts me. He goes, "Wake me up at 6 o'clock." Or text me at 6 o'clock. Call me, like in case his alarm doesn't.
What are you, the front desk?
I know. But I'm up from like 4.
I know he's gonna be up. He's got to pee at 4.
I'm
so
up from 4 anyway.
Right.
Sure.
And so I'm up. I answered some emails. I'm up 6 o'clock. I text him. I go, I'm going to go downstairs. I'll meet you downstairs lobby because we had to prepare our trades for the day.
Right.
We do live shows. We wait till the last possible minute because we want to see what the market's doing.
Right. Of course.
So we go downstairs. We meet about 6 o'clock in the morning. I had already been out to a 24-hour deli, pick up some bagels, everything. Okay. And Mr. Batista comes in, all right, with his backpack on one shoulder. And he's got
a broken flipper.
He's got
like a bent paw.
He's got a broken flipper. he's like holding his hand like this,
it's not good. It's not good.
It's not good. There he is. He's like got this. He's got this big. His hand's blowed up.
Right.
Like
Yeah.
this big thing, And he's like walking around like this, and he's moaning. He's like, "I'm in pain. I'm hurting."
I didn't say one thing. Nobody
He's like
knew
crying.
So
anything.
wait, but at this point, you had not gone to a hospital.
I had not seen a doctor.
Okay, so
No.
it was just big and swollen and puffy.
Yeah.
Okay.
It was nasty looking, but it's hanging out there. It's like half broken off, like one side.
Sure.
Like he looked like he just got out of a car wreck or something. Okay.
Men
So
are such babies. Okay.
So he's like dangling his
No,
arm.
it's fractured. I mean, it's not sprained.
But it's dangling his arm here, and he's
Right.
like, and then almost it killed him to ask me if I had any medicine. Luckily, thing for me, I carried a little medicine. I gave him some pills from like 20 years ago. He's still alive, so it didn't kill him. And
would you give him
this
a
is all true.
Quaalude?
This is all true.
I don't know.
Like a Quaalude from '86?
Whatever
what did
he
you
had,
give him?
it said Rora. It said Rora on
Some
it. I don't
Mexican,
know, 17 or something? I
some
don't
Mexican painkillers or something.
Cool.
Anyway,
know. Yeah, it worked out well.
so I go, all right, what happened?
So I go to see my mom.
And this is his story.
cemetery.
I mean, we have no video or or evidence of this. This is just a
The
story.
truth of the matter is, Sosnoff said, I'll wake you up at 6 o'clock. He knocked on my door. I opened the door. He grabbed my arm and he twisted it. And he doesn't know his own strength. And he hurt me and he twisted my arm.
Okay, yeah,
and
no, that's no. So
it.
what happened?
So I went to go see my mom. She's at Evergreen Cemetery. It's a big cemetery in Brooklyn, Queens, right on the border. I get there at 5:30. They close at 4:30. Now, it was a Thursday. Who thinks that they're going to close at 4:30 in the afternoon? So it's a big 12-foot high fence. And I said, I'm not going to be stupid. I can't climb that
it's
fence.
like if it was like Costco and you had the good plot, you could have got. They would have stayed open an extra half hour for you.
I didn't have that. She doesn't have that plot. It's a very old plot.
She didn't have the black card. She only had the regular one. Okay, got it.
What's wrong
The regular
with you? Bat,
So
go
I
ahead.
told the cab to go around the back. Maybe there's a smaller place I can get in the back. So he goes around the back, and there's like a 6 or 8 foot high fence, but they got these spikes on them. Like these
Yeah,
big old-
yes.
keep people out kind of thing. So I said, pull over, wait for me. I'm gonna go hop that fence, and I'm gonna go see my mom. So I get up to the top. I
So
remember
you
my
made the cab driver an accessory to your B&E?
This is true. That's actually how my mom got in trouble with my dad. That's true. That's very true. Anyway, I'll tell you that story another time. I get to the top of the fence, and before I know it, I was down on the floor. And my glasses had fallen 6, 8 feet away from me. I fell all on my left side. I grabbed my bag real quick with my left hand, and it was the pain that shot up my arm was unbelievable.
Oh my God.
So I grab my backpack. I walk around for about 40 minutes. I'm in the back of the cemetery. This is the worst part of the story. My mom's in the front of the cemetery. I'm in the back of the cemetery. I don't know how to get there. I'm going through all different types of sections of the cemetery. I can't find my mom. About 40 minutes goes by. I turn around and I walk the other way, and so I never got to see her, and I got a fractured arm.
How did you get out?
I had to climb back over the freaking fence with the posts on it.
Did the cab guy still wait?
Yeah, he was about a half a block down out of in case we get pinched. He can get away.
So why don't you have him drive you to an ER?
Well, by this time it's almost 6 o'clock at night, 6:15 at night. I didn't want to go.
He had dinner plans.
I did have dinner plans. I did have dinner plans with my friend Mark, who I saw for the first time in about 5 years. It was great to see him.
Yeah,
Very nice.
I saw the tweet. I saw
And my
that you
friend
were
Joe.
tweeting.
Yeah. I know.
So-
I was in so much pain at dinner. I really was.
So the next morning he's dangling. So we go into the show, we test our mics and stuff.
Right, and because he has to he's running the platform during the live show.
I'm a pecker, so I'm okay.
Lucky
Now I'm a
thing,
real
this
bad
is his
stick pecker.
left hand.
Right, sure.
And lucky thing, he doesn't really know, he's not really good with
I've never had a left.
Yeah, he's never had a left anyway. And he's not really good, and with there was a lot of issues. But anyway, we start the show, and the first thing I said to the show is, "Is there a doctor in the house?"
There were two.
Oh, yes,
There were two.
using it, yes, mining his pain for comedy. That's great.
There were two doctors. They both helped me. They were very nice.
I'm surprised there weren't more doctors. I'm so.
Only
There
two
was
wanted to
probably
help me.
more,
The
but
ones- the
there was
other-
probably
the
more,
other
but they didn't
four
want to
were
get
fans of Tom.
they didn't want a malpractice case.
Right, yeah, sure.
The other four were Tom fans. These guys were the only Tony fans.
One woman, she was a doctor. She came up to me at the end of the show, and she goes,
Did you go to Sloan Kettering? Where'd you go?
there was a woman after the show was over, and it was a really fun show, and it was a good show. Everything we did made money, so it was kind of good. And after the show, this woman comes up to me. She goes, and she kind of I had a bunch of people I was talking to, but then she comes up in my ear. She whispers, she goes, "I'm really worried about Tony," and I'm like. And she's like, that could be
It's not, by the way. If anybody was worried if it ruined the show or his concern or his
so she goes, I'm really worried
about.
about Tony because of his hand, and he looked uncomfortable, and it could get worse. He could have gangrene. She's going.
Sure, yeah.
And I give her this. I go,
No, she's worried about nerve damage.
Oh,
and
nerve
stuff.
damage.
Yeah, that could happen.
I told her, I go, we're gonna rub some dirt on it when we get outside. He's gonna be fine.
Tom was the pouring out of love that I felt from Tom. all
So
weekend.
when did
Amazing.
you go to the hospital? When you came back to Chicago, or?
Oh
Yeah,
he
I
played
was
it up
free.
on the whole flight home. He's like the flight attendant because he's obviously in first class, and the flight attendant's like, oh, because he's like sitting there like this, okay. And she's like, "What would you like to drink?" And she's very nice.
Sure.
And he's like,
Zoe was her name. She was very sweet.
and I'm like,
very-
he's like, "I don't want anything to drink, but could I please have a bag of ice for my broken hand?"
No, I took a whiskey too.
First, can I have a bag of ice? And he's like, fake crying. And he's like, at his hand here. She's like, "Oh, little boy, what happened to you?" And then she brings him out his thing. And
No, I already had a bag of ice on there because I was traveling with it. And when I took it off, she goes, "Ooh, I saw it when you took it off. It looks really bad. Would you like some more ice?" And I was like, "Yeah, that would be sweet. Thank you very much."
that's not
And she was very
but
nice
still,
the whole trip.
And then he
Unlike Sosnoff.
What there's so much to unpack. But I think we have some photos from the event.
Sure.
would like
You might
to-
see me with a little bit of a lean to the left. That's just because I was still in pain.
If you'd like to look at those, so.
wow, nice,
How was the venue?
nice wall.
Okay, don't be a dick, dude.
Hey, there's San Quentin.
Did his dad show up?
No, we had Quentin House. Mom did.
His
Oh,
mom showed up. Yeah.
see, that's nice. And there's Glenn. Go FX yourself.
Look at Glenn. He's like modeling.
I know.
That's a size medium for anybody who wants one of those
That
shirts.
venue looks cool.
Oh, this Webster Hall.
Yeah.
It was the old Ritz.
Is it in Brooklyn?
No, it's in Manhattan. It's on
Oh,
11th.
I don't know.
These are outside of the hall. This is not.
Gotcha. But it still looks really cool.
Yeah, yeah.
Is that Shark?
No, that's Greg.
No. But
Oh,
man,
my
is he
bad.
gonna be
Sorry.
pissed when we-
That's Greg. He's been a long time customer.
Was Shark there?
No.
Oh.
Shark had a
Hey,
medium.
there you are.
Oh yeah, it's a
You see how I'm
big,
leaning a little bit? See how I'm leaning a little bit with the arm? Yeah.
Okay.
big stage, tons of people, upper and lower deck, really good.
That looks really cool. Look at all those people.
Yeah.
See, he's working injured. This is his flu game.
Oh yeah.
That's right, like Jordan.
Yeah.
Yeah, it's a cool venue. This is where I saw Tina Turner, my first date with my wife.
Okay, this story.
Allegedly.
Allegedly, yeah, this story.
Well, she thinks that it was some other guy,
Right, yeah.
but no.
I'm with her. They usually know who they put out with. I'm just saying. I mean, I know you didn't get any.
Well, then I
so you
saw
don't-
Tina Turner. I didn't drive to New York to see Tina Turner by myself at the Ritz.
I mean, it's
Sure.
okay, girl, if
No,
you did.
no. You were probably with Kenny Rubenstein. He's always been your backup date.
I definitely, I don't think so.
Uh-huh.
It's okay. It's fine.
It's okay. It's all right.
So Bat, how long? What's the prognosis? Like how?
Well, they want to put a
Prognosis
cast
is
on it.
negative.
Well, you don't have to have surgery, do you?
The rabbit died. They want to put a cast on it, but he said, if you want to try this splint, we can do a splint for 3 weeks. You come back and see how it looks, and it'll take a little longer to heal. But this way, I could take it off, and I didn't want to cast.
Yeah, I've had a cast. It's not fun because then you got to buy that thing on Amazon to put over it when you're in the shower, and then it's like a whole thing. So yeah.
They make a lot of them now that you can go in water with, but they're
Oh,
uncomfortable.
that's true. That's true.
Yeah, I just 3 weeks. So 3 weeks, and then
It's a
they'll-
lot of, you're going to,
I know. It's like, can you go into a sauna with a cast on?
oh no. It's a lot
No,
of,
but I take it off. I take it off.
I
and
know.
go-
That's what I'm saying. Is like that's why you could take it off.
By the way, Sosnoff, sauna. Whew, the times are getting booked up. I'm telling you right now. If you want, I can put you down real quick. If you want a little time.
I'm okay.
All right.
Well, Bat, I'm
Yeah,
glad
yeah,
you're
LED
okay.
lights now.
I'm sorry that happened, but what lesson did we
He
learn
didn't learn
from
a
this?
lesson. He didn't learn any lessons.
What lesson did we learn
We
from
learned
this,
that
Anthony?
we learned that we can't jump fences anymore. We're not 16 years old.
No, you're 65
Every
years
person
old.
I tell the story to, they go, "Wait, you tried to hop a fence?"
Right. You're a little old to be John. You're not Tom Cruise, okay?
Like Mission Impossible. I thought I was going over I don't know.
Yeah.
It seemed like a good idea at the time. I will tell you, when I got to the top, I knew I was screwed. I mean, like I was going down. I just didn't know how I was going to go down, but I went down real quick.
Yeah.
Like real quick. Like I don't even remember.
It could have been so much worse. Like
You could have caught it.
What is wrong with you? You were a sociopath. What is wrong with you?
I just had this vision of him like catching a foot in there or something and like dangling down.
Oh, like by the back of his britches?
Something like that. Like
no,
it
he's
could have
thinking
been
like
so
by my
much
foot.
worse.
Like a real good injury.
I mean, Josh had the best idea. He's like, the cemetery has to have cameras everywhere. We should
They said they had cameras, like they had pictures of.
I know. We should just pay them to give us the tape. It's worth way more than it's.
Hey, Torta wants to see the footage. Angry Gina. She's like, I would love to see that footage.
Tell her I'm going to work on it. What's the name of that cemetery again?
Evergreen.
Evergreen. I'm going to work on it.
The back gate.
Oh my goodness gracious. Well, I'm here with a couple of banged up boomers, so it's a magnificent Monday here.
I'm perfect.
Your gout's gonna kick in T-minus 36 hours, homie. So buckle up, Buttercup. Hey, we got a great show for you on this magnificent Monday here at Tasty Live at the top of the 8 o'clock hour. We have an options jive, a little research corner. Kai's coming in to give you his updated outlook on what he expects to happen in the markets for the week. Then at 8:40, it just says options jive. TBD. Thank you.
Yes, that's exactly right.
It just says TBD. I have no other subsequent information, so I'm going to just keep it moving. 9 o'clock, we have a market measures, extreme days and next day possibility. So I guess when the market goes to extreme, what are some of the opportunities that could present themselves the day after? Yes?
Yeah.
Great. That's going to be at 9 o'clock. And then we're taking your calls. Talking with Tom and Tony at around 9:30. If you have questions about the life choices that these grown men are making, we'd love to hear from you. That's going to be at around 9:30, so stay tuned for that. And Liz and Jenny are back together, back on American soil. Stay tuned for the lovely ladies. They will be on at 10 a.m. That is our run of show for today. Do you want...
Here, look.
What are we doing? Is this the reenactment?
Oh my God.
So sick and wrong. I know who you are in production. Get to you. James, that's your name written all over it.
That's pretty funny.
That is great.
The poor little turtle. At least the turtle has a shell to protect him.
That is great.
Yeah. Anyway.
And grass. It went on grass. I'm telling you, it was concrete. It was hot. I don't know what happened. I'm telling you, it was far.
Yeah, it could have been so much worse. Like what if it was your leg and then you couldn't have gotten out and then you got to call the cops and then.
Oh my God.
It could have been so much worse.
Story. The only thing better than
could you imagine like his lovely wife is just sitting in the house enjoying the time, to just relax by yourself. And then she gets a phone call. I was like, ma'am, this is Brooklyn PD.
That would be a lot better.
This is Brooklyn PD.
That would be a lot better for him than if I had got the phone call, come and bail me out. Because that would have been, I would have brought a film crew. I would have
well, Garrett was there. You would have grabbed Garrett.
I would have grabbed Garrett. I would have grabbed Garrett, bring all the cameras we got.
Yeah.
We're going to go bail Tony out. Oh my God.
Don't let him out yet. We got to set up the cameras.
You're damn straight. We're going to do the perp walk. We're going to do everything.
Just like on live PD.
Oh,
hey, do you want your daily dose?
Hit him with the blue lights.
Sure.
I gotta get out of here. Hit me with my theme music. Let's go. Oh my goodness.
Our leading story. Breaking news.
Coming
across the wire. Our leading story. Top story.
I didn't tell you about my Rib Fest.
Breaking news.
We've been talking about you guys for 20 minutes. All right, everybody. Today is a magnificent Monday. It's September the 22nd. Hey, it is officially meteorologically, I can't say the word, spiritually spiritually, mentally. It is fall. It is officially fall. So
Really?
the autumnal equinox
it?
was like on the 21st. So it's like, I'm saying it's officially fall. Like I just consider September fall, but it's like officially fall. So this is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat, are there any earnings?
I mean, AZO, AutoZone, if you're really into a stock that's hard to trade with wide markets, you can go to AutoZone. I'm going to abstain.
Okay. Hey, U.S. stock futures are flat after Friday's record highs as the market has learned to thrive in ambiguity. Now that the Fed has cut rates, investors are kind of shifting gears and to focus on like other things. What should be the focus right now? And like, what do you think the market's going to do? Because like, if the market thrives in ambiguity, so now we got our answer, we got our Fed rate cut. So like, what happens now?
I'm not so sure if ambiguity is the right word.
Okay, well,
I don't
what
think the
word
market
would you
thrives on
use?
ambiguity.
You say that it likes the slop, though. Like you like
Yeah,
the
I think the
choppiness.
market. I think the market's been, kind of riding the wall of worry type thing.
Right. So if you're not classifying that as ambiguity, what would you call it?
I mean,
Well, he doesn't know how to spell ambiguity. Neither do I, by the way. I would look it up to see what the definition was.
I mean, I kind of wrote about this last night. I said that the market's, thriving on just all the noise that's out there.
Sure.
It's this is the market actually. The easiest way to say it, just in old school terms, is the market's riding the wall of worry.
Okay. How do you play that?
Well, at this point, we're at record highs. I mean, if you want to buy them, you could do it with your money. But for me, I think you got to lighten up a little bit.
Okay. Happy at sundown, Rosh Hashanah. This seasonal stock market trading pattern is coming up. The Wall Street adage, sell Rosh Hashanah, buy Yom Kippur, focuses on the market's performance between the two Jewish holidays. What do you have to atone for? What would you like to be sorry for? Go ahead. Shana Tova.
We had this whole discussion last night. No, I
You're not going to atone for anything?
no.
Come
He's
on.
talking to you, Sosnoff.
Come on. Come
I'm
on.
very happy. You know why I'm happy? We're having Bari for lunch today. We haven't had Bari
Yes.
in forever. It's one of my favorite places in the city.
Well, anyway, so it's a 9-day period this year. It starts at sundown today and it ends on the evening of Wednesday, October 1st. It includes 7 trading days. What do you take away from this, your years of experience?
Oh, there's a lot less Jews at work. we used to love it on the trading floor because
But you're not religious.
I know the bad Jews would show up like me. The good Jews would stay home.
You're exactly
Like
exactly
Scott.
right.
The good Jews like Scott would stay home.
Right, yeah.
That meant more money for the rest of us.
Sure,
So
okay.
we're gonna have to share with Scott.
But is there anything to this pattern or seasonality at all? I was just curious.
No, because I always thought it was buy Rosh Hashanah, sell Yom Kippur, and Tony thinks it's sell Rosh Hashanah, buy Yom Kippur.
It's sell Rosh Hashanah, buy Yom Kippur. That's right.
Thank you very much. Again, you could just say again. That's
No,
right
that's
again.
actually, we Googled it last night. We had some fun with it.
Did you? Because of the Wall Street Journal says sell
No,
Rosh.
I don't care because Google AI says it's not.
So, but AI can't be wrong and like hallucinate. Like,
No.
you didn't click through to get a verified source.
Excuse me.
Someone get a rabbi on the phone.
The Wall Street Journal could be wrong. Okay.
Someone get Rabbi Shmuley on the phone. What are
Donald
you?
Trump said the Wall Street Journal's wrong.
What are you doing? What are you doing in bonds and what are you doing in the indices?
Bonds, I bought them last night.
Okay.
I bought bonds and I bought notes
Okay.
last night. I mean, I didn't buy notes. I sold puts in the notes last night. And bonds, we bought them on Friday. Tony and I actually scalped them pretty good at the show on Friday.
Okay.
we did. Yes, we did.
And what was the other question?
What are you doing in the indices? Russell hit its first all-time high in like 4 years.
We're flat the Russell.
Okay.
We're short the S&Ps. I'm short the NASDAQ.
Okay. Hey, in other news news, Chinese savers have $23 trillion on hand and few options beyond stocks. Chinese households are slowly tiptoeing back into equities, driven in part by a stark reality. Nothing else is worth buying. Could this mean, that fortune is going to tip in favor of the Chinese markets? The CSI 300 has surged 25% since April lows.
I have been bullish on China forever.
Well, there's not really anything else for.
I got to tell you though, it's so damn hard. There's only a few stocks.
But did you know that the CSI 300 was up 25% since April?
No, I really couldn't care.
Okay.
I mean, so's our market. I mean,
yes, our market's up 35%.
Look at
Well,
anything.
S&P's only up 15.
For the year.
Yeah.
Since April, it's up 35%.
Okay.
You compare apples to apples.
Sure. Okay.
The U.S. market's up more than the Chinese market if you compare apples to apples. I think the trade is you buy the Chinese market and you sell the U.S. market. The problem is there's no way to effectively do that.
What about FXI?
There's no way, I will repeat, there's no way to effectively do that.
Okay.
I once quoted that in a swap market, and it was so wide, I mean, it wasn't even tradable.
All right. And you doing anything in Baba?
If it wasn't for the spikes in the fence, I'd get over that thing.
Are you?
Oh my God,
okay.
you're still crying about this.
Are you doing anything in Baba, Baidu, PDD?
JD is it.
Oh, just GD. Okay.
Yes, I do. I'm sorry. I do have a Baidu and Baba position on, but mostly, I think mostly my risk in China is really small right now.
Okay.
I mean, I'm obviously a little bit long it, but I just don't even think it's much risk.
Gold held a fifth weekly advance boosted by the Fed's first rate cut of the year, with investors looking to a key inflation print due Friday for more clues about the U.S. central bank's monetary path. Let's talk about gold. Booyah!
Gold's up big today. So is silver. Gold's up 42 and silver's up 77. They were just up. Gold was just up 50 and silver was up $1. I think they're both grossly overbought here.
Okay.
And I wouldn't touch either one. But I don't have a position on currently right now.
What about you, Bat, in your gold miners?
I don't want to talk about it.
Okay.
I'm on drugs. I'm not going to talk about it.
Okay, that's fine.
I mean, GDX was up $3 on Friday, and it looks like it's up another $1.50 this morning. I don't want to talk about it.
Oh, wow. Hey, well, more bad news for Americans battling higher prices. Winter heating bills are about to rise. The cost of staying warm is expected to jump an average of 7.6% to $976 this season. That's a new estimate from the National Energy Assistance Directors Association. Wanted to talk natty gas. And this is not great news.
But I don't think
nat gas is a skosh off of its lows.
I don't think they're talking about nat gas particularly.
Sure, but I wanted to talk about natural gas.
Natural gas is a tick off its lows. Tony's right.
Right.
So
but every time you're using AI to search some dumb stuff, it's making my utility bill go up.
I think this is honestly, I don't understand when they say more bad news for American battling high prices. I mean, crude oil's like a couple ticks off its low, and natural gas is a couple ticks off its low. So I don't know.
Yeah, but have you seen your ComEd bill lately?
Yeah, it's the ripoff.
Yeah, well.
I understand that, but I'm not sure where it's coming from.
Sure.
It's not coming from the physical.
More than 100 gas and electric utility companies have raised their rates or proposing to do so for this year or next year. So
yeah, well, they're just ripping you off, is what they're doing. Well, the costs have gone up for labor and everything else like that, but it's not the physical.
Well, it's also going to get worse once we got rid of all the subsidies for wind and solar, but we're not ready to talk about that. Hey, let's talk about some crypto. Ethereum devs are set a December date for a Fusaka upgrade. If you know what this means, congratulations. Ethereum devs have set a date of December 3rd as the main net activation date for the Fusaka upgrade. Sounds like a Michael Crichton novel, nudging forward the timeline that had been expected to extend into 2026. This is above my pay grade, but we can talk about ETH.
EFHA?
Yes.
They have been really hitting premium pretty good in there. For the first month that stock came out, premium just seemed to go up every single day. But now they've been hitting it, and it's been pretty good to us the last couple of weeks.
Okay.
I mean,
and this is one market we got right, Sosnoff. I mean, on Friday,
we're just short premium in there. What do we do in there on Friday? I don't remember.
Well, no, in Bitcoin, we talked about it seeming like it was a little bit heavy.
Oh, yeah, totally.
It was a little bit heavy. Friday, it had an uptick, put a little egg on our face, and then it sold off really nicely. I mean, Bitcoin's down 2.5%. Ethereum's down almost 6%.
Yeah,
today.
we've been a little more bearish. And we also traded some ETHA at the live show on Friday.
Okay.
And we sold a little delta and we sold a little premium. So it actually worked out nicely.
Grayscale Investments has brought a new twist to crypto investing, rolling out the first multi-token exchange-traded product available in the U.S. The Grayscale CoinDesk Crypto 5 ETF, that is a mouthful, begins trading Friday under GDLC, and the fund bundles together the 5 largest and most liquid digital assets. So in one ETF, you can trade Bitcoin, Ether, XRP, Solana, and Cardano. What are your thoughts?
I mean, if it is it's
GDLC back.
Right. I do not know what the fee structure is in there
Sure.
yet. I mean,
Well,
curious.
they're not running a charity.
I'm curious to know what the fee structure is.
Okay.
If it's less than 1%, which I think it probably will be, but we have to look it up.
Okay.
If the fee structure is reasonable, and this company Grayscale is reasonably competent, because I'm not so confident that they're reasonably competent, because I don't know who they're. In other words, they could be paying off. They could keep the fees low, but then getting a kickback on the bid-ask spread.
Management fees 1.5%, Saz. From what I can look very quickly, do your own.
1.5% is a lot. It's a lot for a fund.
Okay.
And they could be getting a kickback too on the spreads from whatever exchanges they're using to trade this stuff, because they have to use the underlying cash, I'm assuming. I mean, conceptually, I like the idea.
Right.
It's been proposed for a long time, but everybody has been shot down trying to do this. Because we wanted to create a future originally that would do this exact same thing, but we basically got shot down.
Oh.
So, I mean, somehow they got regulatory approval for this ETF, but we tried to create a future just like this.
That's because you didn't try to grease anybody's hands.
Yeah, I didn't write a $100 million check to the.
Are you looking at me?
Nothing. I won't.
You can write me a check for $100 million. I got to tolerate your ass. Hey, in other news, Michael Saylor's crypto imitators are now under pressure as doubts grow about their business model. Who could have called this?
I mean, I've only written 17 stories about this.
Strategy stock has fallen.
Wait till this is what causes a Bitcoin crash and a stock market meltdown. Because Michael Saylor, this is the biggest scam, and all these
How is it a scam if they're being transparent about what they're doing? Like they're telling you this is all we're doing.
Okay, I'm still telling you it's a scam.
Okay, but how is it a scam if they're
it's a legal scam?
Okay.
But I mean, all the idiots like Ryan Cohn and all those guys and the Trump media.
There's just other Bitcoin treasuries. It's not just one other person. But you're right. There's a lot. There's like
10 of them now.
There's 65 companies that have a Bitcoin treasury strategy now. 65.
They're all evil, according to Silo. They're all evil.
Bitcoin treasury strategy is not the same thing as what Michael Saylor's doing.
Sure. Okay.
Bitcoin treasury strategy is fine. Like if you're like Tesla and you want to own some Bitcoin, that's a Bitcoin treasury strategy.
Okay.
I have no issue with that. If Tasty said, you know what, we want to put $1 million of our capital into Bitcoin as a treasury strategy.
We mined our own coin, Tasty Crypto.
I have no issue with that. That's not what these guys are doing.
Okay.
The Michael
It's a leveraged Bitcoin. It's a leveraged Bitcoin investment. I mean, if you want to be buku long Bitcoin, then maybe it's a play. And not for me, but that's what it is. It's just like if you want to be long consumer staples.
That's not the, of course, but that's not what I think is the Ponzi scheme aspect. The Ponzi scheme.
Its strategy is just to accumulate and hold Bitcoin.
Okay.
I mean,
Okay, how much?
horrible,
If
in
you
my
wanted to hold
opinion.
Bitcoin, would you invest in MicroStrategy?
No, I think I don't. But it's not for me to
Okay,
decide.
but let me
what-
explain why I think it's a Ponzi scheme and a legalized scam. Because
But if Bitcoin goes to 1 million, it's a tremendous idea.
okay, can I tell you why?
Just like the steam engine.
Can I tell you why it's not a tremendous idea? And
Sure.
don't defend these criminals. I will explain.
Not the steam engine.
If
Well, they're
Bitcoin
not criminals because
if
they
Bitcoin goes to 1 million, you would have been far better off just buying Bitcoin. It's not a leverage play in Bitcoin. You're just paying 50% over the price of Bitcoin to buy Bitcoin without a conversion rate and without an interest being paid on the money you're loaning these guys.
MicroStrategy still has like some AI software and some mobile software that they do. I
Okay,
don't know.
let's take this back. So they have a book value of $1. I'm sorry. Now you got it.
I'm not defending it. I'm
Okay.
just trying to say
All
what
these
it
companies do the exact same thing. They borrow money from using convertible bonds from
at zero interest rate,
from investors that get zero on their convertible bonds. There's no such thing as a convertible bond that pays zero,
Sure.
except in this world. And they don't give you a conversion rate for the future, so you don't know what your convertible bond converts into stock. And
It's called a blind
Bitcoin falls,
box.
MicroStrategies will probably fall
and
more.
they are buying the value of this company is, well, for most of the time was almost 2 times the price of Bitcoin.
Yes.
Now it's gone down, so now it's like 1.65 the price of Bitcoin. So you're paying 1 5/8 the price of Bitcoin to own Bitcoin. All right, without a conversion rate and without any interest being paid on your debt. It is an absolute Ponzi scheme.
All right, I gotta move on. I
It
gotta
only
keep it moving.
works.
I gotta keep it moving.
It only works, Bernie Madoff, if it continues to go higher.
Panic, confusion, and anger reigned as workers on H-1B visas from India and China were forced to abandon travel plans and rush back to the U.S. after President Trump imposed new visa fees. And I still, this morning, I don't have all of the answers because the answers kept changing. So they were saying that it was going to be $100,000 for each renewal. Now they're saying it's a one-time $100,000 fees, and it's just for new H-1B visas, but again, the information keeps changing.
I watched
tech companies and banks sent urgent memos to employees, advising them to return as major companies scramble to figure out what this means for workers, also doctors and medical staff.
I wrote about this last night.
Yes.
The most disgusting thing I've ever seen. It's one of the actual low points in this entire Trump era. This is one of the absolute low points. Every single American tech company, every startup, everybody that's ever built anything.
Sure.
And not even to mention, I listened to Howard Lutnick try to explain this. He is, not only is he an idiot, he's a complete arrogant douchebag. And listening to him try to explain this, I have 2 things to say about this. Because first, I'm on the board of a university here for their business school. And enrollments are down by 65% because there's no foreign kids applying for grad school right now.
Sure, it's hard.
And they're scrambling to stay up. In other words, they can't, there's not enough American kids that want to fill the spots.
Sure.
So it's not even a question anymore.
Do you know that for sure?
We had a board meeting last week. I was on the board meeting last week.
And so they get it. They're always oversubscribed, I would assume.
They're always
right?
oversubscribed. They can't fill their PhD.
With the algorithm they're using by using too many. Listen, I'm not defending anything. I'm trying to play the other side here for a minute.
Play the other side.
Without. So they've got 1,000 foreign, and they have 1,000. Just throwing out a number, and they have 1,000 U.S. and they take 60% foreign and 40% U.S. or 50-50. Well, they'll just have to do 75-25 U.S. Right? I mean, the applicants are there.
They're not, Tony. Unfortunately, they're not. So they're under. So they're going into next semester with 30% open enrollment, meaning they haven't
Right,
filled
sure.
30%. This is right in.
Well, because they also changed some of the regulations for how you can apply for certain loans or grants. So that's also part of it.
They're 30%, and their PhD program is down by 60%.
Wow.
Okay, now that's just one school. I've heard this we get emails from professors at grad schools all over right now. I mean, and it's scary because Chinese, Indian students made up a huge percentage of our grad schools. And that's just one thing. The other problem with it is when you just think about, just think about people that work here. Just think about people that work, that work all over. I'm not going to mention names.
Sure.
But no company is going to be able to afford $100,000 check on top of everything else.
Right, for one worker.
Of course.
Right, yeah.
And when you think about, like, let's be fair. We built Thinkorswim with a team that was not in America, but it was here.
Yeah.
We built Tasty, much of it the same way, with a lot of people that have H-1B visas. Okay, with the limiting, this is the world. We have been draining the top talent from around the world for the last 50 years.
Right.
Okay, this is basically saying F you to the best talent around the world. And this isn't going to hurt. This is not going to hurt China. This is not going to hurt India. This is going to hurt us. This is going to hurt companies like Tasty. This is going to hurt every tech company in the world. I cannot believe that the CEOs of all these tech firms in America and all these big firms that need engineering talent, AI talent, that need data scientists and everything else aren't like up in arms. I just can't believe they're being bought out. It just blows my mind. It's embarrassing that nobody says anything. This is true.
Well, maybe like our friend Greg, who's an engineer from Florida, who's at the bottom of his list. He might be able to get a job now. I mean, like,
Hey, I gotta keep it
Probably
moving.
not, but nice try.
Oracle is eyeing a $20 billion AI cloud computing deal with Meta. Both stocks had pretty decent, time last week, but now Oracle is in talks with Meta for a multi-year cloud computing deal worth $20 billion, underscoring the social media giant's drive to secure faster access to computing power. What are you doing in Meta and Oracle?
Meta, we're a tiny bit short, and
unchanged Meta,
and Oracle, we're just short premium.
Okay.
It's one of the few stocks right now that has
71 IV rank. It's been actually going higher.
Oh, wow.
Yeah, this was a stock though that, like, Tony and I tried to fill an order on Friday in there on our live show. We couldn't get filled.
The markets are too wide?
Yeah, they sucked.
Oh, interesting.
I mean, it was one of the first. I know it was just like an iron condor because it's expensive stock. We just were trying to doing something neutral. We couldn't get filled.
I'm skipping a story here, John. Elon Musk's XAI is raising $10 billion at a $200 billion valuation from investors in a round, like I said, that raised $10 billion, values the company at $200 billion. So what a time to be alive. What are you doing in Tesla? You can't trade SpaceX or XAI, but you can trade Tesla.
We don't have a position.
Tesla IV rank of 26, going up a little bit here over the last couple of days, is trading 431, which is actually up $6 a bucker when the market's a little softer.
PayPal and Google are planning to collaborate on agentic commerce. That's a form of AI that requires little or no human supervision to perform tasks such as shopping and checkout. That partnership quickly followed MasterCard's announcement with a partnership with Stripe. Are you doing anything in Google?
No, but we are in. Well, first of all, we're long. A little bit long PayPal.
Okay, you're a little bit long PayPal. Oh, that's nice.
And in Google, we're a little bit short.
Okay.
Well, that might be nice for you, but PayPal is down small, about 25 cents, and Google is the same, down maybe a buck.
Yeah.
The iPhone went on sale globally over the weekend, and sales numbers look to be strong for Apple. But OpenAI is tapping an Apple supplier to make its own AI device, and some insiders are saying they're even poaching Apple talent. OpenAI has signed a deal with Apple device assembler Luxshare to make a consumer device that would be obviously AI based. That's bad news for Apple because OpenAI has a lot of money. But they're taking their shot. They're going after Apple. They're hiring some other people using their supplier. What are you doing in Apple?
Up $2, a little bit of a bucker here with the market a little bit lower this morning.
I don't think we have a position. Let me see. We don't have a position.
What are your thoughts that now Lachlan Murdoch, Michael Dell, and Larry Ellison are now going to be involved in the TikTok deal? Yeah, this is real.
I can't wait to hear this.
Yeah, this is real.
What are my thoughts?
Yeah, because you love TikTok.
I love TikTok. Hate those three people.
Okay.
I mean, it's
what if all of our social media is just owned by oligarchs, man?
It's unfortunate that that's how this ended up with. It's even worse than this because the other people that are already in, keeping a small piece, you know, they're still in too.
Sure.
And so, yeah, this is. I would trust the Chinese government more than I trust those three people.
Okay. Okay. You're gonna get disappeared to a black site, but that's fine.
I'm not kidding. I would trust the Chinese version of the CIA more than those three guys, plus the other guys that own TikTok. Even though I love TikTok.
All right. Hey, NVIDIA wants in on the robo-taxi race, and they are exploring a $500 million investment in a company called Wave Technologies, which is a London-based AI startup. Bat, what's NVIDIA doing this morning?
So I don't know if you got an NVIDIA position. NVDA is trading 157 or so, down around a dollar.
Ooh, gotta buy those dips in NVIDIA.
You're backwards. 175.
All right. He's
was I
on drugs.
dyslexic on this?
What?
Was I dyslexic on this?
Well, you
correct.
said 157.
Yeah.
Yeah.
Around a buck.
But can I say something about this robo-taxi thing?
Yeah, what's up?
So when we were traders on the floor, there was a time when we knew that we were going to be gone because everything was going electronic.
Right, yeah.
So you were sitting there going, you know what? Like, when are they going to officially shut this place down?
Sure.
If you're a cab driver right now, it doesn't look good.
Well, the cab drivers, those are obsolete. If you're an Uber or Lyft driver, like there's not even, like when's the last time you took a cab? Like you take Ubers everywhere.
I haven't taken a cab in a while. You mostly take Ubers.
That's what I'm saying. But I'm saying in your own analogy, cab drivers are already.
You know what's crazy in New York?
Yes.
I was standing on a corner trying to get a cab because I had a meeting. And I couldn't get a cab for 5 minutes. I couldn't even find a single cab. I just went on my Uber app. There was a guy in front of me in 30 seconds.
Sure. Well, to be fair, if you're a cabbie in Midtown, you're going to stop for a nice leggy lady in front of the Saks instead of, whatever.
And not for one in transition.
Right, yeah. Hey, Netflix is now rumored to want Warner Brothers. It appears there may be some competition to acquire the legendary Hollywood studio. Last week, it was reported that David Ellison, son of Larry Ellison, wanted Paramount, which he now owns as Paramount Skydance, to buy Warner Brothers Discovery. But now Netflix wants to throw their hat in the ring, and they could be purchasing Warner Brothers. What is Netflix stock doing this morning?
Sounds off Netflix. You been doing any chilling?
No.
Netflix, 12.21, down around $5.
Oh, okay.
Market's a little weaker, although even the S&P is only down 18.
Finally today, what a funny, I love pop culture and I love the city of Chicago. The Wiener Circle tweeted out, if Caleb throws 4 TDs on Sunday, we will give away free hot dogs on Tuesday. And by gum, Caleb Williams threw 4 touchdowns yesterday as the Bears were triumphant in beating the Cowboys. So, Tom, you want to the Wiener Circle tomorrow?
I didn't even know about this.
That's why I'm telling you.
This is great.
Look, it got 1.4 million views.
Bears.
The Bears.
I told you we're going to be 15. I think we're going to be 15-2.
Okay, that's not how that works, but okay.
Caleb.
Finally today for my viral video.
Yesterday.
For my viral video.
Oh my God. He finally saw the open receiver. The open receiver was doing this for about 3 minutes.
Finally today for my viral video of the day. I don't want to spoil the surprise, but this dog owner is SMRT when it comes to getting your dog to do a really difficult thing. Watch this. It's a pill, so it's medicine. So he tricks his lab into taking medicine. Gotcha.
That's
great.
You see
Yeah,
his
it's great.
face when he was done. He gave a little snarl.
I know. It's also how we get Tom to take his medicine. Hey, Bat, what's coming up next?
When we don't have any, like, applesauce to crush it up in, yes, that's how we do it. We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. We'll be back in 90 seconds. Confirm and send next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, with confirm and send. But before we do, can we please take a quick look at the market? Even the S&Ps, they look like they're down around 19 handles right now, sounding off. Basically a tight market overnight, or a tight range overnight of about 25 to 30 handles here on the E-mini S&Ps. The expected move for today is closer to 17 or 18 handles. For the week, you're looking at 66 handles on the overall market. We'll see what happens there. NASDAQ down 67. I'm so used to saying up every day. Russell down 6, and the Dow down 200. All of them basically off of all-time highs. So taking a little bit of a breather here on Rosh Hashanah. Volatility up 22 cents off of its lows, and bonds completely unchanged, 116.11. The big movers in the clubhouse, cryptocurrencies, Bitcoin trading 113.5. You can see here how it's broken out of that tight range it's had, selling off back to numbers that we haven't seen since earlier in September. Ethereum is down 2 or 3 times as much as that, down around $250, about 5.5% on a percentage basis. Oil down 62 cents. It too has been oscillating down around here up to around 64. It's 61.78. Gold, that's your big mover to the upside. New highs, up almost $50 to to 37.55, another 1.25% move. Silver also up almost 2%. That's 84 cents. Big move in silver for new highs. Net gas down small, trading just under 320, 318 and change. That's all I got. Signing off. AZO for earnings. It's not too much of a trading vehicle for us.
Yeah, the gold is new highs, but I don't think silver's not ever close to new highs.
Silver's not close to new highs?
I mean, recently, yes, but not historical new highs. Gold is historical.
I mean, all I'm looking at here is
but I've traded silver in the 60 handle before.
Understood. I'm not going back to grandpa times. I'm just going back to this year. It's a new high.
No.
I'm not, I mean, listen, I remember when you could run, a 30-yard dash. I mean, you can't anymore, but you could have a new fast time.
You missed me in the airport the other day then, because I had to do like about a half a mile dash. It was long.
I remember you told me.
All right, let's take a look and see what we got here this morning. Confirm and send, John. Perfect. Monday, September 22nd. How important is diversification, this person asks? Is it possible to be successful while only trading a few products?
Sure. I mean, people have done it. It's not my preferred way. I think you're missing out on a lot of other opportunities. And if it's working for you and you're only trading a few products and you feel really confident in those, go for it. I think you should broaden yourself out. You're leaving yourself a little bit pigeonholed, but I have no problem with it. And if it's working, like I said, never stop. Now, if it's not working, maybe then you got to, broaden your horizons a little bit.
I mean, we both grew up in this business only trading one product. So yeah, and I've seen some people be very successful only trading one product, and sometimes based on certain liquidity issues or other things, people can only trade a few products. I think it's more important than I think it's very important to be able to trade a non-correlated portfolio with lots of diversification to strategy, to products, to everything else. I don't think you should ever limit yourself. But could you? Sure, it's possible.
Sure.
Yeah, absolutely. I mean, we did it. I supported myself for 20 years, just trading basically one product.
Mm-hmm.
Let's go next slide. Do you think it's best to be delta neutral or to skew some long delta because of positive drift?
I mean, here. No, it's been best to be skewed long because we're at all-time highs. I mean, I don't want to sound like I'm not grateful for the bull market that we've had in the past. Is it going to continue? That's nobody knows. So I guess I'd prefer, at this point of view, to be a little bit more delta neutral, or maybe even skewed a little delta short. That's just me. Now you have to do what you want to do. It's worked to be delta long. It's worked to buy every dip. I don't know what's going to continue, but keep that in the back of your mind.
First of all, it's almost impossible to always be delta neutral. We're very opinionated and we get very directional, but on the show here, we talk about being delta neutral because it's the best. You don't want to hear our market opinions. You want to hear us talk about things that you want to hear us give takeaways and, strategic ideas, optimizing the mechanics, all the stuff that we do really well here on Tasty. That's what you want to hear. You don't care about if I'm bullish on a stock or Tony's bearish on the same stock, or I'm bullish on an index or he's bearish on the index. Like, who cares? That's just chatter everybody else in financial media can do. So we talk about delta neutral a lot because we don't want to make it into a directional play. We want to make it more into a strategic play. But I agree with Tony. I mean, just because the market's record high is obviously positive drift. Yeah. But we're totally fine with having some market direction, long or short. But sometimes it's really good to be delta neutral too. I have plenty of positions on. Half my portfolio is delta neutral.
Sure, sure.
Let's go next slide. Under what circumstances would it make sense to open a position with a covered call versus a short put?
A position with a covered call versus short put. If you want to, here, let's assume that you use the same short strikes. So you're basically doing an in the money put and an out of the money call with long stock. So if you're buying stock, selling an out of the money call versus selling an in the money put, same strike, it's the same. And I would kind of argue that maybe you should go with the short put, not buy the stock, sell the covered call. For the only factor being if the stock pays a dividend, because it's going to use a lot more buying power buying the stock, selling the short call than it would the short put. Now, if you're just doing a put that's out of the money, two different animals, you have a higher probability of success on the short put versus the covered call. You can make more money on the covered call. So it really depends on how bullish you are on the stock. I would prefer, and I do typically, a short put that's out of the money and not the covered call. Again, personal preference. A lot of personal preference questions here, so I don't know if you're okay with them. Usually you tell us what our preference is.
They are synthetically, although they are synthetically the same thing. For me, it depends a lot on a couple of factors. Obviously, I prefer the short put to the covered call just because it requires less capital. 20% versus 100% or 50%, whatever you want to borrow for the stock. But I prefer the short put because it has a higher probability of profit and it requires less capital. But sometimes I will use a covered call when the stock is cheap and I don't feel like the liquidity's there, meaning the liquidity options just isn't interesting to me, so I'll do a covered call. And sometimes I will do a covered call because I have the available capital and the covered call will give me a little bit more upside. So that's really pretty much the reason. Covered call, liquidity, a little more upside. Short put, much more capital efficient, higher probability of profit. Let's go next slide.
Very good.
When calculating ROI, return on investment, do you use the total premium collected as a percentage of buying power, or do you use 50% of the premium or do you use 50% of the premium collected? What the hell did I just get filled on? Oh,
Reddit, you bought back some stock, it looks like.
I had a pre-market bid in at 256.
256.09 or
256.09. Wow, that's good. Okay.
That puts Reddit down around $8.
$8, yeah.
Yeah.
Good. No complaints there. So when calculating return on investments, use the total premium initially collected as a percentage of buying power, or to use 50% of the premium collected, since that is when you close winners. Tony?
Now, if I'm looking at return on capital, which I don't do a lot of, but let's just say I'm going to use my buying power versus whatever my profit is. So I'm gonna do the straight out, no 50% of anything else. I'm just gonna use my buying power versus whatever I made.
When you calculate your return on investment, you use the buying power. So do you use the premium initially collected as a percentage of buying power? Yes. You don't use 50% of the premium collected, right, since that's what you close. You use the premium collected as a percentage of buying power. Yep, exactly.
Perfect.
Let's go to the next slide. What is the minimum account size needed to trade options as a full-time job replacement?
Oh, man. I don't have this. I don't have the. I wish there was a formula I could use to do this for somebody. But I will say this: whatever the number you think it is, add something to it, because when you have to make money when you're going to this as a full-time replacement, it takes a little bit of an adjustment. A lot of people have a very hard time not having a paycheck, or it's the first time they haven't had a paycheck. Many years, decades, I never had a paycheck. It was something I was used to, that pressure to perform. A lot of people can't do that. So whatever you think it is, put a little bit more. 6 months of expenses plus your trading account, that would be like a broad-based number, Thomas.
I mean, we get this question so much over the years. I would say if you want to trade full-time job replacement, you're probably going to need portfolio margin. So 150 to 250, 175 to 250 would be the first place I would go. You could probably give it a shot with 100,000, much less than that. Like Tony said, you're going to need some money to live on, some other things, much less than that.
So how much reserve to live on? How much of your expenses would you say? 6 months? That's what I can.
Yeah, you definitely. 6 months. Yeah, for sure.
So 6 months plus your trading account.
Yeah, going back to when we all kind of started in this business, we didn't need that much because
we were rats.
Well, one, we were rats, but two, we also had unlimited leverage intraday.
We did. So it's a very, very small account. I mean, listen, I started with $5,000. You could act like.
But unlimited leverage intraday makes a big difference.
Sure.
That does not exist today. So
that is correct. That is correct.
Let's go to the next slide. So this is the last one. This person writes, I have a question that I would love your help with. My account is 500K. My current buying power usage is about 20%. I feel like this is too low, but I feel like it would be pushing it if I do more than I'm doing now. I'm still learning to scale. Any advice? Do you think this is too low or appropriate for the current conditions?
Pushing it. No, I think you're there. I mean, in this market, for premium selling, 20 to 25%, I think is that's where I am. I mean, I don't know about everybody else, but it's where I am. It's hard to find high probability, expensive stocks, premium right now. Easy to find a lot of expensive stocks, but premium wise, I think you're right. And it changes quickly. So don't worry, you'll have plenty of opportunity.
I just looked at my own stuff, and my buying power usage is really low right now. Mm-hmm. I'm like in the same range. I knew it's low. Usually I'm in the 40 to 50 range buying power. Sometimes I get as low as like low 30s, high 20s, but I'm actually below that right now. Mm-hmm. So I completely feel your concern. I think a lot of us are in that same boat. I mean,
you also have a lot more directional positions too.
Well, that's because I'm just bored. I'm trying to do some stuff. But these are the tough times right now when you have vol really low, and you don't lose a lot, you don't make a lot if you're trading delta neutral. If you put some directional stuff on, obviously you have a little bit more risk. But these are the times that it is very difficult to actually be disciplined, because it's easy to lose your discipline here. I mean, I'm going to go with Tony on this one. I'm okay with you where you are. I mean, yeah. I know you're only using 100K of 500K and you feel like you're way under invested. You're going to have opportunity that's going to be in your face very soon. Sure. That's just the way this stuff works. When you least expect it.
Very good, sir. You know what I got to expect? I got to expect to take a quick little break here because we got an action jive next. We're back in 90 seconds. Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive.
Tomas, we are back, my friend. That's right. We've got an option jive with my man Kai in the house. Talk to us, Kai.
How are we doing, guys?
Hey, Kai.
Hey. You ready for the some interesting stuff?
Ready. Ready as I'll ever be.
Ready. Beautiful. So what happened last week? Some important things. The first one, definitely the Wednesday's Fed meeting. Cut 25 basis points. But the interesting things after that, the 3 trading sessions from Wednesday afternoon to Friday, the yields actually rise. So bond price drops, the U.S. dollars increase, all the foreign currencies against dollars drop, which everything goes against your position, right? Because you're long bonds and you're long yen or short dollar.
Well, we just bought bonds right here, and the yen actually has gone our way. So the yen's actually higher right now, and bonds are lower. So we just bought them last night. So this has actually been, this rate cut was fine for us. Didn't really impact anything.
I mean, it was a known, right?
Yeah.
Do you think it's because of all priced in before the
of course,
decision?
of course.
Okay. Yeah. So the second interesting thing is the Russell hit the new all-time high again since the November last year, and all four indices hit the new record highs simultaneously on Friday.
Yeah, we saw that. We were not extremely happy about that, being short 2 of the 4, but it is what it is.
Okay. And the last one is definitely the TikTok deal, the Oracle. Yep, this is from last week. Next week or this coming week, I know you're not interested in all these.
Hold on, so I got to ask you a question. Now that TikTok is going to be like, kind of taken over by those people, like Tesla was, kind of, will you no longer be using TikTok if that happens?
No, I'm still going to use TikTok because...
Oh, so in the privacy of your own kind of little private Idaho, you can use those products, but you can't drive a Tesla?
That's exactly correct. Because it's still...
Got it.
That's a Chinese app. Thank you for your help.
All right, I just want to make sure. You hated the people that are going to be running it, so I just thought...
No. There's a difference. I like the people that run TikTok. I don't like the people that own TikTok. There's a big difference. People that own TikTok, I can't stand. Hey, listen, I like the Bears. I'm a Bear fan. I like the people that run the Bears. I don't like the people that own the Bears.
So you're still a Bear fan. So it's not the owner, it's the people that run it.
In the case of TikTok, yes. In the case of Tesla, it's the same owner who also runs it.
Got it. Okay.
Now,
all right. I'll keep.
If you'd like more clarification in the future, I'd be happy to give that to you, Snarkosaurus, with a broken wrist.
Sorry, guys. Sorry, guys. I was short on time.
Don't make me break that other wrist of yours. I will. I will come there and I will smash that other wrist. I will Kathy Bates you, and it'll be ugly.
Soon it's going to be an American company.
We'll see.
So, what's coming up this week? Some economic events, PCE, durable goods, which you don't care, Thursday, Friday. And what is the last one? Oh, and also we still have some interesting earnings this week. MU, Micron, and Costco, Tuesday and Thursday. I think you probably could trade these two, right?
We have positions on in them both. I mean...
Yeah, because it moved a lot for MU in the past.
I mean... I'm a little long Costco. I'm a little short Micron right now, but I mean that has nothing to do with what I'll have on, when their earnings come out.
Sure. Okay, so talking about the weekly move, all four indices went up for sure, all in green. Can we go to the next slide? 1.2% for S&P and Nasdaq, leading the other indices 2.2%. Where everything is in green. So next slide, if we're talking about weekly expect move, it was slightly outside of the expect move, 1.0% at the beginning of last week, and the expect moved almost the same, 69 versus 70. So it's 1.1%. Nothing changed. I think the main reasons it was VIX was slightly higher, 15.5. It's still below the average and mean.
Okay.
Okay. Let's see the IVR across different assets last week. Most of the assets didn't change or drop a little bit. The only thing we saw increase was the euro or the currencies. And the currencies imply volatility increased. The rest of the assets didn't even move.
Yeah, taking a look here, you're 100% correct. It was business as usual, right? I mean, that's really what it shows here on implied volatility.
The scariest thing on this chart is just there's no vol anywhere. I mean, the euro doesn't count, and net guess seems like it. I know 38 seems high relative to everything else, but for net gas, that's really low.
Yeah. So overall, last week was a quiet week, implied volatility wise.
Yeah.
Price, everything went up.
Yep.
So next one, some interesting observation from last week. Definitely Russell hit the new high the first time since November 2024. And next slide, all four indices, we saw that. We go to next slide. So all four indices, we saw the new high, the record area since November 2021. That was the last time we saw it. And that top only lasts for 2 months until the January 2022.
Yeah, do you remember what happened right after that top?
Yeah, I think
we went down for the next year straight.
Yeah, 2022. Yeah, for sure.
Yep.
But that was coincident with the interest rate change, right?
I don't.
Don't try to bring facts into this, okay?
Okay.
I don't remember the exact interest rates didn't change that much, I don't think, but whatever.
Selective memory by Mr. Sosnoff right now. It says, I'm gonna tell you something, Sos. You keep this up, bad things are gonna happen to you.
Aside from these, I didn't put in the slide is the gold and silver reach new highs again.
Yeah, I'm glad you didn't put that in there because I'm short GDX and I didn't want to have to talk about it again. So thank you. You're a good man. You're a good man.
Nothing new for gold.
You're a good man.
Next slide is the interest rate, right? So the interest rate rises after the Fed meeting. So 10-year Treasury yield rise to 4.13 the end of Friday. Right now, slightly lower.
Yeah, people would wonder how is this possible? But that's what happens when everything's priced in advance.
But I don't think the bond price is that high yet. It's a trading range for a while.
Yeah, I'm just saying. I mean, you wouldn't expect after the Fed cuts rates that bonds yields would go straight up.
Okay. Yeah. All right. Next one is the top 5 and the bottom 5 performers in S&P 500. Mostly we see a large upside move. Intel up 20 for sure. The investment from NVIDIA, CRWD 13, AMAT 11, and CAT PLTR is roughly 7 to 8%. Downside, not too much move. Humana, 5% AVGO, 5% is just some little correction from the market top. Land, we had earnings on Thursday. UNH, 3% is nothing for UNH.
That's true.
Mm-hmm. Yeah, so we don't have a lot of earnings, but I still put one slide. Some interesting one, probably worth trading. MU on Tuesday. Next slide. And Costco on Thursday, definitely two biggest one. AutoZone, CarMax, I don't think you want to trade them because of liquidity, but some people probably might be interested in these.
Yeah, totally agree with you. Even Costco sometimes is a hard fill.
Yeah, it's $1,000 stock, right? Other than spreads, few people can trade naked positions.
And MU really seems to have a mind of its own when it comes to earnings too. From my experience, hasn't been very, very good to Tony.
Oh, is it?
I don't think MU's been good to any traders.
Oh, I believe MU is one of the top 5 best performers this year, or very close. I just read it yesterday, but I don't remember.
You could be right. It was an $84 stock in the beginning of the year. Don't quote me on the exact price there. It's 160 and change right now. So
I remember the top one is Seagate, but some other hardware devices companies are all in the top 5.
Very good, sir. Good job out of you, Kai. Even the S&P is down 16 and change. We've had a pretty tight range here of about 5 handles top to bottom. We'll see what's going to go with the opening bell immediately following these messages. We'll be back in 90 seconds to Tasty Live. Thanks, Kai.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Wolf! The
first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
If you had to swap jobs with somebody else in this office, who would you pick and why?
Oh, if I had to swap jobs, I kind of like the idea. I might go for Tori's job because I really want to be the one responsible for ordering lunch. I would love that responsibility.
Maybe somebody on the other side, on the brokerage side. I'd probably swap jobs. You know, I'd probably swap jobs with Clink. Clink has a lot of cool looking tools that he looks at day to day, a lot of that risk management stuff. It's kind of interesting to me. I'd probably be honest.
Oh, I got to go, Scott. I mean, he's only here a couple months. He goes back to Arizona, plays some golf, Tokyo. I mean, that's a great gig. Why? How do I get that one?
Oh, I think Ryan Sullivan's got a great job, man behind the camera. He does a lot of cool stuff all around the office, from videography to written content. So he's the man.
Ryan, would you want Glenn's job?
Absolutely.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live at the opening bell. Imminent, about a minute and a half. Even the S&P is right where they were almost the last time I quoted them, down 16 and change. NASDAQ down 47, Russell down 7, and the Dow down 195. Volatility up by 15 cents off its highs of 18.15, just off its lows of 17.70. It is green for the first time in what seems like an eternity, ever so slightly. Bonds are up 1 tick. Notes are up 3 ticks. Bitcoin's your big mover to the downside, down almost 2%, 113.8. But Ethereum down even more, down 5.5%, down 240 and change. Oil continuing a little bit of softness here over the last 4 days, down 71 cents as we go into the opening here in about 30 seconds. Gold up 50. That's your big move to the upside. Gold has had a little bit of a breather the last couple of days. Big run higher the last 2 days. Gold up 50 right now. Silver up 78, an equally big move to the upside. Sad enough, I'll wait for the market to open before we see everything else. What do you think here? Even the S&P's expected move, Kai was looking at around 70 handles. I'll go with that, around 70 handles for the week, a little bit less, maybe at around 65. 0-day trade today?
No, but I do like potentially selling, not right this second, but later today. I think I'm going to short gold and buy silver. Kind of think that spread got a little bit out of whack today.
We did well with that on Friday at the live event that we did.
I think I'm
going to
do the same thing today. I still like the bonds here. I like the bonds. I like the notes. We bought them.
You like buying bonds, yes?
Mm-hmm. Like buying bonds, buying notes. Mm-hmm. We're still pretty short the market. Let me see where they open. Reddit. Oof. Scoopy.
RDDT, Reddit, 257 and change. Right, 257 and change. I don't think it's open yet, but yes.
Yeah. Apple up. Apple was up like pretty big on Friday. Like I want to say 7.5 points. It's up 3 this morning.
Correct. You are correct.
That's a big arse move.
Some of the other movers to the upside: Tesla up 6 and change to 430. Baidu up 4 and change to just under $140. Apple, you just mentioned, up $4. Meta up 2 and change. Uber up $1.70. GDX up another $1.40 after being up $3.50 on Friday. To the downside, you've got Coin down 11, MSTR down 10, Crowd down 10, Reddit down 7 to 257.5. Good scoopy in the pre-market by you. CRCL down $6. What else? OKLO, which was up big on Friday, down $5 today. That's a 4% move to the downside. He's down 13. They're about as high as I've seen him, except for last night when they were down around 8. When we did the show together, Sadov, it was so nice to join you on Sunday. I know you were concerned about my wrist and you wanted to see how I was doing, so you wanted proof of life. It did interrupt my wife's sponge bath that she was giving me. We had to do it a little bit earlier in the day so that I could. Your wife gives you a sponge bath, right, Tom, whenever you're injured?
Nothing makes me want to throw up in my mouth more than me thinking of your wife giving you a sponge bath. I could literally, it's just making me sick.
You can taste it? You can taste it a little bit?
No, it's making me, I think it's making me a little nauseous. I gotta tell you. I didn't think you could do that to me. I think that just made me nauseous. That poor woman.
Well, we were able to get done with the sponge bath early enough. Had a fun time joining you on Sunday night. We did see a little red for the first time, south enough. Sell Rosh Hashanah, 75-25 so far on my Twitter feed. Sell Rosh Hashanah, buy Yom Kippur. But we'll see. Day's not over.
I'm sorry. We're going to have to go the other way on that. All right. Let us talk about a few other things here. Trying to decide where I want to go with this little mess this morning. I thought they'd be a little uglier.
Yes. I did too.
I have started to sell a little Apple here, just a tiny little bit. I think it's time to get shorted, but it's still.
So how will you get short Apple? IV rank of 15.
I'll probably sell some calls. Just nibbling.
Even though the IV rank is low.
Yeah, just because I just want to get short. It's just a directional play. Looking at the rest.
Buy a debit spread if you stay mechanical.
Looking at everything else on my screen to see if there's anything else that probably not that.
I mean, this is a very small move in the equity market. The Dow and the Russell.
Oh, yeah.
They're all down, but they're all the Dow and the Russell, the two weakest. Nasdaq and even the S&Ps, I guess, the two strongest. Volatility only up 10 cents to 1780. Small move here on the first downtick day.
Yeah,
in the market.
I'm just looking to see what do we got here today. Problem children. Ooh, EHTA. Man, are they killing Ethereum today?
Yes, I've mentioned it 5 times. It's down 5% more, 5.5%.
I'm gonna have to roll down some calls, sir.
Yes, sir, Senator.
Was not expecting that this morning.
You really don't listen to me when I speak. You know what? You keep acting like this, and I'm gonna have to put you out in the farm, as my father would say, like we would do with our dogs.
Well,
you have to go to the farm.
Let's see, what else do we get? I'm not impressed with my performance today.
I'm not impressed with you. I was impressed on Friday. I'll give you that. Although you had me pushing the buttons for you and actually telling you what to do, you sit there and act like you did it, which is kind of cool for you, I guess. You get to live vicariously through me for a small moment in time. And now, left on your own, you sell some bond puts and you roll down some calls in the ETHA. I mean, oof! Wow, you're an options godfather or whatever they call you. What did Bloomberg call you? I don't know because I was on the stage, but I didn't see.
You're awfully jealous. It's awfully jealous. I'm sorry. Sorry you feel that way.
Jealousy is an ugly.
Try to keep your emotions
intact. Yes, I get it. I get it. It's an ugly emotion. I agree with you.
I got to find some stuff to do here, sir.
How about that 0-day action? Get yourself some.
A little.
You want to wait a little bit, see the move, do it around 9 o'clock? We can do that.
I don't really want to. I just want to. I saw the new Lucid is running commercials with who's the actor that played Bob Dylan in the thing? Timothy Chalamet.
Bob Dylan in the thing?
Yeah, Timothy Chalamet. Did you see those commercials yet?
I have. Yes, they're well made. They're well made. Unlike the Lucid, they're well made. Yes.
They're running commercials for their SUV.
Yeah, it's not helping Lucid after a 10-for-1 split here. It's trading at around just under 21, down 17 cents.
Well, it's better than the 16 it was at last week.
Yeah, this is true.
Yeah,
earnings are coming November 6th, by the way.
Which one?
Earnings are coming November 6th for Lucid. I'm just letting you know.
I don't think it'll change my life. All right, I'm good,
no,
man.
I don't change your life either.
I don't think I have anything to do right here.
Okay, then listen, I'll take a quick 90-second break because I know you want to get to this one, Sadnov. We had a question this morning on covered calls and puts, one versus the other. We're actually going to take a look at that, Sadnov, because we didn't like your answer from earlier this morning, so I had the research team do something about that. We'll be back in 90 seconds. We're going to teach Tom about covered calls. This is Tasty Live.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
It's option.
Jive. Option
Tomas,
jive.
we're back.
It's option jive.
This is when a trader's like a caged animal, and even the S&Ps are moving two handles every 20 minutes. They get like this, and they just start talking to themselves, and
keeps me alive.
They don't
Do
pay
you want
attention.
to know? Let me tell you about what I did on Saturday, because I didn't have a chance to tell you this, because it's very important.
I actually saw a picture. I think you sent it to me. You underperformed because
John.
you did this. Yeah, go ahead. Tell everybody what you did, and I'll tell them how you
Let me see if
underperformed.
I've got a picture I could send to John so he could show.
Mm-hmm.
Thank you.
John, I'm trying to find this so I can.
You're going to email it, aren't you?
Let me see if I could send this to you, because it's very important.
Oh my God! This is Tom preparation too, everybody. So he really prepared for this.
You can't see. It's not big enough. You can't really tell.
That's what she said. It was a Saturday night, right?
Omaha.
Right. No. She already wrote me. We don't need to see this. It's okay.
John.
Long story short, Sosnoff was doing a charitable thing, and they asked him to make 8 slabs of ribs. He came up with 6, and they said, you'll like it. Is that not the truth?
Hey, so John, I'll tell you the story. So Donnie has a rib fest every year for a charity, right? And it's on a city block, and he said, hey, can you make some ribs? But I was in New York. So when I got home from New York, before I even went home, I went out and bought 6 slabs of ribs, couple of pounds of chicken, bunch of beans, and on Saturday morning, I cooked 6 slabs of ribs. You would have been proud.
I would have been proud. I would like a good rib.
So there was about, I'd say 5 or 6 of us that cooked, 5 or 6 slabs of ribs or something like that. Or Donnie cooked like 8 slabs. So we had like 30 slabs of ribs. That's a lot of ribs.
That's a lot. That's a lot of ribs. I mean, did you do them all on the grill, or did you do some inside, some outside?
I started them all inside and finished them all outside. Donnie smoked them the whole time. The other guys did.
Because he's a true rib connoisseur.
Well, I didn't have enough time.
Well, you know what? No. That's for people who don't prepare. Do you have enough time? 24 hours is a long time to cook ribs. Okay?
I was babysitting you.
This day didn't sneak up on you. You could have bought the ribs on a Wednesday. You're only going to go to Costco anyway. They're all blister packages. They last forever.
No, I don't like Costco.
You could have woke up early enough. You didn't have to go to breakfast.
No, I don't like Costco ribs. They're too thick, and I don't like them. I like the small baby back.
You could have gone to the butcher, got any rib you wanted to. You could have got your Barico rib or whatever it is that you bougie people eat, and then you could have done it. Don't go to breakfast.
No, I went to breakfast yesterday with the boys.
I guess I'm not a boy.
Well, you were too busy getting your sponge bath.
Thank you.
Yesterday morning, I went to breakfast with, it was a dream team. It was me, Jules, Slappy, and Butchie.
Oh. What were you trying to do? Make a mahjong team?
We were just talking about you mostly the whole time. They wanted a lot of information. I gave them a lot.
They were real happy about my arm. They just wanted pictures as proof.
That's right. So a lot of talk was about you, but we had a very nice breakfast. Jules was on his way to play a tournament, but she was on his way to, I'm not sure to do what. Steve was on his way. I don't know what he was doing either. But we all had stuff to do, but we had breakfast together. It was very nice. Anyway, my rib story is that we had like 30 racks of ribs around that. Maybe there was like 90 or 100 people total. And, but then I had chicken and like a million side dishes. It was beautiful.
Very nice. Very nice. And did you go, you went to the Rib Fest, I'm assuming, because you dropped them off at the very least.
I worked it.
Oh, you worked it. Okay. So you served your ribs. Was there a rib cook-off? Did you make the...
No, there wasn't a rib cook-off. There was,
You didn't need like a guest rib connoisseur to try them out or something like that? Somebody who's not one of the boys.
I ate everybody's ribs. I was sick when I was left there. I couldn't move. I wanted to go home and watch the football game. I wanted to watch Indiana play. Indiana played Illinois. I wanted to watch that game. Corinne went with me for a while, but she looked at all the ribs and she goes, "This is making me sick just to smell this." So, all right. Anyway, you ready?
Sounds like fun.
It was fun. If you love ribs, there was enough there to get anybody sick.
I'm sure.
Some guy made ribs where he poured he had like a lemon aioli sauce on top. It was delicious.
Oh, that's different.
Yeah, like a Greek. Another guy did Greek ribs. Another guy did he did like,
Greek ribs. What do you do? Like, talk meanly to them from like the backside of the rib?
And then another guy did.
Did he cook the ribs over and like cook them only like one side down or something like that?
Another guy, I'm not even listening to you. Another guy did spicy ribs. I did spicy chicken.
There was nobody who did like a Korean style rib because I like that.
Not this year.
Well, maybe Donnie will invite me sometime.
I don't think so.
I don't think so either. I like
banned.
Donnie. I think Donnie likes me.
All right, let's do this. Ready, John? Let's do it. Option strategies with same risk profiles. Option strategies with same risk profiles. Matt, I think this is right up your alley. I think you're going to be good at this one today. Option strategies with same
Let me try.
with same risk profiles. You've been doing this for 40 years. You should know this. Option trading is strategic and engaging because of a variety of strategies available. However, the same variety can sometimes be confusing. How do you want your hot dog? There are approximately 20 premium selling strategies that fall into 8 categories. And they listed them here for you. Covered calls, time spread, jade lizard, ratio spread, iron condor, straddle strangle, put call spreads, and naked calls. These are kind of what we're the 8 categories, then we mess with them. Let's go next slide. There are 4 pairs of strategies that are synthetically equivalent, meaning that they share nearly identical risk profiles. Understanding their similarities and differences is helpful for making trading decisions. We talked about one of these already today, the covered call versus the naked put on confirm and send. Then you could obviously do the long call spread versus short put spread, or long put spread versus short call spread, the ratio spread versus the big lizard, the diagonal versus a poor man's covered call. They're all very similar. They're all synthetic equivalents, which require matching strike prices and expiration dates.
And all would have been a great strategy in this past market that we've had.
No doubt about it. Let's go to the next slide. So the first one is a covered call, long 100 shares plus a short call. It has nearly the same risk profile as a short put. Let's go to the next slide. We talked about this already today. And voila. The SPY at the money covered calls and puts are exactly the same. Now we would never do an at the money covered call. We would never do an at the money put. What delta would you use for both sides, Bat? As a default.
I mean, for me, I'm going to probably, if I'm going to do it, an at the money covered call with the puts. What are they? I can't see the screen that well here. What are they using? They're buying 100 shares of stock and they're selling a call out of the money.
No. These are what they want to show is the same as at the money for the same. But they're
using the same strikes here. They're using, like I said.
Yeah. They're using the same strike to show you the same thing.
Right. So for a poor man's covered call, or I don't understand the question here. I'm so sorry.
Okay. Well, not poor man's covered. For a covered call, we generally would buy stock and sell about 30 delta. For a put, for a naked put, we would.
I still sell the 30 delta. I do the out of the money.
Yeah, I mean, we usually sell the 25 or 30 delta naked put, which gives us about a 75% probability of profit. And on the call side, we usually buy the stock, sell about the 30 delta call, which would give us about a 65% probability of profit. That's all.
Right. One has, over 60 deltas, the buy the stock, sell the call. And the other one has less than 30 deltas. So they're two same trades, but completely different. That's why my answer when we did confirm and send is it depends on how bullish you are. The covered call, you're going to be able to make more money and have a slightly lower probability of success. The naked put, you're going to have a higher probability of success, make less money.
Exactly. Let's go to the next slide. So here we go, put spreads and call spreads. And like I said before, these are really interchangeable when using the same strike prices. As hedge positions, the risk profiles are nearly identical. This is another example, though, of when we buy we don't do it exactly like this. When we buy a put spread, we'll buy one strike in the money and sell one strike out of the money. And when we buy a call spread, we'll buy one strike in the money and sell one strike out of the money. And when we sell a put spread, we'll sell an out of the money put spread, usually around the expected move. And when we sell a call spread, we'll sell a call spread out of the money, usually at the expected move. So although these have the same risk profiles, if you choose the same strikes, we generally, just like the covered call, the naked put, we would generally set up our short call or short put when we're doing a credit spread at the expected move. When we sell a naked put, we usually go to the expected move. When Tony and I do a live show, we do everything at the expected move, which is always going to be somewhere in that same delta area. And then when we're doing the long put spread or long call spread, we do it right at the money. Let's go to the next slide. And you can see here that although synthetically equivalent, professionals choose between these strategies based on bid-ask considerations. I mean, sometimes I don't really consider it a bid-ask consideration if it's a liquid underlying. I really consider it a probability of profit. If I'm going to buy a call spread or a put spread, I know it's a 50-50 shot. If I'm going to sell, but I can make more money. If I'm going to sell a call spread or put spread, I know it's a high probability trade, but I can make less money. It's just a question of what you're shooting for.
That's correct.
Let's go to the next slide. So the ratio spread and a jade lizard. They're both three-legged strategies, and they combined a naked option sale with a spread in the opposite direction. Okay, so a ratio spread is, let's just say for argument's sake here, long one, short two, and a jade lizard is short one, short a call spread. In both cases, or reverse jade lizard, just the opposite. In both cases, you're going to be naked short an option.
That is correct. That is correct. And they just broke up the strategy so that you could see them both there.
Yep, they broke it down. Let's go to the next slide. So when using identical strike prices, again, this is just to make the point, these strategies become synthetically equivalent because the embedded put and call spreads are interchangeable. In practice, though, traders typically sell out of the money ratio spreads. We do. We buy the option at the expected move, and then we sell whatever we can beyond that to generate a credit. We do this at our live shows. But the at the money jade lizards, we do the same thing. We'll sell the put at the expected move, and we'll sell a call spread where we can get enough credit to hopefully do the thing for more than the width of strikes. But again, the point being here is that the risk profiles are synthetically equivalent, but we do it at the expected move as a preference thing.
That's correct. And we do a lot of this on our live show. We deal with the expected move, I mean, religiously.
Yep. Let us go to the next slide. Perfect. A diagonal strategy is less commonly used. Unlike other premium selling strategies, it requires paying a debit upfront and benefits from increasing implied volatility. When using the same strikes and expiration dates, it becomes identical to a poor man's covered call. And again, we do not use the same strikes and expiration dates, but if we did, it would be the exact same, synthetically equivalent. Let's go to the next slide. And you can see it here. So these strategies are used in different market conditions. A diagonal we use for, the nice thing about diagonal I like is that you can adjust the strikes, and sometimes I'll move the front month strike. Like we made a trade on Friday where I moved the front month strike actually higher than the long strike. And sometimes we'll do that relatively close to expiration. But the poor man's covered call, it's just a substitute for a covered call. You buy an at or in the money call, long term, and you sell it out of the money call, either at the expected move or somewhere around the 30 delta. And we use a longer duration expiration for those, often leaps. Let's go to the next slide. So the takeaways from this, there's a lot of good content in here with these same risk profiles. Understanding synthetic positions helps traders manage complex adjustments and portfolios, and using the appropriate strategy for market conditions improves trading efficiency and reduces cost. So there's some really interesting takeaways from this. The first is that there's a lot of things, if you use the same strike, they're synthetically equivalent. But that's not how we really trade them. That's my biggest takeaway. What we do is we trade things, with a optimal duration and an optimal strike price based on expected move. I think that's the best way to do it. But to understand these similar risk profiles, this is a really good piece.
Very nice. Yes. Good job. Good job by the team. Good job by you, Sal, finishing just about at the top of the hour, because we've got another market measure coming your way. Even the S&P, Sal, let's take a quick look at the market here. It's actually caught a small bid. Even the S&Ps are up $5.25. Cancel crash, Sosnoff, as the NASDAQ is unchanged, and the Russell just went positive by 40 cents. Dow still the weakest of the group, down 111. Volatility up a skosh, 5 cents to 17.75. Bonds going the other direction, down 4. Notes are still holding on to small gains too, but basically an unchanged market until you get to Bitcoin that's down almost 2,000, but is over 114 for the first time that I've seen this morning. Ethereum really not catching any bit at all, down 241, although it is off of the lows that we saw earlier around 41.16. It's 42.40 right now. Oil continues its slide down 48 cents over the last couple of days, and gold getting its rally back on, Sosnoff, holding steady up 50. Let's round up there. We'll take a quick 90-second break and come back. We got more Tasty Live with a market measure next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
mean,
This is moving so fast, and I like it.
yeah.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. Don't I know that? Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlo bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live. That's right, with a little bit of a market measure here. Before we do that, take a quick look at the market. Sadnov, I have a question for you. Even the S&P is down 2, NASDAQ down 15. On the upside, you got Tesla up 16 and change. You got Apple up another almost $6 on top of gains from Friday. Can this market go lower, even though you do have such stocks as, I don't know, Microsoft down almost $5, ABGO down a couple of bucks, NVIDIA down a couple of bucks. What do you think? There's a big tug of war going on.
There is a big tug of war. I don't necessarily love the rotation because I'd rather see them, I'd rather see a little more of a
go up, makes it a lot easier.
100%. Yeah, it's really mixed. My screen is mixed all over, as you would say.
Mm-hmm.
Yeah, I don't know what to make of it. I don't want to even consider buying them here. I'm staying short. I don't love my NASDAQ shorts.
Even though you believe it's buy Rosh Hashanah and sell Yom Kippur, you're going to keep your shorts.
Because I don't think I have enough time to get in and out. I'm a little slower than I used to be. I don't have that maneuverability that I used to have, that blazing, deceptive speed. I don't have that. My first step isn't as fast as it used to be. So I got to I got to hold the position a little bit.
Understood. Yeah. I'll give you this. I mean, I think you're at the later years of your career here. I'm going to give it to you.
Yeah. It's always been deceptive. It's just not quite as fast as it used to be.
It's always been deceptive. It's just not quite as fast. Listen to that statement.
Yeah, that's exactly right. It's always been deceptive. It's just
not very fast.
Yeah, exactly. Exactly. All right, let's do this. We have a bunch of stuff. Time is it? It's 9:10 in the morning. We're in Chicago. So if you are wherever you are in wherever you are, you're as a Tasty trader.
Wherever you are, there you are.
Tasty Nation is all over the world, just so you know. But in Tasty Nation's home base is in the West Loop in Chicago. And if you're new to Tasty, welcome. We're, like Vanetta said, we're hitting the fall season, and we still have a couple road shows left this year. So I just want to had a great show in New York. It was really fun. We're so appreciative for everybody that came out. Mm-hmm. Next one is in LA at the famous Fonda Theater. We have been there once before. So funny. One of my son's friends just posted was at a concert, and he posted something. I saw it on Instagram, and he was like, "You got to check this out at the Fonda Theater." And I was like, "Oh, I'm going to be there in 2 weeks." But if you haven't signed up yet, please do. We'll be there in less than 2 weeks, Friday, October 3rd. We head out to LA on the October 2nd, so can't wait to see everybody. Doors open at 8 a.m. Show starts at 9 a.m. Remember, the market out in LA opens at 6:30 in the morning. So we'll be 2.5 hours into the trading day, which will be great. Really looking forward to it, but we don't care. Every show starts the same. The next one we do after that will be Charlotte, where we'll start, 15 minutes before the market opens, like we did in New York.
Yeah.
Hopefully Tony's arm will be fixed so he can use both hands. But
by October 24th, it's going to be touch and go, Saz. It'll either be that or it'll be having an operation. But don't worry, I'm a pecker, Sosnoff. I'm a pecker. I can do it with one hand. No big deal. I'm a big pecker. You know that. I've been pecking for a long time.
Then we'll be at the Fillmore in Charlotte, North Carolina on October 24th, and we'll finish up the year in early November 7th at Antone's Nightclub in Austin, Texas. Supposed to be a really cool venue, and we will be same thing.
I've had a lot of people writing to me about this. They really love this venue.
It'll be doors open at 8 and show starts at 9 a.m. And always love the quick little trip down to Austin, Texas, where we eat so much barbecue we're sick as a dog the next day. We're sweating barbecue sauce. Special appearance by our own Tom Preston that day, which will be a lot of fun. And yeah, so
be fun.
Those are the 3 last shows we have to do this year. I mean, Mike, Nick, and Katie are going to still be on the road, and Dr. Jim's got a bunch of shows, but those are our 3 shows. tastylive.com/events. tastylive.com/events. Plenty of room at these shows. New York was all full, but you know, we always have space until we get out there. So if you want to come to the show in LA, New York, just to give you an idea, we made just about, I think about 40 trades, 39 or 40 trades. We made some pretty decent money, but that doesn't.
A couple of scalps. We did.
But that's not why we do it. But we did have more than our usual number of scalps. We also traded, I think, 25 different positions. I want to say we probably used about 8 or 9 strategies all total, and we had some fun with it. It was good.
We sure did.
We used a lot of Tony's money. That's always fun. So
we had a good time, regardless of whose money we used. We guard everybody's money the same, Sosnoff.
I know. Anyway, it's a good time. So hopefully you can make it out to the Fonda Theater in LA. It's gonna be a fun show. We love LA. Yeah. Plus my kid lives there, so I gotta spend a little extra time in LA.
Sweet.
All right, let's do it.
I'm ready.
Here you go. Extreme days and next day probabilities. We're going to take a look and see what happens when we have an extreme day, and then what happens like the next day.
Sure.
What do you think it is?
Oof. I'm gonna say it has really no bearing on the next day. Maybe a slight edge to a small continuation, but it's going to be within the expected move of a day. It's not going to have a 2 back-to-back extreme days. That's the way I feel. What about you?
You know, I'm really mixed on this without seeing the data. I'm going to say that I'm going to say that an extreme day doesn't necessarily mean that you're going to have an immediate reversal or anything like that. But I'm going to say that an extreme day generally means that the next day has a higher chance of being extreme as well. Just because an extreme day usually pumps up the vol. So that's why I'm thinking that. But I don't know. Let's take a look. So when you consider, and by the way, Bat, we're going to be taking calls at 9:30, right?
We are 855-238-2789 or 855-BE-TASTY. That's the number to call. I wouldn't want to step on you. You were talking about the shows and everything, so I didn't say it. But please get your phone ready. Give us a buzz. We'd love to hear from you. I got 4 or 5 lines open. We can open them now if you don't mind waiting. If not, you can wait till the segment's over and call us in then.
When you consider SPY from 2015 to present, any given day, the SPY had a 54% chance of an up day for the last 10 years and 46% chance of a down day. Given that SPY had a down day, SPY had a 55% chance of an up day the following day. Now, that's pretty much the same. So that would be in line with what Tony just said. Given that the SPY had an up day, a 46% chance of a down day, that's the same as it is on any other day. So in general, the probability of a reversion following day is only slightly higher than the probability of an up or down day in general. But so that's on a normal day, it doesn't make any difference. Gambler's fallacy. But what if the move is very large? Let's take a look. So we decided to look at 10 years of data and determine the probability that the SPY has an up day, given that the SPY has more than 2 standard deviations, okay, or a down day. So we're looking right now, we're looking at 2 standard deviation moves, which have about a less than 5% chance of happening. We looked at 40 different tickers. So we didn't just do the SPY. Give it a 2 standard deviation up move or down move. Note it. We have a note here. Only the direction of the move, not the magnitude of the move, is considered here. So, and we have a list of tickers. We don't have to go through them all, but there's 20 different underlyings, including some ETFs and kind of like every major stock. Let's go to the next slide. All right, so normal market symmetry. In typical conditions, the SPY shows 54% up, 45.6% down, and a modest 8.8% bullish tilt, reflecting long-term market growth trends. That would surprise nobody. But post-crash reversal, after 2 standard deviation down move events, the up probability increases to 60%, creating a positive 4.8% edge. This suggests that fear-driven overselling creates mathematical buying opportunities. Well, that's really interesting. But what's more interesting about that to me is that it kills the theory, Tony, of the trend is your friend.
Yeah, that's what I was kind of like a little bit alluding to here. But again, you're looking at the next day. That doesn't mean what happens over the next week or month or year.
So you can see the first 2 slides are up day in green, down day in red. That's the 54-46. And then after that, you have up day after a 2% down or down day after a 2% up. Those are big reversals.
Yep.
Let's go to the next slide. Now we're going to look at post-rally exhaustion. So after a 2 standard deviation up event, the down probability surges to 58% versus 45% normally. That's the 13% shift. That's pretty impressive. So the risk-reward implication, the stronger reversal after ups versus downs suggests tighter management when buying dips and wider targets when shorting rallies. Basically, again, this is very interesting because it debunks the myth that the trend is your friend, that there's such a thing as a breakout on a big up move.
Right.
Or a breakdown on a big down move. This completely debunks that. Again, let's go to the next slide. We've debunked it 50 times already, but we're debunking it one more time. It's a little harder to read for me as well, but in the past 10 years, among the 38 tickers reviewed, here are some that stood out with the most notable moves. McDonald's, a 25% downside reversal after rallies, only a 5% reversal after sell-offs, or 5.9% after sell-offs. Brazil ETF, a 12.5% bounce after crashes. Junior gold miners, a 10% bounce after sell-offs. NASDAQ, weak dip bounces, but sharp fades after rallies. Where's the fade here? Utilities, a 17% pullback after rallies, and Apple, a 15% fade after rallies. Let's see where we are today, Apple. Are we at a 2 standard deviation?
Apple's up big again.
Yeah, so the last 2 days in Apple, this is about a 2 standard deviation move. So we should be looking.
Rallies exhaust fast. So there's your opportunity. Look at put on a little bit more positions.
So Apple, 15% fade after rallies. And we have 2% moves in. Here, I'm going to do this right now.
I thought you might.
Because.
Plus, you got sell Rosh Hashanah.
Because, as you know, I trust our research. So I don't have a lot of time to look at options right now for a second, but.
You just went with stock.
Stock's going up faster than I can deal with it.
You could sell it.
Yeah.
Apple up $6.90.
So I just sold a bunch of Apple here stock. I'm going to do some options when we get the next break. But I'm trusting the research here. I'm looking.
Apple IV rank is 14. It's neither here nor there, but I get it.
I'm looking, Tony, for I did not know this statistic before we did this study, which is what I love about Tasty research. Apple, after a 2 standard deviation move, a 15% fade. We had a almost 3 standard deviation move in Apple on Friday. I'm going to say 3 standard deviations on Friday and almost 3 standard deviations today. It doesn't get any more than that. So I'm waiting for my fade.
I like it.
Let's go to the next slide. SPY is somewhat more likely to experience a reversal following a significant up day or a down day. However, it is not a strong trend. Among the 38 tickers tested, 58% were more likely to have an up day following a large down day compared to generally having an up day. 74% were likely to have a down day following a large up day. I like those odds. And then you can see the other tickers breaking this down. 22 out of 38 tickers, 58% showed mean reversion after a 2 standard deviation down day. And what I'm looking for here is the 2 standard deviation up day. So 28 out of 38 tickers, 74% showed mean reversion after 2 standard deviation up days. That's very interesting. This asymmetry is important because it shows that markets are more reliable at pulling back after extreme rallies than bouncing after extreme sell-offs. And I assume if this is not an extreme rally, Tony, I don't know what is.
Well, this has been an extreme rally for quite some time.
I understand that. Let's go to the next slide. And some takeaways. The statistics lightly support a contrarian approach following a large up day or down day, but this basically remains speculation and position sizes should reflect that. I totally agree with that, but it doesn't support a continuation of the trend, and that's what's more important. Additionally, although the underlying price is more likely to revert the day after a large move, the options won't necessarily behave the same way because IV and duration also impact performance. Okay. I like it.
Good job. Good little study. Would you say I was more right or more on?
I would say your answer
this is a tough one for you. I got you.
I would say your answer was you kind of chickened out and you didn't really take a stance. I would say your answer is not that interesting.
I kind of chickened out and didn't take a stand.
Yeah, but you said your answer. Your answer was
that they do not. I say that they do not continue the next day, and there might be a slight edge to the upside of a continuation. But
then I didn't hear what you said. I didn't listen.
You didn't hear what I said?
I didn't listen. I mean, I've become really good at blocking out most of the things you say, so that I must have just inadvertently blocked that out. Let me
take a quick 90-second.
Let me turn off my blocker because I can turn it on or off.
Yeah, your beta blockers. Let me take a quick 90-second break and come back. We got more Tasty Live, but I need your phone calls. That's right now, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. It'll be below me just a moment here. So give us a buzz. It'll be up there. I promise it will be. Call. We got 4 or 5 lines open. Love to hear from you now.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah.
And you can go to my pool?
Yeah.
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Damn. Wow. Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live. That's right, with phone calls. That's right, your phone calls. 855-238-2789 or 855-BE-TASTY. That's the number to call. Give us a buzz. We'd love to hear from you. I got 4 or 5 lines open. The number was right there below me just a moment ago. Please call in. Speak to the great Saz. Thomas, market not reverting back yet. Even the S&P's up 225. Apple still strong. Apple trading up $7.
Strong like bull. I don't expect Apple to revert back right now. It's going to take a little bit of time here, but you know.
You just sold some E-mini S&Ps, adding to your shorts.
Because I'm a man.
You're a man with disposable income, and you're disposing it right now.
It's
yes,
just going to be a little scalp here. I'm going to try to scalp them. I think they're going to be. I would be surprised if they're not down on the day again at some point.
Sure. I mean, it's probably 100% chance, or 99.5% chance if you got a 15. Well, what is the expected move for the rest? Oh, my good Lord. 11 handles, Sosnoff. Expected move for the rest of the day. Volatility.
So I just sold S&Ps here, right here, 25. If the expected move for the rest of the day is 11 handles, where would you cover?
Unchanged would be, unchanged to down 2, you'd be catching half the expected move. So you can't have too much.
Right, exactly.
Expectations here.
There's not much, is my point.
You ain't getting back to even on that trade.
Oof.
Oh, did that hit a little too far from home? 855-238-2789. That's right. That's the number right there. Give me a buzz. I would love to hear from you. I got 4 or 5 lines open. Don't be shy.
Scoopy,
I think you scared everybody away.
Scoopy, some bonds here, by the way, or some notes, just for the hell of it, because they're getting down to.
Bonds down 6 ticks to 116.05. They're right there on their lows for the day, which is 04.
I have
continue to be lower.
I'm actually working some notes below the market at 3.5. So we'll see what happens.
Any of these stocks that are lower this morning? Scoopy time for you, Sadnoff. Crowd, Coin, Netflix, Costco. Costco has earnings later this week.
I'm a little bit long Costco.
Down 7.
I don't really have a lot of really bad stocks right now.
Out of curiosity, you want to get short the market. I know you went with futures, obviously, a lot of leverage, everything else like that. Do you think about a 0-day spread, or are the spreads just not juicy enough? IV rank of 13 in ES.
What do you mean? Do I think about a 0-day spread?
Well, instead of selling futures, you got an 11-point move, going 10 points out of the money on ES. If you wanted to, you could sell the calls themselves for, let's say, 290. Or you could sell the call spread if you went to the 35.40 for $1.30, that kind of thing.
Let me take a look. I don't actually.
Wow, the team really hates me. They took my picture down and just put up like boxes and squares of.
You know what?
That's okay.
I don't hate the expected move is. We're at 666 again. The death
on the SPX cash you're talking about. I'm talking about E-mini S&Ps, but sure.
SPX cash 666 11 move. Yeah, you could sell the 6680 calls for
about $1.90. Well, yeah, I had a chance to. You blew it.
I blew it. Damn. Just put a 195 bid in offer in, and I got missed it.
Oh, what do you want? A nickel of the position?
I wanted the nickel.
Evidently.
Yeah, that was actually not a sharp move on my part. But anyway,
you got AutoZone for earnings. I took a look at the markets in there. AZO, good IV rank of 46, but no weekly options. October options are non-existent in market-wise, meaning, $10 wide. I don't understand how there could be any volume in these options. I know there are small 10s, 12s, and 1s, but you really, really have to have conviction to trade AutoZone with $10 wide markets.
You really have to have conviction to go into an AutoZone. I don't know the last time you were ever in one, but those stores, they should be shut down for a lot of different reasons. They're like, I mean, does anybody shop in AutoZone anymore? It's like
sure. Are you kidding me? I got a lot of guys going in there. I mean,
I doubt it.
Not your type, but
I went into an AutoZone to buy a.
I got recognized in Whole Foods, Sosnoff.
I heard. Yes, it's very impressive.
He asked me, "Where's Tom?" That's all he asked me.
That's what most people ask.
He didn't want to talk to me. He wanted to see where's Tom. He said, "You're Bet, right?" I went, "Yeah." He goes, "Oh, good. Are you here with Tom? I've always wanted to meet Tom."
Yeah, we shop at Whole Foods together on the weekends. If I'm seen with you at a Whole Foods on the weekend, something went horribly wrong.
Hey, you gonna come this week to Grand Rapids with me? We got a first hockey tournament.
Grand Rapids, Michigan?
Yeah.
It's far.
Yeah. You
could fly there faster.
We're not doing that. Sorry. His name is not Sosnoff. Although he's, he wouldn't mind it. The older one would actually like it better than the new one. The new one doesn't really know yet.
It's like, I think it's like a 4-hour drive.
Yeah, I mean, that's not too bad. Sosnoff, you see, these are the things about the hockey tournaments that I actually love. Getting to spend 4 hours in the car with my son there and back, talking about all things about life and just getting to know the kid. You know what I mean? Like, it's just gonna be the two of us. It's gonna be fun.
I'll bet he sleeps the whole way and doesn't talk to you. But
we're gonna go to California.
Hey, I have one question. Why don't you guys carpool and why don't you take a bunch of kids and let somebody else do the next one?
I'm not a people person, Sosnoff. I like to just I like to have my own car. I get in, I get out, I go. In the mornings, you got to drive to, other rinks, and I will see the parents all day long at the bar and every place else. We go out to dinner. I don't need them in my car too. I just a little alone time with the kid. Be very, very nice.
Let me know if you need some restaurants on the way home. That's my stomping ground.
I will. Bill in California. Sorry for keeping you holding. What's up, Bill?
Yeah, hi guys. Hey, just wanted to say, hey, love your stuff. Binging your zero DTE research right now. But I have a question on Forex and its impact on prices. Do you see as Forex spreads widen or contract that you react differently when you put on trades?
Sosnoff?
So, are you talking about spot Forex, Bill?
Yeah.
So, why would spot Forex impact the stock market? I'm just curious, what your line of thinking is. I'm not sure.
Unless you're talking about other commodities,
Are you talking about spot Forex influencing the price of futures, for currency futures, or are you talking about for stocks?
What I'm really looking at here is if you see for example, you see the dollar euro contract or expand, is that going to have an impact on how you think about what you're trading, whether it's a stock or commodity, or do you say that in general that's not going to impact your decisions at all?
Well, let me ask you a question. You've been watching this market for obviously a long time, and you've seen the dollar basically stay strong for almost a straight decade, and then you've seen it get super weak, this year since the change in executive power in the U.S. Has it had any kind of an impact on the market? We've kind of gone straight up and continue to go straight up. I'm not sure that there's been a good market takeaway. I'm not sure that you could say there's been a correlation between the price of the euro, whether the euro was trading at 109 or 118 where it is now, I don't know that you could draw any kind of a correlation between the move in the euro and the S&P, the move in the S&Ps. Both have, they seem to kind of been doing their own thing for the last decade and a half. I mean, maybe.
So in that case, you would look at things and say that you really have no correlation. I'm not sure if you've done any research on that or not, but I would love to look at it. But in general, you would say you really don't take that into account for any of your trade decisions. It's really not material.
There is, I would say that we look at we look at them, relative to each other, so that we look at the euro and we look at the stock market as being two completely uncorrelated underlyings. So you're right. I don't think I would look at one that would help me make a trade decision on the other one, but I do think that I look at each of them independently and think of them as separate trades.
Oh, well, that is awesome. Hey, guys, thank you very much. We'll see you at the Fonda.
Thank you very much, man. Great call. Appreciate your question.
Looking forward to it.
855-238-2789 or 855-BE-TASTY. Still got a line of two open. Love to hear from you. We're going to go to Fremont, California. We're going to stay in California. Previn, what's up?
Hey, it's Praveen. Thanks for taking my call. So I had a question about verticals that went back. I had a call spread on Google at 260, 265, and that got punched through right away. And, I was trying to manage the position. What I did was sold a put spread and went inverted on that. So I was wondering if, now in hindsight, I'm wondering if that was the right thing to do, converting it into an iron condor, like an inverted iron condor, or was there a better thing to do to manage that trade?
Well, I mean, Tony can take this if he wants, but I'll give it a shot. You cannot do an inverted iron condor. You can do an inverted strangle, okay?
Now, inverted iron condor, what he's saying is the two short strikes, they're both going to be in the money. That's an inverted iron condor.
Right, that's what he is asking. And the problem with the inverted iron condor is that you basically all that does is lock in the trade. There's no more.
Well, it locks in a loss, and it actually opens you up to not doubling your losses, but the inversion spread that you have. If you're $3, $4, $5 wide, you actually can lose on both sides of that trade. So you're increasing the amount of money you can lose.
So what I would do here is you can roll the untested side until you get to the same strikes. You have like an iron fly on. But you can't roll past that. You can't go inverted. So if you have pushed it into an inverted situation, or if you're thinking about how do you adjust the position? Because like you said, it's Google, right? It's 250, 255. Let me see just Google right now. Google's 254. What I would do is either recenter the strikes if you can.
So you would buy back your inverted iron condor and open up another one as well.
Yeah, just basically start over or roll out. I don't know if you're in September, October, November, whatever. But if you're in a weekly or in October. But if you're in October, you could also roll to November and recenter the strikes one side at a time.
That's probably what I would do.
Yeah, you just can't go inverted with a defined risk trade. You can go inverted with an undefined risk trade. That's the only distinction. So when you have a defined risk trade, you either go to an iron fly and leave it there, and you're right on the dance floor at Google, so it's not that bad. Or you roll it out. You roll it out to November and you widen the strikes.
Understand. All right. I appreciate the advice. Thank you so much.
Thanks.
Got it, man. Good luck to you out there. We're going to go to,
Thank you.
Yeah, you're welcome. We're going to go to Michigan. Nick in Michigan. What's up?
Oh my God, guys. I got to tell you, what a treat to talk to you after all these years. been watching you, long-time listener, never really have done much with options. But what I wanted to ask, I am a registered nurse, work at a company that has a 403B, and I just found out that I was able to do, go from a company like a matching account to Charles Schwab. They do not allow options in there.
Right.
What do you recommend for someone like me that has an employer account like that?
So you're going to be limited. Is Schwab the custodian for that for your retirement?
It's actually Transamerica.
It's actually what?
Trades America.
Trades America. Yeah. So that's the custodian. Did they give you just a list of different funds that you could put it in? That's your only choice, right?
Yes, but then they allow you to do a personal choice retirement account, I believe, PCRA.
And
so my hope was to move some of my account to this one where I could actually do more individualized directed, and it allows me to do like stocks, but no options, which is really sad.
Well, it's not. In their defense, okay, it is very difficult in those programs to find a trustee that will allow you to do options. I mean, I'm sure they never pushed it, but for most of those, 401b, whatever, for most of those accounts, it's almost impossible. So if they'll let you do a self-directed portion of that, then I would do that. And, maybe over time they'll change and lighten up or whatever, let you do more stuff. But there's probably, in most of those 401k accounts, there really is there's no choice to do options.
Okay. Well, don't worry, guys, because I'm going to just probably do an individualized one and continue to do the tasty mechanics.
Yeah,
on my own.
Yeah.
But I also wanted to say one thing. You guys are phenomenal. I've been watching you for years from behind the scenes, and I really appreciate everything you've done. You have no idea. Not only are you entertainment, but you're so educational. This is free. Thank you so much.
Thank you, man. Really appreciate it.
Thanks.
Thank you, Nick. I thought Nick was going to like it. God bless you, too. I mean, Nick being a nurse, I thought maybe he's going to come take a look at my hand for me or something like that when I'm in Michigan. He's going to meet me on a road or something like that, or had some magical elixir I can rub on there, but nothing. Nick just taking, not giving anything back. All right, well, what are you going to do? Sadnov, as we are we limping into the middle of the day here?
I don't like this rally right now. They're almost. They're not quite there, but they're almost. The Nasdaq's over, but the S&Ps are almost back to Friday's highs. I do not like it. I don't want them to hold here, and I'm not doing well right now.
I do not like it, Sam. I am. So we're gonna take. You're nothing without me. See, when we're on stage together,
I don't like this rally.
I can carry you, but when you're left to your own, you mess up. We're gonna take a quick 90-second break and come back. We got more. Hey, is this foliage weekend for you? I don't think you're game ready. I don't think you've been doing your push-ups.
I'm gonna try to get in shape this week.
You're gonna need some help because you were hobbling a little bit this weekend in New York. I mean, I don't think you've been doing your push-ups. I don't think I'm gonna be close to you. You want me to fill in a little bit, something like that? All right, we'll take a quick 90-second break. We'll take that offline. We'll be back more. We got more Tasty Live. Immediately found these messages. Liz and Jenny next. Speaking of foliage weekend. Bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I knew it was on there. It's warm.
No, I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's power?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong, I'm right.
High school party. High school kind of.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. The two brunettes to that side of me are Dan and Jenny. Welcome, Dan. How are you?
I'm doing well. I'm glad to be back. I know you guys were on your European tour last week, so I'm happy to be back and doing the crypto segment with you all.
We are glad to see you.
Yes, happy to see you. We missed you, and nice time to have you on because Ethereum is dropping. What is going on in the world of crypto, Dan?
Yeah, so I think we're getting a little bit of a pullback after the Fed decision the last week. We've had this huge run up. There's been a bunch of liquidations in the futures markets. I've talked about perpetual futures on here in the past, and I have some slides that I can show kind of what happened. Typically in these markets, we get pullbacks like this. What's interesting to note, though, and I didn't go too deep into this, but gold is rallying much more so than Bitcoin. So I don't know if that's a sign of maybe like a rotation into more safe haven, kind of less speculative assets. But I just think it's kind of a normal pullback. We're at 112. Typically with these liquidations, we recover pretty quickly. So there was a bounce here. We're at 113. So down 2% in the last 24 hours on Bitcoin, 6% on ETH. I think ETH got hit pretty hard, 7% on Solana. So some of these altcoins are getting hit pretty hard. But that's off the back of a run up the last couple of weeks, especially in Solana, right? Solana
for sure
ran up pretty quickly. And, we had all these crypto treasury companies announcing. Again, I think a little bit of a pause and just kind of waiting to see what the Fed does here. I think there's a speech today. I'm not too deep into macro stuff, but I think the Fed is doing a speech and kind of talking about the Fed minutes. So we'll see where the market goes after this. But honestly, we've been range bound for the last couple of weeks, so not a too big deal. Maybe time to scoop some up, scoop some ETH up, scoop some Solana up. But yeah.
Dan, I've got one question for you, and this has nothing to do with crypto. And I just cannot stop laughing because in the chat, there's somebody who's Tasty Crypto. Who's running Tasty Crypto?
Okay, that's Shelly. So that's my
So funny. I gotta give her 2 thumbs up.
Shout out to Shelly. Thank you for running the Tasty Crypto in the chat.
She said she's adding a salt and pepper wig to the cart for you to make you a Batista. This is awesome.
Well, I might be there soon, so we might not even need a wig. No, Shelly's great. This is one thing we always try and do, especially on our show, where any of the viewers that are on live, like we want to interact with. You guys do this too. You guys are really good at doing this as well. But we love chatting with people in the chat. So anybody that has a question or anything, definitely drop it there. And Shelly could probably also put a link to our newsletter, because we do a lot of crypto analysis with the newsletter that we send out weekly. So
sure. And if people are not on the chat, how do they sign up? Because we have a lot of viewers who are not on the YouTube chat. If they are not on the chat, how do they sign up for the crypto newsletter?
Just go to tastycrypto.com. We changed the landing page to literally just be the newsletter sign up, so we made it super easy. So just tastycrypto.com, enter your email right on the landing page.
Perfect.
Yeah.
I'm going to do that immediately following the show. I'm kidding. I actually think I already get it.
I don't know if I get it. So I was asking for a friend.
Hey, we'll add you. We'll take everyone we can get. If you guys, if your viewers want to get on it, we do a lot of in-depth research there. So we send it out once a week on Saturday. So it's a good newsletter.
That's awesome. Okay, I'm sorry I interrupted you. Continue on your. I had to get to the bottom of the Tasty Crypto. That was pretty funny.
No, it's all good. I know
Dan has some slides, and I know he's a busy guy with a big. You're filming something today, so why don't you fire up your slides?
Yeah, for sure. So I wanted to talk about altcoins because this has been a theme that we've been covering in our newsletter, we've been covering on our shows, and I don't know that people necessarily understand what they are. So when I mention altcoins, I'm just referring to any crypto that's not Bitcoin. So it could be Ethereum, could be Solana, could be Ripple, could be Dogecoin, or the thousands of others that aren't Bitcoin, right? It's just kind of a term that we use for anything that's not Bitcoin. Okay. Some people maybe there's different categories, right? Meme coins being a big one. Ethereum, Solana are layer ones. Ripple's a payment network. So some are utility based, right? Some have applications on top of them. Some, DeFi and the like. Some are just pure memes, right? Dogecoin's a pure meme. Shiba Inu's a pure meme. Pepe Coin's a pure meme. So they're all just coins that are other than Bitcoin. So, typically, and I talked about this a lot on the show, I talk about the rotation and the cycles. So at a high level, we look at people usually buy Bitcoin first, right? It's the first thing they usually go into. They want to hold Bitcoin. It's the most trusted. It's been around the longest. It has some staying power. So typically we see a rotation and allocation to Bitcoin first. People then get rich in Bitcoin. There's a wealth effect there, right? And they don't typically take their money off chain. They usually spread it out to more riskier bets. I would consider ETH kind of, ETH or Solana, sort of that next step. So you see flows into ETH, you see sort of more stuff happening on chain, stablecoin flows go up, and people kind of take their newfound wealth and they spend it in Ethereum, or they speculate on some of these other coins. Then further out on the curve, we get, the risk curve, we get Dogecoin. We get these just kind of pure meme, funny, just social media hype driven coins. And usually when we see that, that's an indication of where we are in the cycle. So, there was this big question on Twitter, in crypto circles, and in general, people ask when is altcoin season? So if we go to the next slide, there's the altcoin market cap. So this is tracking all of the coins other than Bitcoin since the inception of this chart, 2013, it looks like 2014. So you could see sort of how big the space has gotten for coins other than Bitcoin. And we reached a record high this past week of over 1.6 trillion.
Brilliant.
Yeah. So
Dan, can I ask you a question while we're on this slide?
Sure.
I know this is all the altcoin market cap, so I'm sure it's all kind of conglomerating together. But is one the leader? When you look at the S&P 500, Nvidia's 13% of it, or whatever to that effect. Is Ethereum the one that's got the biggest amount, or is it Solana? Is there one that's the leader of the altcoins?
I'd say, I'd say Ethereum. Even if you just look at sort of your top 10 coins other than Bitcoin. Ethereum has a $500 billion market cap. So, Solana's next. There's Binance Chain. There's a bunch of them, right? But
Okay.
ETH is, yes, this is kind of like, it's power law, kind of. It's just, a few of them make up the most of this, right? The rest are long tail, but this is just an indication. I just use it as an indication of kind of where we are in the cycle and how much adoption we've gotten outside of just Bitcoin. So the fact that this reached, an all-time high of over 1.6, 1.7 trillion, I think, is an indication that people are going out further on the risk curve. And, that's also indicative of this like crypto treasury stuff, and just, meme coins in general. There's a lot of attention in the space now, and it's kind of pushed this altcoin market cap to an all-time high. So just again, a very high level visual representation of where we are, what the market looks like other than Bitcoin. And, again, we usually when this happens, there's some pullbacks like we seen this morning. So if we go to the next slide, I just did like kind of a brief breakdown to your point. Sorry, go ahead.
Yeah, go ahead, Liz. And then I just had a quick question.
No, I was going to say, when you look at that, like 1.7 trillion, it looks like we've been there before, right at the beginning of this year. If I was looking at that, it's like the Twin Peaks right there. So we got to act like we've been there before. Yeah. I mean, and it did kind of fall from that juncture last time. Yeah,
exactly. I think what you see is you get these massive spikes, right? You get these pretty big, similar to like a short squeeze. The market in crypto is very reflexive. So some of these other coins rip, and people, there's a wealth effect. Like the thing that I don't think people understand is they sit there and some people are too smart about this market. What happens is people get rich in these coins and they continue to speculate, right? Like there's a wealth effect. So, somebody gets massively wealthy off Dogecoin, not very many people are disciplined enough to just take their profits out, right? So then they go into whatever else, and you see these kind of games that happen in the perps markets where things spike, things fall. So we get into a lot of volatility here, and the market isn't really that efficient. So you'll see these peaks and valleys, and you can even think about it back in April. Ethereum dropped down to 1,500, and then immediately recovered to 5K. I mean, to 5,000. That's just a good trade, right? Like, and things happen really quickly. So, I talk about wealth effect a lot in this space. There's tons of airdrops that happen. There's so much liquidity in the space that these projects and these founders want to bring their token to market, right? They want to get some liquidity, so they launch. And if you're a user of some of these networks early on, you're going to participate in that. So I call them airdrops. They're called airdrops. You're just essentially getting free tokens for using the network. So that actually, happens a lot at later stages in the cycle. So that's why you see some of these spikes and some of the altcoin market cap kind of rally there. So just some of these things to keep in mind when you're participating in the market. Don't be too smart, right? I know we love talking about, whatever, the Greeks and all the math and stuff. Just don't be too smart about this market. Like take your profits, get in when things are really hammered low, and just kind of play it, how you would just any normal, I guess, asset. So yeah, I just to Liz's point, here's the most well-known altcoins. Ethereum's at about a $500 billion market cap, launched about 10 years ago, 11 years ago. It's a layer one. It basically supports applications for the crypto ecosystem. Solana, same thing, a little bit faster, a little bit less, cheaper fees. I call it a Gen 2 layer 1, was launched in 2018. And then Ripple, everybody talks about XRP, right? Supposedly it's a payments network.
XRP was launched before Ethereum?
Yeah. Yep.
And look, the market cap is bigger than Solana. And I guess that makes sense. We know a lot more people in XRP.
Yeah. Solana is an interesting one. If honestly, if you're asking me, and this is just kind of my read on the market. Solana is one that's very undervalued in my opinion, because I know a ton of people using it. It's a ton of younger traders. There's a ton of utility to it. Like, Ripple has mind share with some of the, seasoned crypto participants, but Solana is kind of an up and coming one. And it's basically an iteration on old technology. So It does things faster, cheaper, and enables more applications and more users that come on. They also have a great mobile experience as well. So
I am actually going to take something from the chat real quick too, because it's been twice up there. Ripple is the company, XRP is the coin, correct? So Ripple is the company, not the Ethereum, Solana, and Dogecoins are the coins, but Ripple is the company, not the coin, correct?
yeah, I mean,
I have to get something to show Dan. I I totally forgot. Dan, don't leave, Dan. Stay here.
I won't. I just
anywhere.
I just call Ripple. Ripple is both, I guess. Like Ripple can refer to the asset. I guess XRP is the token, but there's also a Ripple company.
Like I said, I just wanted to just because we were getting a couple questions like that in the chat.
Sure.
Okay, so Dan, we were able to customize shoes when we were in Germany. We were able to customize Adidas, and I hope you can see my customization on. Oh wait, I disappeared. Nope. Okay, there. I don't know if you could see that. I did the $ Bitcoin symbol. And
let's go. Let's go. That's awesome.
You can't really see it. Jenny, take a picture of it and tweet it. People will be able to see it a little bit better.
Here, if I move it closer.
Nope. Still not.
All right. But yeah, I was so excited we got different customizations on both shoes.
Let's go. That's awesome. You're officially a Bitcoin bull. Putting the ticker on your shoes means you're a Bitcoin bull.
I was going to joke around and say that 1 billion of those Dogecoins might be Miss Andrews over there. She loves Dogecoin.
Okay.
No. Pepe. I've got my Pepe list.
Oh, Pepe. I knew you liked one that was like super cheap. It's Pepe.
It's Pepe. I like the little green frog.
Yes, I hold a ton of Pepe. A ton of it.
One day, Dan.
Yes.
Crush your fingers.
I'm playing for 1,000x in Pepe.
That would be nice.
Ooh, 1,000x in Pepe?
Yeah.
Love it.
Pepe's so cheap. It's so cheap. You could have so much of Pepe.
Yeah.
That's what I love. I do love it. There is something fun about the real cheap ones because you could have hundreds of thousands of them.
1 million Pepe.
The unit bias, right? Like it makes you think you're holding more. But the supply of Pepe, I think, is like, I don't know if it's 1 trillion or 100 billion or it's crazy, but the unit bias, right? Like this is something I talk about with my father-in-law and some of the other people that aren't familiar with the markets is like Bitcoin. He like won't buy it because he's like, I can't afford one. And I'm like, no, you don't get it. Like it goes out to the 10th decimal place. Like you can buy 50 cents. Like it doesn't matter. But people in this space, people don't get the unit bias. But to your point, it works in other ways where you're like, yeah, I hold 1 billion Pepe or 20 billion. Real quick, I want to hit on, I know I only got a couple minutes. I do want to hit on the perp liquidation because it was something I brought up. If we can go to slide 5 and 6, I just want to hit this real quick if we got 2 minutes. So, when the markets kind of cascade down in crypto, it's usually due to leverages getting liquidated in the perpetual futures markets, right? This is kind of something I've talked about before. So in the past 24 hours, you see 24-hour racked 1.6 billion in longs got liquidated. So it creates that like reflexive cascade down. So
in layman's terms, does that mean 1 billion was sold?
It's like if you get liquidated on margin, it's just yeah.
Okay, so they got it actually happened to them. They didn't do it.
No, yeah, it's longs getting in the perps market. There's no like expiration, right? So it's price level. So when people go long, if the market, there's these cascading, almost like a short squeeze, right? Or it's like these cascading liquidations that happen. It's people getting auto liquidated, right? Like a margin call. Similar idea.
Gotcha.
And then if we move to the next one, you can see that big green spike. When longs get liquidated, that's where you see that like movement, the rapid movement down that from like what were we at, like 120, 118 on Bitcoin. Boom, it gets hit in the early morning. I think when the futures markets opened overseas, it got hit pretty hard, and you see that huge green bar at the end. That's the market. That's all the longs getting flushed out. So that's what happens. Yeah.
Will there be follow through on this as the longs get flushed out? Like, what is the history here with that big green bar? Is there going to be another big green bar? Is there more follow through?
Usually, it's a good question. Usually what I notice and what I end up seeing is there's quick recoveries. right? Like usually it gets like overcorrected. There's like kind of a huge reflexive move down, and people buy like the 110 they'll have limit orders in, or just kind of there's usually a brief recovery. So we got down below 111 I think this morning, and now we've bounced back slightly to 113. But yeah, like to your point, it could usually you get these big bars, these big cascading liquidations, things bounce, and then if it's truly like an unwind, things continue downward. So yeah, I mean, I wouldn't like jump in with a bunch like right now, but I just wanted to show that because I think I've talked about perps in the past and kind of like how this market moves. There's a number of places you can view just kind of how these liquidations play out. So yeah, I just wanted to hit that real quick.
No, I'm glad you did. Thank you. This is all kind of new to me, and I'm glad we kind of put it into layman's terms.
Yeah, for sure. Anything else you guys got? Yeah.
No, we know you're a busy man today, and we get you back next Monday, right?
Yes.
All right. Awesome.
All right,
Thank you
Dan.
very much.
All right.
Thank you
Thanks.
so much for coming on, Dan.
Thanks for having me. I appreciate it.
Okay, go film your stuff, superstar.
Yeah.
See you later.
Later.
I think we're back.
Okay.
Yeah, Dan, that was great to have him on. It was wonderful.
That was just so our people know. Just stay on Liz and I'm going to stop sharing my platform and come share again because Liz, I've lost you. I don't see you anymore. So so I'm going to just stop sharing and I will go back to.
That's why you weren't talking. I was like, why is she not talking?
You know what?
We've got a jam-packed show today. Jenny and I are coming off a high of being at the RMC in Munich. We are very excited to be there. I did tweet just a couple pictures from our trip. And I know you did. I was gone on Friday, and I know you had a wonderful show with TP. I did not get to see it. I will go back and rewatch it later. I apologize in advance. Did you guys do anything when the market hit all-time highs on Friday?
Oh, I had TP on, and with TP, like it's busy. It's very busy, and we had a lot to talk about. We we tried to put on a new trade in Rocket, but we never got filled.
Rocket Mortgage?
RKT. Oh yeah. Right. It was on, he was walking through his process of finding trades, going to the watch list. Rocket was one of those products with the high vol. So gotcha. We'll take a look at it again today. I will say, you know what, Liz, because we haven't been together in so long.
Well, you and I have been together, but not.
No, not on air. We haven't had our show together on air in so long. I know we were live from Germany on one of the days last week, and I had TP last Friday, but let's just go. I'm going to go into Twitter and pull up a picture here so here are some of our pictures from Germany, which we had the best time out with the SIBO in Munich.
I'm not going to lie to you, Jenny. That dress became part of me. We wore it for 3 days. So 3 days, I wish we would have taken it home. I wish we could have taken it home. They rented everybody traditional German or Bavarian attire. So Jenny and I wore it on our live show. We wore it on our presentation, and then we wore it out for the night.
I know. So it was like a uniform. It was like at one point I asked the guy, I said, "Can I get another white shirt? Because we were wearing it for days." And he's like, "Just wash it in your hotel sink."
I, in an ironic turn of events, had 3 of those white shirts with me. But I couldn't give you one. So.
You want to know something so funny? Once the RMC started, we were very busy, and I've been to Munich before. So when I went through customs, and the guy at customs asked me, what are you bringing here? What did you buy while you were here? And I said, honestly, I never really left the hotel.
Yeah, but it looked like you bought a lot of stuff because there was tons of things in packages in my suitcase that you took home for me, and I want to say thank you again.
But we had the best time, and the RMC was great. And we have lots of new content that will be coming, that we'll be bringing to our viewers, some content that we used in the RMC, because we spent months working on research for the RMC presentation.
Yeah, and it was definitely different. It's not something that we usually attend. When you and I do live presentation, it's usually people that are more familiar with our style of trading. So it was a very unique event. We had a wonderful time. There's our SIBO crew. Those are the guys behind, the people that are in the picture there are the men behind the camera when we are live from the SIBO, and we love those guys.
I know, and they were, it was fun to have them on the road with us.
Yeah, it was.
Yeah. Yeah. So for our Tasty crew they don't know, like if you're looking at that picture on the bottom left, Liz and I are on the side, and then there's Jared, Christopher in the middle, Matthew in the front, Steve in the lederhosen on the side, and that's the crew that they're always talking to.
Whoa, they all had lederhosen on. I just think
I know, but in the picture, in that like bottom left picture, you don't really see the lederhosen on anyone but Steve.
It looks like Matthew's wearing a suit, but yes. But it was a good time was had by all, and it was a very educational experience. We met lots of people, and hopefully we got some new viewers watching it. And welcome if we've got you.
Yeah, welcome if we have any new viewers from the RMC.
Yeah.
So let's see, 1023. We are taking live tweets. Just include the hashtag LIZJNY. That's what we're looking at. I saw Fazia, who runs the Women of Tasty Trade on Facebook. So if you're a woman and if you're a Tasty Trader, there's a Facebook page, Women of Tasty Trade. She runs it. It's amazing. And she was sharing on there about how people share their trades. And if you're not on X, if you follow, though we've got lots of viewers posting their trades on X. We have other Tasty people posting their trades on X. Liz and I were talking about posting our personal trades on X. So, and
I love it. If, like, there you go. There's Eric. So this is the blue wackadoo. I mean, this is literal trades opened and closed. He's just talking about what he collected after fees while he's fishing. So this is what I love about this is the absolute transparency of retail. I mean, that is true. So everybody on this is a retail trader, and it's very transparent because we don't mind posting the good, the bad, and the ugly because everybody's doing it for themselves, right?
Right. And he's right. Like Happy Monday, IV rank is meh, around 14.3. I put on a 7 lot Iron Condor, 16 Delta, 50 points wide between the shorts. And look at this, $733 after fees. Now, I am a small fry. I made $75 this morning, Eric. I've been doing this every day, Liz, every day. I sold a $10 wide for $250, and I take 30%. So if I'm getting $250 on a $10 wide, I'm collecting $250. I'm risking $750. And so far, knock on wood, I've gotten them all off since I've been doing this strategy, and I take 30%. So it's, what is that? $75.
$75. Love it.
Yeah. What about you? Did you put on your 0 DTE today?
I did. And I was out in about a minute.
I think I was out, and I think it was less than a minute. It was so fast, in and out, so fast,
and then didn't look back. So yeah, we did put that in. We've been having some good 0 DTE success, and you can be small fry, big fry. Like so, this Eric is a little bit bigger. We know Jack Tucker is big by big, so you'll see all this coming through.
Right. Okay. So here's some of Eric's positions, and I don't know if Jack Tucker posted today. No, we haven't heard from Jack Tucker today. I don't know what he's up to.
He could be on vacation.
And when I say small fry, I'm kind of a small fry in my SPX 0 DTE right now. I've got lots of positions and bigger positions in the equities, in the equity world. But it's my 0 DTE SPX that I'm still a little bit of a small fry in, but we'll see. Every time.
Well, and that's because, Jenny, and I just want to be clear, you and I we're kind of junkies, right? So if you look at my account is pages and pages and pages, and we were doing it together on the, in our trip to Germany. I have pages and pages and pages and pages of scrolling positions because I'm an addict. Some people just stick with SPX 0 DTE, like your Blue Wackadoo or your Jack Tucker. And when they open it up, they probably have no risk overnight. I have risk overnight, but that's my risk. That's my personal risk parameters. There is no one size fits all for a retail trader.
So we're sitting together on the plane flying home, and Liz, buys the Wi-Fi, opens up the platform, fires up the platform, and right away our flight attendant recognized that it was a trading platform because he started asking us some trading questions. So that's always fun when someone sees the Tasty Trade platform and they're like, "Hey, you guys are traders. What's the market doing?"
It's so fun.
Yeah, so lots of fun. So Liz, for the whole flight home, was in her trading platform, even though it took a little while for the markets to officially open after we took off.
We were just so busy. I had not seen it in so long. Do you know what I mean?
I know. I, on the other hand, took my brand new, we were given these like vibrating eye masks. Maybe you could describe them a little bit.
Hey, you open it. You still have mine.
Oh, yeah. Okay, so we were given these vibrating eye masks. Who makes them? Thera something.
Therabody. It's the same, Therabody.
Okay,
so when you think about it, it's the same people that when you're in, they give you the bag, it's all the Therabody stuff in there.
Okay, so Therabody vibrating eye mask, 9-hour flight, put it on. I think I wore that thing and had it on. I made sure it was charged for the flight. Had that thing on for most of the flight, 9-hour flight. While Liz was trading, I was laying back with my Therabody vibrating eye mask. Next day, it looked like I was punched in the face. I had a black eye.
You watched like 3 movies with that mask on while I was doing emails.
Yeah, Liz was like, "Oh, I got all my emails done." I'm like, I really enjoyed those 3 movies I watched.
Yeah, I mean, we did have a little bit of beer the night before. I actually felt like $1,000,000, but I don't think it was working so well for you.
I didn't feel like $1,000,000. Hence the vibrating eye mask and 3 movies. All right.
It's a long flight to Germany, and I'm glad. Okay, so there's Eric. There's another blue wackadoo. Why don't you retweet? I'll retweet while you're doing that.
Oh, I can't. It's just real easy. Watch this.
I know. I just didn't want to make you do it because I know you never do. I retweet and heart everything.
Repost. There we go. Done. Blue wackadoo. Done. I got to start. I'm going to start posting some trades. I think Nikki Bat posts some trades here. And I was looking because Liz and I talked about joining Instagram and we talked about it, but I was looking like everyone's posting their trades here. They're not posting their trades on Instagram. What they're posting on Instagram, like Tony's posting pictures of his new sauna and Nikki's posting pictures of like him and some flowers. Like they're
Can we retract for something? Can we just go back? This is going to be a callback. Hopefully people were watching the live show this morning. Is Tony 12?
That he jumped over a fence?
Yes. What is he thinking?
When he started telling the story about climbing the fence to jump over the fence, I thought this is a recipe for disaster. He's lucky he didn't get one of those spikes up his butt.
Yeah, Jesus, Jenny.
No, that happened to my when my husband played college basketball. They were on traveling, playing another basketball team, and they went and like hopped a fence somewhere. And one of the kids landed, and they ended up in the emergency room. They got one of those like fence spikes up his butt, like into his skin, like punctured him. They had to go to the ER.
Okay, punctured. Can you just say punctured instead of
punctured? Had to go to the ER. So when he's hopping this fence that has these spiky top, it's a little concerning.
I mean, when you're over the age of 20, I don't think you should be hopping fences anymore. Just a personal opinion. But no, I mean, he's a kid at heart, and he was trying to go see his mom. That's a cute story. So for those of you, somebody asked, we're going to have to rewind. He went to go see his mom in the cemetery and tried to hop a fence because it was closed. Never found his mom.
And I will say, like, it was confusing because he kept talking about me leading up to his New York trip. I've got to go see my mom. I've got to go see my mom. I've got to go see my mom. And then in my mind, I was like, I thought she passed away. I know we did something when his mom passed away. And then he's like, I went to see my mom. And I was like, did I like lose my mind? But it was at the cemetery.
At the cemetery.
My
favorite is that Tom is trying to find the footage. He's like, I'll pay for the footage if anybody has it. I'm sure there's cameras everywhere.
Oh my goodness. But he's a good son for wanting to go visit his mother's grave that badly that he had to hop a fence.
That is, yes. She would be very proud. All right.
So,
two quick things. We're not on Twitter anymore. There are some earnings. One GTC got hit this morning as well.
Oh, okay. Let's take a look. Well, let's jump back in the platform. One GTC got hit. What would it be? We had, Liz, while you were gone, some GTCs were hit. So today, Enphase Energy, great. Okay. We bought these puts back at 50% profit.
It's already pushed out, so you don't have to push that out. I did that while you were
great. But while you were gone, we had other things close, like Upstart, Joby. And you want to know what? Remember that day we put on those buffers? Remember that day we had like the buffer in crowd, or we looked at the buffer in coin? Those all on Friday were 100% full profit. 100% full profit. Like, I know we didn't leave ours. We took them off for, $100 or $200 or whatever. Though some of those buffers we're collecting $2,000 for, they on Friday they were expiring. They were full profit. All those buffers that we looked at.
Well, they should be full profit at expiration. If they're expiring, that's when they're full profit. If not, they're if you put them on more durational with those, if they are at expiration, they will be full profit because that's typically how it goes. There's no.
But you remember how CRWV was one of those, and you remember how we set those. How you set those up? You set them up where you're buying the put spread.
Yep.
Okay. So you're buying a put spread here. I just pulled up like 127, 121. And if we want more room, sure.
Just make it symmetrical. So go, you know what I mean? Do
like $10 wide, 127.
$10 wide, $5 wide. Let's go there. $10. There you go. You got a $10 wide. So
$10 wide put spread. So
27.17.
we wouldn't have risk in CRWV until 117. And we look at the debit we're paying, 447. We find a call with 447 extrinsic value. So that's 145. So basically we're trying to cover this debit with extrinsic value. And then we sell that put.
What Jenny's doing, what we very quickly, because Tasty is, all Tasty viewers are pretty intelligent. You created the buffer trade here in under 30 seconds. If I would have set a timer, meaning, and there's a lot of ETFs and a lot of fund managers that are just doing the buffer trades. So the buffer is saying you will take a look at this on there. Yeah. You can make money 1-for-1 to the upside, not 1-for-1 to the upside. You are capped. You can make money to the upside as if you had that 145 covered call, and you do not actually get long the stock until 117. Now, what we were referencing saying that it's full profit because it was at expiration. So if you look here, your maximum profit is 1,800. That wouldn't be until 25 days.
No, and it's not even here. Like right here, there's really no profit.
No, I was just looking at max profit. You won't get the max profit until expiration.
And if it goes up all the way and is up like beyond this 145 strike at expiration, but a lot of those buffers we looked at that one day when we were going over the buffers ended up those stocks were up so much they were beyond that last leg of that buffer trade and were that, $1,700, $1,800, $2,000 profit. They made it all the way up. I know we put on a CRWV buffer and we ended up taking it off in like a few days for $100 or $200. But they did end up becoming like really nice trades for anyone that kept them.
I don't mind popping one of these back in. CoreWeave doesn't use as much buying power as, I know we were looking at Circle and CoreWeave for these because they were the ones we wanted to get in on, and it doesn't hold up. It's $2,000 in buying power. It's not as bad as Circle.
So it gets your break even, what did we say, 117. Well, so you can see the jump up, and that's we were probably putting them on in this range here.
Yeah.
Then it had that jump up. And we can, and I wasn't pulling up to say like, oh, we've got to get back into this buffer and CoreWeave. I just wanted to, it was Friday. Friday was the day they expired because we did them in the regular monthly. And it was just something that I thought I'd mention. Anyone who had those on and kept those on, they were full winners.
And so that's interesting because when you're looking at a buffer trade, I know like I said, we are traders and this account is traded in one lot, so you can't consider a $2,000 trade in CoreWeave the same as like the calendar that we'll have in there because we do have lots of different positions in there. But if you are an investor, this is going to sound crazy. We're traders, so we'll take it off for a small profit. I know we left it because we were in Germany. We wouldn't have held it that long if we weren't in Germany, right?
I don't know. It depends. Like I like being in CoreWeave, so I left mine. Like,
no, but hold on. Like what I was going to say is, if you're an investor or something that you want to get in the stock, put this on and walk away.
Right.
What's your worst case scenario? You're going to be long it at 117 or you have full profit. And a lot of times if you're not looking at it on a daily basis, my biggest downfall is over trading. Not over trading, but I like to actively manage. In the airplane, I opened up every single one of my 600 positions and adjusted them.
So, but you're right. If you want to be in the stock, you could throw these on and forget about them. And maybe it's something where you're like, oh, I want to get in it, but it's gone up so much. This is one of those. Oklo had such a run up.
Ajit in the chat was just like, Oklo is still hot.
Oh my gosh, Ajit. Like when it was down today, I was happy. I'm like, I want this thing down. My short calls now are the 130s. The calls I have against my stock are the 130s. I'm curious in the buffer trade how far and maybe the buffer trade makes sense here.
What did you ever do with your sons? Because he had the 80s.
I re-rolled his calls to the 95s. His call, and there was still $7. Like we rolled it, yesterday or Friday, I want to say. Maybe it's higher. Whatever call he has on Friday still had $7 in extrinsic value.
Wow. Okay, let's take a look at the buffer. So the buffer is buying a put spread. That's your buffer. That's where you won't get long the stock until. And then where you're going to create a covered call, we know how to do it synthetically by using that in the money put.
So here the 135, 120 takes your risk down to 120. And there's so much premium in these calls that you can go all the way up to the like 170. 170, Liz.
No, just keep an eye on the buying power. That's the one thing that I was going to say. Here, you're going to look at this. That's good. That's good. I like that buffer.
I mean, look at this. 35. So you're getting $3,500, and you would get into core weave or Oklo. You would get long Oklo at 120. You get long Oklo at 120, but you would have $3,500 in profit potential if it went up to 170.
So you know what's interesting about this, Jenny? And I'm just thinking about some people we met on the road too, because if you are long this stock, you don't have to use that in the money put. You're actually just synthetic. You'd be just selling the call. If you had 100 shares, you sell one call and you're buying that put debit spread as, kind of protection against your long stock.
Right. So to your point, like it's something if you have this stock, and I sell that 170 call against it, and then I use that credit, the $800 credit, to then buy this put spread to give me some protection. And we met a lot of people on this at this risk conference who were doing something like this, like buying a put spread and selling a call spread to cover it, to give themselves some protection. Because then if I go back to the analysis page, that's going to look the same. It's going to look exactly the same.
Identical, correct. When you've got that in there. And I did love the people who, before I left, I threw collars on all my stuff just because I was like, I don't know what's going to happen. I don't know how many beers I'm going to be drinking during market hours. I want to trade responsibly, right? When you're in Germany. Yeah. So I collared them. And then I love the people we talked about. It's like, just throw a put spread on because it's number one, it's cheaper, right? Because if you're buying a put spread, it's cheaper than just buying the put. You're not paying extrinsic value and you can still make money to the upside. I like this in Oklo.
I know. I mean, even if you
this is JD, my son's #1 winner on the year, and Aunt Jenny gave it to him for his 18th birthday.
You know what I was thinking about? I can't wait. Like, next birthday for Annabelle, next birthday for Lily is going to be their 18th birthday. We're going to open up trading accounts for them, and there's going to be new opportunity. It's not like some people will say like, oh man, I missed out. Like I missed out on this, or I missed out on that. Like the stock already ran up, I missed out. But there's always going to be opportunity. And when I know like JD's account is doing well, Logan, my son's account is doing well, and the girls are like, geez, we can't wait till we're 18 and we get our account, but there will still be opportunity for
because
you.
It's just cyclical. The world is round. I mean, so many people on the road are like, what are you going to talk about for an hour? You never know what the market is going to give you, right? So the market is like a toddler. You can't plan. You can't be like, okay, today we're going to look at energy stocks, because those might not be the hot stocks. Right now you've got nuclear and AI, right? And all the metals and miners are going through the roof. Those are the risers. But tomorrow it could be, your Bitcoins, your MSTRs, if Dan's right and you get that little bit of a reversal. So there is always opportunity, and it's always cyclical. Like it's always going to be something new.
Speaking of, I think those are all down today. So, we've got MSTR down. I want to take a look at.
Are you shocked at people that you can just get liquidated?
Yeah, I didn't know.
That's why I was like, are you telling me that the people went out there and sold this? He's like, no, they got liquidated.
I know we didn't have a lot of time with Dan. I didn't know what he was talking about, like longs getting liquidated.
Yeah, they got liquidated. I don't understand that, but that's what happened.
If you're buying it on margin, if you're like loading up on longs and going all in and you're really like margined. I say this whenever especially the young people, anyone new, understand the notional value. Like if you're getting into something and if you're willing to buy something or sell puts in something that you could take ownership in, understand the notional value and make sure you have enough cash to back that up. Like I always try to have enough cash to back up the notional value. Otherwise,
honestly, Jenny, we've gotten smarter over the years as a retail trader, right? So you want to make sure that you live to trade another day. You're not going to be taken out by margin.
Yeah, so let's talk about this. Like here's ETHA, ETH8. It moves with Ethereum. If I bought 100 shares of this, it's using $2,367. I know the notional value of this is $3,157. Sometimes you buy things and it's using even much less buying power, half of the notional value. So this is something I'm always aware of, like what's the notional value of this?
And only because we talked about it with a couple of people this week. Can you open up the November options in ETHA? Because we have a zebra in. This is a zebra, a zero extrinsic back ratio. We talked about this with some people when we were at the Oktoberfest. the guys from New York. And so what we were saying is it's a smart stock replacement, right? So now if it's a stock replacement and it's a bullish stock replacement and Ethereum's down, this should be down. That's exactly what it is. This is a synthetic stock replacement and we have a covered call in the nearer term against it. Whoa. What else do we have in there?
We have other stuff. I know in November, here's our Zebra, and you can see, we're down about $250 on it. We put this on when Ether was trading 35, and it makes sense. If we were long 100 shares of stock, that'd be down a little bit more.
Yeah. Yeah. But that is risk definition of its finest, though. You can only lose your debit you paid for it in there.
Right. The other
what else do we have in there?
I think that's a big lizard, and we have a GTC for that. So
okay,
GTC for that. So I don't think we need to worry about that. What I want to talk about is natural gas. We have 3 days to go. This is right, Liz. I mean, natural gas. Come on, natural gas.
So what do we want here? When you open this up, I want natural gas to end at 2.85. I want it to expire in 3 days. Wait, today is it'll be Thursday, right?
Right. It'll say 0. So Mondays, 3 days, Tuesdays, 2 days, Wednesdays, 1 day, Thursday. Yeah, Thursday. So we want this right here, pretty much. Like we locked in a profit. We locked in about 50 cents.
We locked in about $30 because we gave up some of it to put another one in. Okay.
To add this one, and the second one that we added on is what might possibly come in, and we'll make another $1,000 if we end at 2.85, and we're just going to let this go.
Can you do me a favor and go to the curve view so visually people can see what this looks like? So we wound up putting on butterflies. This has been on for 12 days. There you go.
I mean, we couldn't have I love our natural gas position right now, because
if you hover over right where it is, take it and go over the, I just want to see. So if we fast forward, let's say we fast forward 4 days and it is now Thursday at high noon, this position will make $730.
$730.
And we have zero, this is going to sound terrible when I say this. We have no additional risk. We have locked in a profit in this. So there's no scenario here where we can lose money.
No, we do to the downside. So then we have this little that we didn't, we eliminated.
Oh, is it broken? Did you have a broken wing? It's not an official butterfly?
And then here.
Oh, okay.
So then it can keep going down and go to 265, and there we can make $530. And then here at this 2.6 level, that's where our risk kicks in natural gas. So like barring any crazy move, as long as it stays above 2.6, we're good. I mean, in what scenario is natural gas down to 2.6 in 3 days? Possible.
Oh, no, Johnny. I'm a natural gas trader. It's like one of my biggest positions. It's a possibility.
Yeah.
It's a real possibility. I've seen it happen, and I feel like it does happen on expiration.
Well,
I was thinking, in my mind, we had no risk because I thought they were true butterflies instead of broken wing. This has a broken wing to it. I'm okay with our risk parameters, and we're right where we want it to be. I'm okay with it.
I mean, our risk on this trade is $470. You see $470.
It's defined risk. That is correct. So anywhere into, even if it goes into negative territory, our risk is $470.
Yeah. Now, I don't mind natural gas, and I'm very curious. So this table view, I'm very curious to see, okay, the October 28th natural gas is 310. So we talk about this. We love natural gas in the 2 handle. It makes it very easy to sell puts in here. So if this is expiring and we want new natural gas positions, we've got to go to the 36-day, which it's 310, 311.
Mm-hmm. And you see that these are all different trades, right? So each one of these has a different underlying, because you can see that last price there. That's what's different about the futures options.
So if we put something on here, like kind of how we started before, let me say if I go 295, 285, 265, and I'm breaking a wing here, doing this broken wing butterfly, we are taking in
$190.
$190, and our risk is 810.
Yes, because it's not a symmetrical butterfly. If you had it at the 275 level, it would be a symmetrical butterfly. I trade these a little bit differently in my account. I like to have the naked option and then buy the wing if and when it goes your way. If not,
that's why we couldn't ever turn it in. You could turn it into a symmetrical butterfly where then you have no risk if we're starting like this. If we're starting like this and we're taking $810 in and not 190, and we're having the risk of the naked option, then on an update, then we could easily turn it into a butterfly with no risk. But
You
we
can
can't
buy
when
the 2.75. We can't afford that in here. And to be honest with you, it's a big product. So this is a very, I want to say warning Will Robinson on this. Natural gas is a very large product and it has very large moves. Just a little FYI.
so. And there's not like, I know some people might think like, oh, when winter's coming and it's getting cold and natural gas will probably pop up. No, that's not true. Like it's not like, oh, winter's coming, people are going to be firing up their fireplace and using their natural gas. It doesn't work like that. Plenty of times we see natural gas going down when the cold weather's starting.
Correct.
It doesn't.
I've seen it all over the place. I've had amazing days in natural gas and I've had horrible days in natural gas. So just keep that in mind. But that's why in here, I like the risk definition here. I'm glad we looked at that visually. For some odd reason, I thought it was a symmetrical butterfly, but 470 in risk is not bad for our profit potential in the next 4 days. But this is something, because they are, given the nature of how it is, I don't want to close this until the end. Like,
oh God, I'm not touching what we have. I'm just wondering if we should put on a new natural gas in October.
Maybe
because like the short term is going to be gone this Thursday. So then we'll have something to work with in October.
I do think that if natural gas goes down, all of the, subsequent months do kind of follow suit. So they are correlated, just not the same product.
So should we wait until, but here's the thing, like, here's what I'll say about ours. Like right now with ours, which looks like crazy. Looks crazy.
That is like, you open that up, that makes my heart so happy, Jenny, because that's what mine looks like. Mine are like butterfly, 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 butterfly.
So if natural gas pops up, this isn't gonna make, if natural gas pops up above this isn't gonna make money, and we'll be like, oh darn, we didn't make money on this because natural gas popped up above 295. We didn't make money on this, and that way, if we put on a new October position now, even if we sell just a put spread and natural gas pops up, then we can at least say like, well, we didn't make what we thought on this, but at least we can take this trade off for a win.
Sure.
And I don't know if you want to just do a put spread.
I mean, honestly, we might as well just keep it super simple. You're right here, you're at the 30 delta. That's fine. You can do the 30 delta.
And that might even be how we started. And we might have started that way in natural gas and started with a put spread. And then when it popped up, turned that into that kind of broken wing butterfly.
We might have. So yeah, let's start with the put spread. I'm fine with that.
All right, this is simple put spread. Sell the 2.9, buy the 2.8. We're collecting $330. Max loss.
The risk definition at its finest. Third of the width. The TP would be so proud of you for a third of the width of this trade.
All right, now for our newer viewers, I'm going to push this. I'm going to say, okay, today's trades.
I already did end phase. Just push out natural gas.
Natural gas. I'm going to push it out to the follow page, and then all of our trades are on the follow page on our platform here.
Go ahead,
you can go to these people, follow. And you can see everybody here. If we click on Liz and Jenny, Liz and Jenny just did this, sold the vertical in natural gas, and it's very easy. Are we missing it? Are we missing the whole, oh yeah, then you click on it, and then if anyone wants to look at this trade, you can hit duplicate this trade. Any trade you place are your trades, right?
Yeah, nothing we do is a trade recommendation. Our ultimate goal is to, lead a horse to water. We want you to see natural gas. Like we're talking about natural gas. We want you to be like, oh, that makes me want to look at natural gas. Maybe I'm going to open it up and look at the November cycle. You can do whatever you want as long as you know the building blocks of how to trade. We're just here to be like, hey, we're trading natural gas.
So then it pulls the same trade right up, pulls it right up.
Yeah. Okay.
The follow page is pretty cool. Definitely. I know I am.
Look at that. I will like to say that natural gas, you notice it didn't nest under the same thing because they're two different cycles.
Right. So now we have two different positions, which is good. We don't want one to like mix up the other.
Yep.
As far as, any big movers while we were gone,
I woke you up. I woke Jenny up from her nap for this one.
Wake up, Jenny. Wake up. Intel's up $6. All right, so Intel, Liz, this has been, I've had 3 longs this year that I'm 3 for 3 on my longs. American Eagle, Intel, Oklo. My 3 My 3 stocks.
You're not 3 for 3. You're 3 for like 600 because I can give a lot of losses that you've had too. But yes, if you want to say 3 for 3, Godspeed.
Hey, those my Intel. I have more shares of Intel than anything else in my account, so I'll take the move.
Did you see Snap was up a lot this morning too?
Ooh, was it?
Yes, I thought you'd be excited about that. So
I don't know. No, this is no lie. This is no lie. Like I closed all my Snap on Friday.
You did?
Yeah. Because I was like, I'm tired of Snap. And it had run up. It had a run. On Friday, I was going through everything and Snap had quite a run up. So I was like, you know what? This Snap, like, I finally broke even in Snap since I got in here or whatever. I added here. And now I was back to making my money back in Snap. And I got out on Friday of all my Snap.
This is one of my like long-term positions only because
I mean, and I know it looks like a lot. It's 58 cents, but
it was a 15% move today.
But I got out of my Snap. I don't know why. Like for so long, Snap has really done nothing good for us.
I know.
But maybe this is just the start, Liz. Maybe just the start.
Who's to say? Who's to say? Okay, so then yeah, so Intel has given back a little bit of its gains because you can see it slid. It was up as high as what, 33?
30. Oh, let me go back to Intel.
33.
So we're never going to get to our actual content that we had for today, but that's
okay. No. I mean, we only have a minute or two left. We can. That is something, Jenny, that we will always have with us in our back pocket.
Yeah, sure. No problem. So the highest was 32.38. It's back down to 29. But and I asked TP about it, and TP said, you know, with NVIDIA behind it, I'm just staying long. And I think TP was on the same side.
You have got to go to Twitter. Mikey has lost his mind.
Let me go top down.
I think this is.
Uh-oh, look at this.
This is live footage of Jenny. Jenny seems to have a lot of Intel and fence climbing mishaps, trying to recall where there might be a fence like this at U of I. Good thing there were no cell phones when we were in college.
Do you see this, Liz?
Yes. Can you see it?
No. Oh, here we go. Latest. Okay. Yeah, that Mikey. That's exactly what I'm talking about.
I know. He's like, so that's what he said. He's like, Jenny seems to have a lot of intel on fence climbing mishaps.
Okay, so I don't know why, but I grew up where we had this fence and I hopped it quite a bit. I don't know why. If my dad would keep it padlocked because we had a pool in the backyard. So so many times I had to hop my fence in growing up.
Is that why you're scarred?
No kidding. My husband played college basketball. The basketball team was on the road, and they were in Orlando. So they were in Orlando playing, and they tried to go somewhere, wanted to get in a pool. They had to hop a fence, and one kid on the basketball team did this, poked a hole in his butt, and then they had to go wake up the coach. It was late at night. They had to go wake up the coach and say, "You've got to take us to the emergency room."
Okay, well, I'm glad it was just a puncture wound. That's what I needed you to say because I was like, oh, God. Okay, and then Frank Walsh did something from the chat.
From Andreas. Hi, how about a Nove 215 310 short strangle on Google? P.S. I am male. Last time you asked Andreas, Andrew in German. Greetings from Austria. Greetings.
Thank you. And I'm glad you clarified that. I really appreciate it. Andrew in German. Andreas.
I still have my German hat.
Oh, yeah, you do.
Or Bavarian. I don't know. You might wear hats like this in Austria. Austria, we love it there. Love it.
Oh, I did love Austria. It was one of my favorite places. Okay, so then let's take a look at this. Google, they're looking at November 21st, 215, 310 short strangle.
215, 310.
I've got the strikes up. It's in the November 21 cycle.
GOOGL. November's tough. Well, I mean, I'm not saying tough. It's just, for me, it's long. I'm still kind of sticking in the October.
Well, and another thing too is it's a short strangle. So, I have a hard time being completely neutral. Let's see where their strikes are though. They were 215, 310. So it's pretty neutral.
Yeah, right. It's pretty neutral.
You're going through earnings. You got to keep in mind that this cycle is going to continue to inflate. The premium in these options will continue to get higher. And when you're selling premium, you want the premium to get lower. So it can work, but it's like running in sand.
So 215, you're way down here. Not bad. I don't hate the put strike. Honestly, I don't hate the put strike. The call strike, Andreas, and I don't know if I'm pronouncing
Not
it.
even on the chart.
Call strike, not even on the chart. I'm going to tell you, when I sold those 100 calls in Oklo, when I sold those, I thought there's no way it's ever going through those 100 calls in Oklo, and now it's 136 or 130, whatever. I don't know if I'm ever selling a call again. Honest to God.
I mean, we say this all the time. You literally got on stage and said, I don't want to sell naked calls. And then you sold naked calls. You didn't sell naked calls. You sold calls against your stock. But that's different than selling naked calls. So
Yeah,
this, in
I'm
Google,
sticking
this
with
would
call
be a naked call. You don't have the stock position.
I'm sticking with call spreads, but that's even worse. You know what I'm sticking with call spreads. So instead of this 310 naked call, maybe I'd bring it in and do like the 300 310. Or 300, 350. I'm going to just, even if they're wider, I'm sticking with the call spread instead of the naked call. The market has been crazy, and these calls have been the problem.
The calls have been the problem, but that's why we invented the Jade Lizard, because years ago we were sick of being burned to the upside. And when VIX is low, that's typically what is happening, is the market is going straight up. Let's see where the VIX is. We've got 1 minute, and then we're already out of time.
Jeez. Okay, VIX, 1588.
1588. I mean, I'm surprised it's not lower.
I know. I was surprised. 1588. SPOO's up 6, and I expected it lower. So we had a little bit of it's a little bit of a pop today. Well, SPOOs were down 16 on the open, or down.
They were down. Yeah, they were down 16 on the open, and everything was down a little bit on the open, minus silver and gold.
You know what I want to do? And we were talking a little bit about hedging on Friday. What I want to do, which is going to take a while, because every position, like sometimes people will have a hedge in a position. I want to add up the amount of money that I've lost on hedges, whether they be delta busters or short calls or whatever. I want to add up the amount of money I lost on hedges and see what % of my yearly profits that is. I feel like that would be a good
and you did have TP on, and TP thinks hedge is a 4-letter word. He does. He's not a fan of hedging.
Right. Depends on the day.
Was he a hedge fan on Friday?
I don't know. I feel like it depends. I know he says hedge is a 4-letter word, but it should be. But my point is, like, I'm fine with hedging, and I do it, and I just want to see what % of the profits it is, and it shouldn't be too big of a %, right? I think that's like that. If people hedge, great, fine, but it shouldn't be too big of a % of your profits, and that's what I want to go back and do, because we have a trade that's kind of like a hedge trade, which we're taking a big hit in this SPY Delta Buster.
Anytime we put on a Delta Buster.
We're down 66,900%, Liz.
Can you we are done, but go up one. Snap, we're up 110%. We just looked at it. Let's see what our snap position is and maybe close it.
It's a long call.
Get rid of it, because it's up today.
Yeah.
Right?
We'll get rid of this snap call.
We're going to close on that. It's 11 o'clock. Jenny Andrews, fastest hour of the day, done and dusted.
Everybody have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. We'll see you tomorrow live from the SIBO.
See you tomorrow.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddy, Mikey Butler. Good morning, sir.
Good morning. How you doing?
Amazing. Amazing.
You brought us our first win.
I know. I was at the Bears game. It's magical.
It's quite something.
It's a stark switch from last year. The game that I went to was the Patriots game, the game before Eberflus got fired.
Yeah.
And the Bears lost like 10-3 or something. It was a despicable showing. It was just a disgusting, horrible game. To now, watching a good game, which I'm pumping the brakes. I'm not saying we're back. It was nice to see.
Yeah. I mean, multiple end zone interceptions for the other team, not us.
Yeah, no, that's great.
Yeah.
That's great. The offense moving. I mean, Caleb had like 300 yards before half. He had like 250.
A little Luther action. That was sick.
Yeah, it looked good.
Everything looked good.
My hopes, I'm not getting my hopes as high as I normally would because I know that things can switch on a dime.
Yeah. It is crazy to see Odunze is our clear wide receiver one. They are. Yeah. They're not running anything for DJ Moore.
DJ Moore plays in the
dust.
backfield. He
Yeah.
plays like running back. It's bizarre.
So yeah.
Yeah.
Good to see though.
Yes.
Nice dub, and helped that CeeDee Lamb was not playing. That might have changed the dynamic a little bit, but what are you gonna do?
How was your weekend?
It was good.
Yeah.
Went to Riot Fest.
Yes.
Saturday. That was fun.
See all those throwbacks.
Oh yeah. It was amazing people watching too.
Yeah, I'm sure.
It's just like anyone that's ever been to Hot Topic in the past 20 years, that's who was there. Okay. But yeah, saw Weezer, All Time Low, Throne, Guar. That was the most insane thing I've ever seen. We saw Dropkick Murphys. Had a couple corn dogs,
Corn dogs, really? That's what they got there?
That's my thing. Yeah.
That's a good.
Well, we also also had like a strip of restaurants.
Yeah.
We went to Quang Noodle. Had some chow mein chicken. I mean, I would have.
Even at a outside festival, you're eating noodles and hot broth. It's unbelievable. But your dedication to the bit is appreciated.
So yeah, it was good. Riot Fest, Bears game. Lovely day.
Yeah, it was good. Yeah, we got some sun. Played some golf. Fresh clubs.
Oh, you got them.
I got my clubs.
Oh yeah.
Yeah.
How do you like them?
Shout out to Tony.
Yeah.
Tony from Mexico.
How you liking them?
They're amazing. They're amazing.
I mean, I bet.
89, Glencoe.
Ooh.
Don't want to toot my own horn, but, it just looked real pure. Real pure.
Love to see it.
Yes.
You know what else is pure? This market rally.
Oh, yes. They were cheaper Friday. E-minis up 11 right now. If you saw them in the overnight session, it looked like you were going to get a little tiny pullback. We were down about 20, 25-ish at the lows. We got below 6,700. We got to 6,695, which is about 40 points from where we're trading right now. So we were down about 25, 30-ish in the overnight session. They have since scooped them, of course.
Naturally.
NASDAQ up 63 right now. You got the Dow up 10, basically unchanged. The Russell basically unchanged as well, but it was weaker this morning. Oil selling off a little bit, /CL 62.16, down 24 cents. Volatility futures, they have stayed pretty much flat for the last two sessions here. 1785, you got the VIX itself at 1585. Bonds moving, bonds down 9 ticks. They've reversed about half of their move on the whole rate cut situation. Gold and silver both absolutely skyrocketing. Gold's up $65, a little over 1.75%, 37.71. Silver almost doubling that move. Is at new highs here at 44.19, up $1.24. A huge move in the metals. Bitcoin going the opposite way of basically everything. Down $2,400 on futures. Spot is down $1,300. You got Ethereum as well, looking pretty weak here. Weird day, weird couple sessions that we've had here with crypto not kind of moving with the risk-on sentiment. You have gold and silver mooning as if we're, going to be, like apocalypse now type thing. Not apocalypse now, but the apocalypse is upon us.
And yet the equity market just continues to grind higher.
Yes. Bonds down, rates up. A little bit of a weird bifurcated market, as the pundits would say. A bifurcated market. Yes. But the move in the market isn't shocking when you have, Apple up $10 here. I mean, it's up $40, $50 in the span of a month or two. Tesla having a huge move. I mean, we've been talking about these two as kind of the catch-up trade. If you think, markets are going higher, these are two of the, biggest companies in the world that have not participated in that upside. On the flip side, you got like Microsoft down a handful. It rallied like $5 or $6 into the close on Friday. You have Nvidia basically unchanged. It's up $2 now. It was down, $1 or $2 earlier this morning. Amazon has been on the weaker side. Netflix is one that we've been pointing out that just like has not participated. So maybe those are where you find some new opportunities.
Yeah. How high can we go?
Yeah.
We're gonna find out.
Yeah.
But yeah, big move in Apple. That's a big reason why this market's green today. There's a lot of other, and Tesla. There's a lot of other stocks that are neutral or down. So I think that adds to why this market seems a little off today. I think there's a couple of single name stocks up 3-4% that are a huge chunk of E-minis and NASDAQ, and I think they're pulling them in that direction where the rest of the market feels like it should be weaker.
Yeah.
So yeah.
It's continuing more of that small mid cap on to Mag 7 on.
Yeah.
Like I was listening to the show earlier. They were talking about CrowdStrike down 10. You had Palantir was kind of weak this morning. So some of those stocks being rotated out of into your Apples and Teslas.
Indeed. I did make some trades this morning.
Nice.
So AMAT was an earnings trade gone wrong. I had the 190 call. Last week I sold the 200 strike against it into the big rally, and then we got a continued rally even more today. So that was a 71-cent net winner after being basically a full loser.
Take that money and run.
So yeah, that was a good example of sometimes just having an option that's left over works out with a reversal. AMD closed the 160, 175 diagonal spread I put on last week. That was a $100 quick winner.
Yeah, I've been looking at that one today too.
Yeah, and then I closed the package pairs trade. So I had the QQQ put diagonal spread and the IWM call diagonal spread. Put them on at the same time. Used the same expirations. I was long December, short October. IWM was a $320 winner. QQQ was a $180 loser. So the whole package was a $140 net winner. But that freed up a lot of capital because both of those were.
That was what, $2,000 total is what you put it. You had originally into that trade.
Yeah.
So, I mean, from like a capital standpoint, capital usage, pretty high return on capital, but also a way to get small with that pairs trade.
Yeah.
If you can't do the futures outright, and
one of them would hedge the other.
Yes, and you have that kind of variance baked into it, given that it's a diagonal spread, so you get a little bit of premium decay, you get that mulligan. So you probably could have made money on both potentially at some point, but you put it on as kind of a
And the reason why I took it off is because the QQQ one that was the loser, the short option lost almost all of its value, and the IWM winner was about to go completely in the money. So if those continued to go in that direction, I would make less going forward on IWM, and I would keep losing on the QQQ, and it could offset the net winner. So just had to think of it as a total package and closed both of them.
Yes.
But now this is the least amount of positions I've had on in a couple of months.
So if you got some trade ideas, throw them in the chat for us. I cleaned up a couple positions as well today. I rolled up a put in AVGO as part of my Iron Condor that is from earnings. The earnings where the stock just blew through the upside, so I'm still just managing that. We had a little bit of a pullback in AVGO this morning, so I rolled up the put using a little bit more buying power, but it's still within my comfortable range. And then in IBM, this was one we put on a week or two ago, I think it was. About a week. I mean, that stock looks a lot like a lot of the other stocks where it's just kind of a V bottom. And we caught that, took the money and run. It was a good one. Got earnings coming up, or at least projected to be in the middle of October. So maybe we'll look at a new trade at that point.
Yeah. But yeah, kind of a interesting market today.
Yeah.
But plenty of capital on the sidelines. If you have trade ideas, pop them in the YouTube chat. We're streaming live there.
Yes.
Just head over to Tasty Live. You'll see this video front and center. And you can throw it in there. I've got the newsletter, Cherry Picks newsletter, pinned to the top of the YouTube chat as well.
See some people calling out my 89 in the chat. Will have you know that, and I had all my friends text me and be like, "Oh, any gimmies?"
Oh my God!
I was like, you know what? Normal gimmies, okay? Normal gimmies, like inside the putting shaft. Yeah.
People always trying to
just bring me down.
Yeah.
Just trying to bring me down.
Let the man fly.
Yeah, just let me have my glory and support me, okay?
All right. Let's check out the YouTube chat here, see if we got any trade ideas. Are we shorting gold today or GLD?
God, this.
I mean, it feels correct.
Oh, no better time than now.
I mean, yeah.
It's at all-time highs.
It feels correct, but is it smart? I mean, these options are cheap.
Yeah.
The November at the money options to the downside.
I have a butterfly on broken wing butterfly in GLD, which is right at the money in GC. I put on that wide broken wing butterfly and then bought in the risk on it. So I now have the 3,800, 3,850, 3,900. I have that on for what do I have this on for? My order chains are all funky. See. So I did this. So I originally opened it for a 30-cent credit, and then I bought in the risk for a $2.70 debit. I did that on the 18th. So now I own this at like $2.50.
Cool.
The big wide butterfly marked at like $4.60, so I'm up about $200.
I just did a long-term put diagonal spread.
Ooh.
So I did
in the GC futures
in GLD.
GLD, okay.
So I bought the 345 December put, and I sold the 335 November put for $6.
Okay.
So 10-point wide diagonal for $6. If you get any sell-off here, it'll be a nice trade.
Yeah.
And plenty of time to manage that if I need to.
What a move.
I mean, you got it. You have to fade it, right? Just for like one day. Just give me a one-day pullback.
Yeah. It's a tough one.
But yeah, I mean, you gotta stay small and defined risk in there. into this crazy move.
For sure.
But yeah, I like the idea.
Mm-hmm.
Why not take the other side, see if you get a little pullback in the next week?
Yeah, this NVIDIA move just happened, and I don't know if something got announced or something. I'm sure. Or some sort of news. I know Micron has earnings middle of this week.
Yeah.
Up $4 and change. That stock's gone just parabolic.
Yeah, if you look at a 1 minute chart of Nvidia, it's quite silly.
Yeah, it went from 175 to 181. You know where it's trading right now. It's just a straight moonshot. Gotta have them, Mikey. Gotta have them.
Did they? Oh, OpenAI and NVIDIA announced strategic partnership.
There you go.
That was
$200 billion move.
Yeah. 10 gigawatts of NVIDIA systems.
There you go.
Part of the agreement, NVIDIA plans to invest up to $100 billion in OpenAI. Billion here, billion there, 100 billion here.
The numbers are just, you just add zeros.
Yeah.
Handful of years, we'll be talking trillion here, trillion there.
What a world.
Yeah.
So yeah, I'm short GLD. I like that idea, especially small defined risk, $600 in risk. If it keeps ripping, you're out maybe $100, $200 in the near term. Kava finally rallying. Wow. The forgotten darling.
Is there anything to do here?
It is nice to see it's bouncing off the lows. These are the scary charts though, where it's just like down, 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 gap down, 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 gap down.
Yeah.
What are we doing here? I guess, I mean, you could.
IV's like not that high though. Yeah. I mean, there's not much IV anywhere.
Yeah.
Let alone Kava.
Yeah. The markets are sleeping.
Even for a diagonal, it's tough because you got November's $5 wide strikes. So you got to go like kind of at the money. Do like the 65, 70 for $5. And this is one where, you know, we usually try to get to pay less than the width of the spread, because in a tail type event to the upside, this is, you essentially have a long call spread with a little bit of an extra duration on it. So if you are buying it for more, and by more I mean like a couple dollars more than the width, you would have potentially risk to the upside. We could show this here. Like, so if you did this 2.5 point wide, which is really more like a synthetic calendar spread, you have a tiny bit of upside, you know, gamma exposure and intrinsic value. But if you had something crazy happen where the stock goes to 85 or 90, something like that, you're actually going to lose money even though you're long delta here. So we try to make it the setup so that we are paying less than the width of the spread between them. Now at 508, 8 cents above, there's really no situation where I have risked the upside, because this long option is always going to hold some sort of extrinsic value, even if we're at 100 and 100 stock price and 25 days out, you're going to have 10 cents, 20 cents, 50 cents in value in this long option. So there's going to be something there.
Yeah. Agreed.
We'll take
anywhere near the width, ideally well under the width. And that's easier to do if your short option and long option have further time frames.
Yeah, like Mike's GLD.
Yeah.
Where it's, what was it, 10 points wide?
Yeah, for $6.
Yeah.
I'm long December, short November. So it's easier to get that premium in the short option to reduce the cost.
Yeah.
Scalp corn. It's bouncing off the 50-day SMA again.
Oh, we got wheat. We got long wheat last week. That one's not looking good.
Nope.
What are we thinking here?
Scalp corn.
I don't know if I can scalp it, but I could do a put spread of some sort.
Yeah. If the idea is get long, all these 3 contracts settle to the Z, 4-day, 32-day, 60-day. So sets up nice for cost basis reduction if you're doing like a diagonal spread or whatever, calendar spread. Maybe that's what I'll do. A little calendar spread. These are cheap.
I might just do like an at the money put spread. 32 days out, 415, 405.
There you go.
Let's see if I can get
I'm gonna do a little diagonal spread. 420, 430 for $300.
I'm gonna let that one sit, the put spread. I'm not gonna chase that one. I stink with the Ags. I feel like they're
watching you.
Yeah, the Ags are the new Natty Gas. I haven't even looked at Natty Gas in some time. It's a little lower. Do we do something in oil?
Oil at 62.
Mm-hmm. I have the at the money.
Could get long. Yeah, I've just been buying the micro crude contract when it gets near 60.
Uh-huh.
So you could do that.
I think I might just close this call spread. I have an iron condor here that I did at 30 cents, so that would leave me with just the put side at 25 cents. It's basically a scratch trade right now, but you know, I've taken 80, 90 cents out of this one. Let's do that.
Why not?
There we go. All right.
I was just filled on a micro crude contract at 62.11.
There we go.
Slinging them. But yeah, we've had a nice solid sell-off from 64-ish. So let's get a pop. Let's get a little pop back there. Let's see. Got hammered in the MZS November soybean. Does it settle at the end of every day? How do I roll this to December? How do you play this if you bought it at 1050? MZS.
This is a micro.
Micro soybeans.
So if you just have the long futures, they're really, I mean, your role is just selling out of the current and buying the next expiration. So if you look at soybeans with options, there's a little bit more nuance to rolling because we want to roll based on delta because the products themselves have different prices. So the front contract, this X contract, is trading at 10.10. The next expiration is at 10.29 and so on and so forth. And so when you're rolling, you can't just roll the same strike because the products are different prices. So we go to the delta. So if you have a 30 delta put, we roll to a 30 delta put in that next expiration. But for the outright futures or micro futures, it would just be simply closing your current position and buying the next contract.
Yeah. But
and that cost is that it's baked into, that spread is baked in.
Yeah. But this contract, the X contract, still has another month before you need to do anything. So
I believe it's cash. It has to be cash.
The micros, yeah.
Yeah.
The regulars, I think, are not, but the micros are typically cash settled. So yeah, bad to see this move, of course, but you still have a month before you need to roll to the next contract if you want to roll. And this one doesn't have any options. The micro doesn't have any options that you can do anything with it. So if you're trying to hedge, you'd kind of have to like get long the micro and then sell a spread in the regular contract, but it's not something I love to do into this sell-off here.
No.
Ooh. Baba, appreciate the thought, sending bagels to the bat, but I don't think we're going to get any.
Ah. I thought we were talking Baba, the stock. Up $30, $40, and everything just looks like this.
Yeah. Every single chart is just a straight up line. It's nuts. Aklo, 150, 160, call ratio.
October.
150, 160.
I mean, on these, you're really just selling the naked calls. So
Yeah.
these spreads are it's just too tight. Like if I was trading in here, I would want it to be like
150, 180.
Yeah, or if you want to be at the 160 strike, like the 140, 160.
Mm-hmm.
This sort of trade, you know, if the stock drifts higher, you can make money on this. You're not going to make anything on the 150, 160 spread with, you know, 130% implied volatility.
Yeah, and with an $800 credit, I would rather just sell the 175 call for $800. Just because it really is more of a bearish play the more credit you have.
Mm-hmm.
The more credit you give up to create a wider ratio, the more bullish it is.
Yeah.
So, but yeah, plenty of premium here, plenty of risk though as well. The pricing is what it is for a reason. So, yeah.
Should I
little
step
scary
in front
for
of
me.
this train?
What are you thinking?
I'm thinking of doing a like wide. So I'm looking at a wide call ratio / broken wing butterfly here. We've done these like in like Core Weave and some of the other high flying stocks to play into this high implied volatility. So the thinking being that you do this at basically a scratch. And the hope is that either implied volatility comes down or the stock chops around for, you know, a week or 2 weeks, where this long option is going to hold a lot of its value, and the tail options are kind of, you know, are going to decay quicker. And so you're making money on this option holding its value, and your short premium position losing a lot of value. And so I'm looking at the 155 strike. I'm going to do this 155. So this would be 140, 155, 185, broken wing butterfly. So this is 15 by 30. So you're using about $1,500 in buying power. Maybe I can get filled on dollar. Let's see if I can get $1 for this.
I just closed my Core Weave call diagonal spread.
Is that mooning too? That's got to be with the NVIDIA.
Yeah, it's just, I mean, it just mooned 8 points.
All right, I got 95 cents in this Oclo position. All right.
Lovely. Yeah, Core Weave just mooned.
Yeah, $150 on this. We're in silly season.
It's just banana land. It's crazy. The show started and it was at 125 and now it's at 133. This whole move was in the last 15, 20 minutes. But yeah, close that. We put that on last week.
$55 out of that.
There you go.
And just from Friday.
Yeah.
Did we do that on the No, we did in the morning. Oh, when we hosted Fast Market.
Yeah. Fast Market strikes again.
Yeah.
I think I got to close this NVIDIA trade too. So I had this NVIDIA 190 call left over from earnings. I had the 190 calendar for earnings, I believe, and then rolled to the 195 diagonal for $1 credit, and now I just have the long option left over with 25 days to go. NVIDIA's mooning, and now it's up 40 cents. Close. Let's see if we can get it here. There you go. So that's a 45-cent net winner after it was actually a pretty big loser at one point. So yeah, 48-cent net winner. Post that to the follow page. This is craziness.
Yeah. Up only, baby.
Up only. But it's great. I'm very happy to get risk off, especially in some of these. I had multiple trades that came back today that were net winners.
Yeah,
that were both losers.
Like, it's a blessing. You take the money and run and pat yourself on the back. It's good.
Pat the market on the back.
Yeah.
Okay. Wow. Let's see. NVIDIA. Google sliding finally. Downside play.
Wow. Down $2. What do we do? It's at 3 trillion, right? Yeah, it's just over 3 trillion.
Google, huh?
Volatility is just nowhere to be found. You have to be, you're selling basically at the money call spreads in some of these stocks to get. Let's do that.
It's pure euphoria.
Do the 260, 270 in October.
There you have it.
Yeah.
All
right, 255.
There you go. A little downside action.
Who would ever do a downside trade? Who?
I mean, it's crazy. I mean, this is just.
I was not. It's gone further than I thought it was going to go.
Yeah.
I was bullish.
By a long shot.
You're very bullish on the year. We've gone well past that.
I mean, we're hitting 7,000
tomorrow.
Next month.
Yeah, next month. Why not? 10% a month.
This month.
Come on.
Why not?
Yeah.
I mean, it's just a crazy ride around.
Yes.
Can you please discuss how to defend a losing diagonal? Sure. So.
Do they have a trade or just in general?
Well, we can look at my wheat diagonal.
Sure.
I've got the 560, 580.
October, November.
October, November. So generally speaking, the value in the trade, it comes from the long option. So if you're going to make an adjustment on a losing diagonal spread, it's usually going to come from the short option that loses all of its value. So for this position, my 580 October short option is trading for 30 cents. I sold it for $1.25. So I've captured a lot of that value. It's no longer really hedging me. The problem with this position, though, is that the long option is far out of the money as well. So what I could do is consider rolling the short option down to like a calendar spread setup.
Mm-hmm.
In this case, it would only give me 40 cents to remove that upside profit potential, so I'm not going to do that. But that's pretty much it. Like when you have a debit diagonal that goes wrong and your long option is losing money, your short option, what you can do is roll it out in time or roll it down to a calendar spread.
Yeah.
Like that's pretty much it. Yeah. Or you just buy back the short option or let it expire and you wait. So that's why I like to say you get what you pay for, especially with long option trades. The further out in time you can push that option, the more wiggle room you have in terms of time that can get you a recovery. So like the two trades I closed earlier, the AMAT trade, if you look at a chart of AMAT, I was feeling that whole sell-off. It was that big gap down sell-off from earnings, but my long option still had 60, 70 days left to expiration, so I just left it, and then we got fortunate with this huge reversal.
Yeah.
Same thing with NVIDIA. NVIDIA, I bought the 190 calendar spread when it was up at like where it is now. And then we saw that big sell-off from 183 down to 160 almost, but my long option still had 30 days, 40 days left, so I just left it, and now we get this boost. So
but the hedge is in on entry.
The hedge is in on entry.
And that's it. You're selling premium to help finance the buying of that long option. And so you are directional. So at some point you have to be directional to some degree to make money on that trade. And if you're wrong on the direction, you've defined your risk on entry. It's like, the same thing as selling an at the money short put spread and the stock, drops 10, 20%. You hedged on entry, and instead of losing, $1,000, you're out $200 or whatever the case may be.
Mm-hmm. Oracle up 17.
Why not? They're all up. They're everything 17, 20, 50, 100.
It's insane. Smack Lovin', happy Monday indeed. Monday Night Football.
Yes.
Got a banger of a game tonight.
Banger of a game.
EA launching Battlefront 6 on October 10th.
I like Battlefront. The last one was not good.
Maybe they'll do a full turnaround.
Yeah.
I was told that Borderlands is basically like Destiny now, which intrigues me.
Ooh.
Very intriguing. Gotta check it out. thinking about a call vertical, long November 170s and short the October 180s, so a diagonal spread.
Yep. Sorry, I have the 170, 180.
170, 180.
Okay.
So the nice thing about long 170 November is you're in the earnings cycle, which means your long option will hold on to extrinsic value quite nicely up until that point. So going back to the, like, what happens if you put this on and it goes wrong, you could roll down the 180 down to the 177.5 or even the 175 and create a more narrow diagonal spread. Or if EA continues dropping, you could turn it into a calendar spread, but you have to get paid to keep the short option on. That's the biggest key. But at the very least, you're reducing your cost base on your long option up front by 20% with the sale of the short. So, and you could always roll into the earnings cycle too. So with this specific setup, if let's say EA chops around here and sells off, you lose all the value in your short 180 call, you could roll that into the weekly cycle when the earnings are going to happen. So that would be the October 31st cycle. And you can pick up another $1 or $1.50, and that would be just fine. Because currently the 180 strike in the 39-day is trading for $2.20 more than the short option now. So let's just assume you could roll into that cycle, pick up another $1, and keep the same structure of this trade on. You gonna do it?
Oh, I kind of like it.
Cool.
October 10th. So this is right around the release date, and the stock's not up today. It's about $10 off the highs, so it's not exactly at the lows either. Oh, we can do it. We'll take a little stab at this one. 770 maybe. Can't even look at the markets. Markets aren't horrible. 775. I'm not going higher. There we go.
You're in.
Got price improved. 772.
Battlefront is in.
Cool. E-mini's up 23 high of the session.
Yeah.
67.45.
I mean, I have no words.
Bears are dead.
The Bears are
not the Chicago Bears.
The Bears
the
are
stock
running.
market Bears are dead.
They are running.
Been murdered.
It's like the Lion King scene with the valley, where they're sprinting through the valley. That's what I'm envisioning.
Yeah.
Would you consider opposing ratio spreads on Kava? So the premium is nice in November, but that's where earnings are. So that's the only issue I have with that.
You want to do like a double ratio?
Yeah, I think it's. I would assume like a 60-55 and like 75-80, something like that. But it's going to be a very slow mover until the announcement.
Yeah.
So that's my only thing. But other than that, I like the idea. It's just getting little kickers in there with the ratio spreads. A little batwing action. But yeah, you're just going to have to wait a long time to get that middle premium out.
Yeah. I might even lean towards doing it in October. 60 days is a lot of time.
Yeah.
It's a lot of time. With Ivy rank at 15, it's not high.
Fade Ilia and go long M6A and MCD, micro CAD, and micro Aussie dollar.
I haven't even looked at my FX positions. Let's see what we got here. They're coming back.
I don't have any positions on.
Really? You should get short some euro.
Maybe I will.
Bouncing a little bit today.
Short euro and long Aussie dollar.
You're going to do it in the FX products?
Yeah.
Okay.
I like using the FX.
Yeah, it's pretty clean.
M6A, M6, MCD.
So that's Aussie Canadian.
M6A. Well, I think they're talking about just doing it separately.
Yeah.
So long M6A and long MCD.
Oh, long them both. Okay.
Yeah. So long MCD would be short dollar CAD. in the popular USD list.
Yeah. You'd be short. You'd be short both.
Yeah.
Or you'd be long Aussie USD, short USD CAD.
Yes. I don't know.
I'm already long Aussie USD.
I can get on that. I'll do that. Long Aussie USD.
Yep.
In. And then M6 MCD. So the dollar CAD. We would get short this into this rip.
Mm-hmm.
We'll do that. We'll bite. We'll have Glenn on tomorrow. Nope. Wednesday.
Wednesday, yes.
And he will guide us to the promised land of information.
I don't like being short the U.S. dollar here, but
it's all right.
I can do it for the people.
I mean, it's a little hedge.
Yeah. It's a little something.
'Cause, yeah, I'm long the dollar, Aussie dollar, and then I'm short the. I guess I'm double short here. Ugh. Can you please review your IonQ trade as it continues to rally? Review of trade management would be great to learn from.
Yeah, so I have a call ratio spread here. I have the other one in that's been a face ripper is BE, Bloom Energy, which is in kind of the same situation here. Looks a lot further than it is. I mean, my break even here is like 77-ish, which seems insane, but the stock is up $40, $50 in the time frame that I put this on. But the same sort of adjustments can be done in IonQ. Currently, we're right at where I kind of want the stock to be because we have this $5 wide call spread here. So this $5 wide call spread is probably marked at like $3. Yeah, $3.20. So this will go to $5. So I have my break-even point is $5 above my short. So that puts me at 75. And I did this trade at 73 cents. So my break-even here is 75.73. If the stock continues to rally, I can sell out a put. So synthetically, my risk here is this call. So I have an extra put that I can sell. So I could sell something like the 60 strike or the 65 strike, depending on where the stock goes. Ideally, we chop around here, and I don't have to make this adjustment because I can't sell puts into this sort of move. But if it keeps going, I'm going to have to reduce my delta exposure. But this is really, I mean, like right now it's a losing trade, but this is exactly where you want the trade. This is my risk profile in this position. This is exactly where you want it to be.
Yeah.
Yeah, you want it $1 lower, $2 lower, and you're in your max profit zone. So there's a lot of time left on this trade.
Mm-hmm. When you say you buy back the risk to create a risk-free butterfly, what position are you starting with? We are starting with a broken wing butterfly.
Yeah.
In that case.
Or ratio spread.
Or ratio spread.
Yeah. So this is one that I had in CCJ. I closed out one. Oh, sorry. I closed out one from the September expiration, but my entry was the 85-90 call ratio spread. So when we put that on, so the stock was trading about 80 and change. It's now at 85. Sorry.
The Three Musketeers.
The Three Musketeers.
It's just the flash of the Three Musketeers.
So when I bought the 95 call, the stock was trading at 78.50. So the stock went down about $2 in that time frame. So I bought that call at 53 cents. So it left me with this butterfly. I put the trade on for a 17-cent credit originally. I bought in the risk for 53 cents. So I have this butterfly on for 40 cents, like for a very small debit on this trade. Had I been able to buy it for less than the initial credit, I would own this 5x5 butterfly for free. And so that is the adjustment. It's just buying in the risk. The other positive part of this, besides just taking risk off the table and giving yourself a free shot, is that you free up all that capital. So instead of using $1,000 in buying power, I've now got this free shot, and I could use that $1,000 somewhere else.
Yep. So yeah, if you start with a ratio spread, and it's 10 points wide, and let's say you collect $200 up front, if you can buy a wing that creates a symmetrical butterfly, and you can buy that wing for less than $200, you would end up with a risk-free butterfly because you would have a symmetrical butterfly on for a credit. So the same thing applies for a broke wing butterfly. But when you start with a broke wing butterfly, let's say you have a 10-point wide debit spread, you're financing that with a 20-point wide credit spread. Or if you have a 5-point wide debit spread, you have a 10-point wide credit spread. So your credit spread portion is always going to be wider. Same story applies, though. If you can move that leg, the long leg that you've purchased that's furthest out of the money, if you can move that in and create symmetry between both spreads, and you can do that for a debit that is less than the initial credit you collect up front, that's how you leg into a free butterfly. So if you go to tastylive.com and you just search for free butterfly or risk-free butterfly, you will see plenty of videos where we walk through the exact process of doing that. Or you can check out our GC futures follow trades. I've exclusively been doing call broke wing butterflies. I'm getting blown out on this one, but the other ones have been good, where I've collected $250, rolled into a free butterfly for $100, that kind of stuff. How about a 195-200 call ratio spread in MU? So going way outside of that range, 190-200. I definitely like it better. I like it better than the previous one.
Yeah. Yeah. I set these up like, if you're collecting $1 or $2 credit, I'd almost just sell the call.
Yeah.
Sell the call and do a 10 delta put against it, and lean a little bit short, and you'll get your extra $1 from selling the put.
Mm-hmm.
I know it gives you downside risk, but I just, with the ratio spreads, you want, you're playing for upside.
Indeed.
Your short delta is like, if you're selling this at $2, then you're short delta. This one is omnidirectional.
Mm-hmm. When you guys say you've defined the risk, do you ever take off the trade, like people that take it off at 50% loss? Not really. So like if we have a debit spread or even a credit spread that's in the money, if your risk is truly defined and you are realizing losses on that position, the more loss you see, the more your reward to risk ratio going forward skews in your favor. So like if I have a 5-point wide spread with $250 of profit and $250 of loss potential, just like a risk one to make one type spread, if I start losing and I see that $5 max width spread is trading for $4.95 or $4.90, I have 10 cents left to lose and I have $500 left to make. So like there's just no reason to close that position. If you're at 50% loss, you're just going to be closing losers a lot more frequently. So that's another issue of, especially with defined risk trades. Undefined risk trades, I get it if you want to avoid rolling and get rid of the risk. But defined risk trades, truly defined risk trades, like the more losers you're closing, where the risk is defined anyways, it's gonna eat away at your profit potential for sure. Because like what I showed here with the 2 trades we just closed, like this is a crazy market, but if I would have closed those for losers, I would have never got that value back.
Yeah, and it all comes with order entry because you're comfortable with the risk on entry. You have defined risk. You have to be like if you're not comfortable with that amount, then you have to adjust the trade so that you are comfortable with it. Like if you're not comfortable losing $1,000, do it $5 wide.
Yeah.
Like obviously you're going to give up the upside and you're not going to have as much profit potential in raw dollar value, but you're defining the risk to what you're comfortable with. If you can't hold positions, this is a hard game to play.
Yeah.
I mean, you don't have those opportunities like your AMATs or your NVIDIAs or whatever. and you're already out for $200 or $300 loss instead of the $100 win, and that's a $400 spread.
Yeah.
That's more than, you know, your spread on just defining the risk on entry and allowing you to hold it.
Yep. Strangle on Oracle.
TikTok news. What's the
25 days, 273.50. Okay, so you're still out of the money, so that's good.
Yeah. Do we have a
270 put is trading at a third of the cost of your short call.
Yeah, you're short 25 delta.
Mm-hmm. So yeah, if you want to hedge your delta a little bit, you could move that 270 up to like the 285 or 290. You just go straight to the expected move. Nothing wrong with that. Still gives you plenty of room. I like that adjustment with 25 days because 25 days isn't that much time. So even if Oracle drops back down to 300 or whatever, that the 290 you roll into or 285 you roll into, if those are the selections you make, they're not going to explode because time will help decay the value regardless. So yeah, I like rolling the 270 up to like 280 or in between 280 and 290 there. You can go higher if you want to hedge further, but the closer you are to the short call, the more it'll feel like a straddle, and you'll have to wait closer to expiration. AI Super Glide on.
Oh yeah,
it's insane. How do we feel about going long on Big Bear AI? I think Gus just wrote a piece on that. On the News and Insight. Yeah.
Really?
I'll put it in the YouTube chat.
I don't need any more of these. I've got INQ. I've got Bloom Energy. I'm locked and loaded in these stocks.
These stocks. Yeah, I mean this is nutty. Going long on Big Bear AI Jan 2027.
No, Jan 2027. The nukes can hit by then.
Yeah, they certainly could. Yeah. But yeah, I mean, like, I don't hate it.
Yeah.
If you want to play for, if you're trying to play for like a 6 to 20 move, then sure, go for it. These options aren't that expensive.
It's not going to move all that much. Like you think it's going to move a ton, but the market is, you're buying. If you're buying calls, I assume you should play for that, the 6 to 20. If you're playing for 6 to 10, and you buy the 7s or the 5s, you make nothing because the implied volatility here, you're buying 100% implied volatility. So you are buying. You can think of it like buying an expected move of the stock going to 0 or going to 12. Like that's your break even.
Yeah. Yep.
So you need the stock to be 15 or 20 to make money buying these options.
Mm-hmm. That's the end of the chat.
Cool.
Could get out of here a couple minutes early.
Sure. Why not?
So yeah, we've got Micron earnings tomorrow after the close.
Yes.
So we will definitely be trading that as it moons along with its chippy counterparts.
Mm-hmm.
What a day. But yeah, if you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. That rhymed. Just realizing that. We should throw in a song. Yeah, what a day. What a day.
Wild day.
We'll be back same time, same place, 11 a.m. Central tomorrow. Sign up for the cherry picks in the YouTube chat.
Yes.
tastylive.com/newsletters. That comes out tomorrow.
Yes.
Check out the News and Insights tab. We always have new and interesting articles going up there. Like I said, Gus wrote a Big Bear AI piece. We got a Micron earnings trade in there, or earnings preview, I should say. So yeah, tastylive.com/news and insights. Check it out. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. Enjoy the rest of your day. We'll see you then.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. Here with my co-host Errol today. We got a exciting little start to the week for us here. We got all kinds of movers. We're going to talk about one in some detail today. But first, Errol, how we feeling? What's going on in your world?
Feeling good. It's Monday. It's another all-time highs. I know we're going to get into what we're going to get into today, but another all-time high. Feels like another day. Same day, different day. But I don't know. It was a good weekend, though. It's not super cold just yet, so the vibes are there. We're running on vibes right now. But no, it was nothing significant this week. And I think I had seen a crazy fumble rip from the Bears. Pretty crazy fumble that I haven't seen in a while. Then he went out of bounds. That stood out this weekend. I think the Eagles game stood out. But other than that, I gotta admit, it was a nice rip. So, no, I mean, a couple exciting games this weekend. Other than that, the usual. Got done what I needed to get done, but glad to be back. What about you?
Yeah, definitely a good weekend of football. Yesterday was crazy, and in particular, there was all kinds of blocked field goals rounding out the noon slate. It kind of turned into insanity there on Red Zone for the last 6 last minute of like 6 games at once. It was awesome. But yeah, I'm doing good. I was a little under the weather this weekend. I do have a cough drop in my mouth right now to break the fourth wall here. So if you guys happen to see me put in another one at any point, mind your business. All right, I don't want to be out here on air coughing. But yeah, no, I'm doing pretty well myself. I'm trying to decide, as I mentioned to you earlier today, whether I should be excited about Rivian or if this thing is just going to tear my heart out again. I think it's going to be the latter, but we will certainly see.
Oh yeah.
And yeah, as Andres points out so well in chat, SPY is just nonstop ripping. Are we at 666 on SPY? What's that mean for the market? Somebody tell me. I don't know.
Can't stop, won't stop. Flower power. You literally took it off of my lips.
It's true.
Can't stop, won't
Can't stop, won't stop. Let's just let's go to 700.
Yeah.
Why not?
We're powering through. No, I mean today it was one of those days to where it's not that it's a surprise, but it's always impressive every time we see these highs to a new highs.
Woof, I do have a Zin in also, but that's sort of secondary. I have proof that these are Hall's cough drops right here. I have my spare on deck. But anyway, yeah, we can dive straight into today's topic, which is Big Bear AI. For those unfamiliar, if that's possible, this has been pretty much the number one stock in the news cycle the past few days. I guess I wouldn't say number one outright, but pretty dang close to number one stock in the news cycle as of late. Big Bear AI, they're up 90% in the last month, 340% on the year. We're going to talk about why, whether we think that that's sustainable, maybe give some opinions at the end, and I am even eyeing trade on this one, but we'll talk about that when we get there. So,
I love it. Go ahead.
No, you go.
No, I was going to say I'm excited about the AI. It just feels like it's never ending, but I say that condescendingly. But I'm always exciting. There's always something new, and we got Big Bear.
Yeah, it does. It does certainly start to feel like you just say AI and your share price increases by 10%, and I'm growing tired of that as well. I do think there's definitely some legitimate applications for Big Bear, but I think that this is a very similar situation to Surf Air Mobility, a stock which we discussed some weeks ago, where I don't know if this actually has the legs to go the distance right now, but we'll get into that. First and foremost, what is Big Bear AI? We're founded in 2022. They provide, this is quoting from their website, and this, I know it sounds super buzzwordy. I apologize. That's how these people do it. They provide AI decision and intelligence solutions to companies in various sectors. The catalyst behind their most recent rally is their Enhanced Passenger Processing, or EPP, system for airports. Their EPP specifically is called Veriscan. It was recently implemented at Customs in the Nashville International Airport. Adoption has been going well there, and the reason for this recent rally is people's belief that system is going to become much more widespread. So we'll see if that actually comes to fruition or not, but should it become a sweeping integration across all domestic airports and potentially even international airports beyond that, then yes, this could be a company that has a lot of promise, but it's a big if, considering that it's only in one right now. Initial comments?
Right off the last bullet point, I mean, anything with AI, it's getting very redundant, but it's always exciting because you never know what could be produced out of it. But one thing that I get right away is just looking at the international airports. I think regulation right away. I'm excited to see what else we're going to get into about Big Bear, but regulation and how is that going to impact business?
Yeah, and I will say from a traveler perspective, I am excited about this, whether it's Big Bear or another company that comes in and injects AI into customs to speed up that process. I'm thrilled about it. If you've ever taken an international flight and had to go through customs, it sucks. It really, really sucks. Even coming back, I'm fortunate I have global entry now, so I kind of just breeze through customs on the U.S. side. But when you go to other countries, it's terrible. You gotta book it off that plane to beat your entire plane full of people to the customs line, and you gotta wait and wait and wait while a real person checks all your information and does all the stuff. So if we could develop an AI that's sophisticated enough to do that, I would be pleased.
Yeah.
Also, I will vote this. I don't care at all about my facial information. I think it's out there. I don't they have the thing at the airport with the cameras now. Typically, that's becoming a wider spread
Let me just
thing.
unlock my iPhone real quick.
Yeah, exactly. Now they have the thing where, when you first go through TSA at the airport, there's often a facial scanner there, and you can opt out. And I see people opt out. And I understand the privacy concerns for why, but you're standing in an airport which has cameras. Airports probably have fewer cameras than a casino and a bank, and that is about it. Like, airports are camera places. If anybody wants your information, also just everywhere you walk is a freaking surveillance state in this stage of the world. People have your face. I promise people have your face. So as long as I got it anyway, let's use that sucker. Make my life easier. All right, continuing. Price action wise, here's a good look at the chart, at least thus far in 2025 and dating back to last year. It was trading below $1.50 as recently as last November, and has climbed over $10 and then over $8 in the 2 subsequent rallies. And we are currently in the middle of one. This screenshot is a couple hours old at this point. I'm not sure if Big Bear has moved a few cents in either direction.
We'll check it out after this.
Yeah, we'll have a look after, but pretty good synopsis here. And yeah, but what you will notice is that when this thing has rallied in the past, it has a real tough time sustaining those rallies.
Yeah.
So
maybe this time's different, you know? Maybe this time was a lot of the rumors around what was gonna be. Maybe this time it's it.
Yeah, and I mean every stock that starts as a penny must have a few tests before it eventually breaks out. But this is one that has been thrown around a lot in the stock twits and Wall Street bets of the world. I actually saw after the announcement that they were going to integrate the Big Bear technology in the Nashville airport, stock twits mentions of Big Bear went up 145% in the following 24 hours. So this is a very, very public, very, very retail stock.
Yeah. No, I mean, from the technical perspective here, even though it's at its highs, it's a pretty cheap company. I mean, you're still getting some pretty good value. I mean, it hasn't really, really taken off just yet, even though it's looking like it's trading at its highs. So it'd be exciting to see what it's looking like when we hop into the platform. But it's been around. It's trying to make some moves. It's trying to get noticed.
Yes,
Big Bear,
definitely.
yeah, hang in there.
But yeah, that leads us to the next slide, which is that this is a crazy retail versus institutional, pros versus Joes, whatever vernacular you want to use type of spot. Retail investors love this thing. They keep propping it up. All the rallies have been caused by retail. The fundamentals, however, do not nearly align with that growth. And as such, institutions and analysts find themselves bearish on this a little bit more. In their Q2 earnings report this year, which just came out in August, about 45 days ago now, they posted an 18% year-over-year decrease in revenue and a 1,400% year-over-year decrease in earnings per share. I know year-over-year metrics for EPS are kind of unconventional, but I wanted to highlight this. A year ago in their Q2 earnings report, they reported a loss of 5 cents per share. This time around, it was 71 cents per share that they lost. They also cut their full-year revenue guidance by 25% from 140 to 160 million down to 160 to 180 down to 125 to 140, and they withdrew their full-year EBITDA guidance entirely. So, analysts believe that the current fair value for BBAI is about $5.80, which is roughly 20% below their current price. But there are situations like this with, take Palantir, where things can trade outside of their fundamentals and grow for a long, long time before it ever sneaks up on them.
Right.
But Palantir is also kind of a fringe case in that regard. I'm sure I couldn't name how many penny stocks have fizzled out, even just in the last year.
Yeah. No, I mean, definitely lots of penny stocks, but I mean, with the AI tag alongside Big Bear and them heading into that space, I think for your average penny stock, and I mean, it depends what you classify as a penny stock. Some will classify it $0 to $1. Some will classify it $1 to $10. Really, just depends.
I throw around penny stock for under $10.
Okay, cool.
Is how I tend to.
Yeah, and I forget what the statistic is, but I think like 80-something% of penny stocks eventually go bankrupt. But this is an AI stock. This is an AI penny stock. This is an AI stock that actually solves a real issue. Someone mentioned, Flower Power mentioned, depends if the company needs to do an offering that sure slows things down. That's really true. That's a very common thing that happens between stocks trading between $1 and $10. If I was an investor, like one of the shareholders, as in like I have a stake in the company, those are actually the individuals with the cheaper underlyings that I watch out for. Because once it gets to 10, 12, 13, sometimes they're like, okay, I sat through all that risk. I'm taking some of my earnings, and they may or may not do another offering, whatever the case is. But I love me some AI and some cheaper underlyings as we get into this.
Yes, and since it has come up, the offering thing is a very real concern with this stock. We're going to talk about it later when we get into the bullish factors, but Big Bear is very much entertaining issuing 65 million new shares.
Okay, I'm gonna give them the benefit of the doubt. I know sometimes with so this is just completely different, and I'm excited to see how this pans out because, again, it's AI related. But just hearing that dilution right off the bat for a cheaper underlying gets me like, are you guys playing games behind the scenes? Like, are you guys trying to dilute because you don't actually believe in the company? Maybe you guys foresee some things that aren't going to go through, trying to take advantage of that at more expensive prices right now. Is that what's going to happen? Or do you have our best interest in mind? You never really know.
You never know.
But valid point.
Yes, and their stated reason for the dilution is just to raise capital, but I think that's what you would say no matter what, even if we are in one of the situations that you're talking about here.
Yeah. Big Deal was asking what's a penny stock. Right now, we're classifying it between $1 and $10. Can we agree on that?
I would say under $10 broadly.
Under $10.
If something under $1.
Okay.
That's obviously fine.
So Big Deal, maybe under $5 fee, but here we're going to represent that as 1 to 10.
Yeah, I tend to throw around penny in terms of under $10. I think between like 10 and 25, things tend to become low float. Of course, float, you're talking about shares in circulation, and it becomes a broader issue. But yeah, I say penny if it's a single digit dollar amount. I think it's a penny stock.
Once you start trading them fractions, Big Deal, that's how you know you're in the wrong area. Once you start seeing 0.0006, and you could buy 100,000 shares, that's how you know. That's a penny stock.
Yes, that's true.
Cool.
But yeah, moving forward. So let's talk. I don't know why my slides aren't updating over here. There we go. Let's talk bullish factors.
Okay.
So we got. There's 4 main bullish factors here. Continued integration of AI systems in airports. That's just what we talked about, the thing in Nashville, if that can become more widespread. Ability to land contracts with the U.S. Department of Defense. They are in touch with the Department of Defense and have been in the running for a few contracts, but have yet to land a real cataclysmic one. Expansion into logistics and international markets. That obviously makes sense. Diversify your product offerings, diversify your market. That's pretty textbook business, but it's can they do it or not? And then most notably, there's 28% short interest on the stock, which is starting to form a recipe for a short squeeze, especially because the people who are responsible for most of the short squeezes in recent history are the ones that are propping this up also. So that's our bullish factors. Where do you stand? Which is the most, which stands out the most?
This is getting good. This is getting good. That short interest is really interesting, especially combining that or acknowledging the thought that they may also have an offering where they may sell more shares, dilute the stock a little bit more. And then at the same time, we see that there's a short interest. There's a 28% short interest, which seems kind of high. So if they are issuing new shares, my question then is, if they have conversations around that, when is that going to be? I start to think it's a little suspicious when they start having those conversations with such a high short interest, especially at price levels that the stock doesn't typically trade at. That's when I'm like, okay, you guys know your stock doesn't typically trade at $8, $10. Now you're wanting to have an offering, maybe sell some shares on the inside. Like, the price point isn't here too often. Are you taking advantage of that? I don't know. I think
short
interest is
perhaps
interesting.
Is there a contrarian angle to be had at all?
Absolutely.
That they want more, and so they would like the shares to be cheaper so that they can load more of their own stock while they have the chance? I mean, I suppose that there's that also is an angle that somebody could present. I mean, it's psychological stuff that we're talking about
it is,
in that regard.
It is, and to the point that you just brought up, which I think is a great point to emphasize on, I was looking at it more from a short-term perspective. Diluting the shares might hurt in the short term, but I mean, from a long-term perspective, if they want more cash, they have these plans and the shareholders believe in them and, they want to raise more capital, absolutely. That's probably the game plan to get out of that penny stock territory.
Oh, absolutely. And it would all just come down to how well you can deploy that capital. I feel like if you issue 65 million new shares right now, you're kind of putting yourself in a do or die situation where you have that capital, and if you allocate it correctly, things can work out. But if not, I don't think anybody's giving you any more. So it puts you in a tough spot. 100%. Scotty, in response to your question, how did you ID this stock to highlight? That's a good question. Honestly, just because I thought it sounded kind of fun. It's a trending topic. It's a penny stock that might have some upside. It's
pretty active.
Hotly debated right now. I don't know.
It's trading 80 million shares today, so it's very, very active right now.
Yeah, incredibly active. Just sounded like fun. That's like the reasoning for 90 to 95% of the things that we cover on this show. Is just it sounded like fun. Anyway, all right, let's keep it moving.
I like it.
Bearish factors. Declining top-line growth. That's the earnings numbers that I alluded to earlier. They have been getting worse. Weakening contract timing from government clients. They've gotten some government contracts to this point, but the issue that they're having is in very, very broad strokes that they got a big batch of government contracts, and now they've started to become spread out, and so they're not able to source enough capital at once from those government contracts. Risk of dilution, as we've alluded to a few times here, they've expressed interest in issuing 65 million new shares to raise capital, and then also valuation risk, which is what we talked about earlier. The fair price for this seems to be about 20% lower than where it is right now, but I think that the fair price for like Palantir, like I mentioned earlier, is probably about 75% lower than where it is right now, and the market just does not care if it believes in your future. So there certainly is a case where the valuation risk doesn't mean anything. It's just a matter of how long can you trade ahead of your fundamentals, which, as we've seen, can go for a long time.
Yeah, and 1,000%. Great point. 100% too, because I even think here, I was thinking, okay, we got NVIDIA, we got Palantir. It's cool to see Big Bear entering this space, but unlike NVIDIA and Palantir, Big Bear isn't profitable yet. But Tesla was making a ton of gains before it was technically profitable.
Oh, yeah.
Right, so we've seen these companies run unprofitably to the upside for, extended periods of times. The market can stay irrational longer than you can stay solvent. Is that the saying? I believe Warren Buffett?
I think that's right.
But 1,000%. So, even though the fundamentals or things look sus, at the end of the day, the price action is going to tell you what the true story is, because even if it does have good fundamentals, if it's trading at $3, or even if it has bad fundamentals, if it's trading at $20 or $30 in a month or two from now, we just care about the risk profile at the end of the day.
Well, yeah, perception is reality, and so in an
We're running on vibes.
Yeah, in an efficient market, if the perception is that this stock has the legs to be worth what it's worth, then that is the reality.
I completely agree. Yeah. And there's conversations I go back and forth all day. I even think if a stock spikes $10 for no reason, I believe in that moment, for that short amount of time that it spiked, that was the correct valuation, even though it only lasted maybe 10 minutes. Always new information coming left and right into the market that we can't even see. So everything's priced perfectly.
Yeah, and so this could, this very well could be a Palantir situation where it's able to trade ahead of its fundamentals for years and years, or it very well could be a Surfair Mobility situation where we get a giant run-up and then it goes out of the news cycle and things settle back down a little bit. And to Surfair's credit, they're still up something like 400% this year. Okay. But it's just not they had climbed as high as over $10 at one point and have now just settled down in the 4 range. Yeah. And that very well could be what we see with Big Bear AI here, especially if analysts are correct in their sentiment that this thing is overpriced.
Yeah. I like it. I like it.
Anyway, that's what I got. Oh, wait, no, I don't. I got one more.
Here we go.
Synopsis. Bring it all together here. This is just your textbook example of AI-driven hype that is flanked by real-world performance risk. As I just alluded to, works for Palantir, sometimes doesn't work for companies like Surfair, although Surfair still up largely. It's really hard to source AI companies that went to $2 and then failed, so Surfair is the best example I could come up with. The rally's powered by small wins, high potential upside, and sustained revenue and contract expansion are critical for Big Bear. I keep wanting to say Black Bear, because that's a real type of bear.
The diner?
But instead we're talking about a Big Bear. Is it a diner?
There's a Black Bear Diner. Somebody back me up on that, right? I know Black Bear Diner is like a direct competitor to, we were just talking about it the other day, that the diner changed up the marketing.
Cracker Barrel?
Cracker Barrel. Black Bear Diner is like cousins, literally, to Cracker Barrel. Same exact.
Interesting.
Same exact industry.
I've never heard of it, so maybe they need to change their logo.
They need to do something else.
Is there anything that Black Bear Diner has been doing for 50 years that they can abandon right now and get in the news cycle?
They can. No. They should have called out, what's it called? Again, what is the other company called?
Cracker Barrel?
Cracker Barrel, bro. Good Lord.
This guy.
They could have done some type of marketing with Cracker Barrel. I think they could have taken advantage of that. But, some people like to stay on the sidelines. They don't like to get into the weeds and all the toxicity that goes on with the marketing. Some people rather stay quiet and eat their popcorn. But no, Black Bear's been quiet.
Yeah.
I almost said Big Bear.
It is Big Bear.
Big Bear. Black Bear. Right.
We're all confused.
Yeah.
Big Bear, the stock we're talking about right now, very real chance it's a vaporware illusion that cannot translate into sustained and predictable earnings. There's also an equally very real chance that this thing could be the airport technology of the future and takes off and becomes a top 100 company someday. Yeah. It's a very interesting spot for the company. Interested to hear some thoughts from chat. Black Bear Diner is all over the West Coast.
So I was born and raised in Colorado. That's where it was at when I learned what Black Bear was. What kind of bear is the best?
That's an Office reference. I'm supposed to say. I don't know. I forget. It's the episode where Jim is impersonating Dwight, and he sits down across from him and he says, "Question: which type of bear is best?" And then as Dwight starts speaking, he's like, "Wrong. Black bear." I think that's the line.
My answer was going to be black bear.
Objectively, I think polar bears are probably the best. I mean, polar bears, they hunt humans. They're some dogs, polar bears.
Yeah. No, I'm going to go brown bear, actually.
Brown bear? Oh, and those things are little.
They are.
You and I could fight a brown bear. No, we could not. But, yeah, polar bears, scary bears.
Yeah, I'm going black bear. Gus is going polar bear.
Polar bears are vicious, man.
No, they are. Why
are you looking at me like you're judging me?
No. I'm not. Polar bears.
This is a good take.
Polar bears are the bears that I learned in elementary school growing up that will literally rip your face off. They're the ones that look nice, cute, and cuddly, and white, and nice. And no, don't get close to it. That thing will be.
They say, what's the saying? If it's black, stay back. If it's brown, lay down. If it's white, good night. That's what they say.
Oh. So if it's white, you ain't even got a chance. Koala bear. Koala bears are freaky.
Thank you, Andres. I'm happy I landed on that correctly. I'm quite proficient in The Office. I would have been sad if I let that one slip. Koala bear has entered the chat. I didn't even consider koalas and pandas exotic bears. Any thoughts?
I think pandas are pretty fire.
This is what a bear market means, right? It's when we.
This might.
It's when the bears change pecking order in the bear chart.
This might be the indication of the bear market.
Yeah. So my favorite stock in the bear market is probably a polar bear. However, I mean, I don't know. You know, pandas are kind of fire. Just eat some
agree.
bamboo, sleep, maybe roll down a hill or something.
I almost said Panda Express. What's the movie with the panda? The animated movie?
Kung Fu Panda.
Kung Fu Panda. Panda Express. No, grew a huge liking to pandas.
That's fair. You were thinking the right Chinese panda.
Exactly.
I see what happened. Kung Fu Panda is a banger. I haven't seen that in a while.
It's one of the goated movies. It's one of those I watch back and I forget how amazing of a movie it is. Lastly, I'm going to put on top of the movies Nemo and Cars, just top 2 animated movies. Toy Story
got to be in the equation. I don't disagree with the take.
Toy Story.
I think those are both elite.
There's a lot of Toy Stories.
Well, I think Toy Story 3 is the best one.
Toy Story, just the storyline in general? Or is there a specific Toy Story movie?
I think Toy Story 1 is the most iconic. I mean, that's the first ever fully digitally animated. But I think Toy Story 3 is the best narratively.
I hate admitting this, but I barely got to watch the Toy Stories growing up, and I barely got to watch them in order. It was like the one series that I didn't really get into. I have no idea why. But Shrek is also a lot more funnier than I thought. If you go back and watch it as an adult, you will find how many hidden jokes they have in there for the adults that you can pick up on or recognize as a young buck. So
yeah, they definitely do a good job of that. Yeah, Toy Story was good. I remember seeing Toy Story 3 at a drive-in movie theater. Actually, it stands out to me in that regard. Yeah,
I never was a big fan of the drive-in theaters. I think they're like they can be cute and like aesthetic depending on the vibe that you're looking for, but. Practicality-wise, I don't think they're very practical.
It is a practicality element.
Them,
yeah, I remember there was lots of mosquitoes when we went to the drive-in. And
that was with mosquitoes down in Texas or what?
No, that was in Ohio at that time.
Okay.
But yeah, it was a logistical issue. We were in a truck bed just with a bunch of mosquitoes.
Oh, got the truck bed.
You know,
that's where the SUV come in clutch. I think.
That's good. Well, I don't know. Then you just trap a bunch of mosquitoes.
That's valid. We can go ahead and jump over to the platform here. We'll do a little tour to market, see what's going on over here.
And yes, big deal. You're right. Koalas do have chlamydia. I
did not know that.
You can't pick up a koala bear, Errol. You get chlamydia.
I had no idea. And I'm glad I was.
There's an Australian survival tip for you if you ever find yourself in that neck of the woods. Yeah, can't touch the koalas.
That's very interesting.
And they're very cute and non-threatening.
The first
it makes you want to pick them up.
That started spreading that. I got some questions. So QQQ, we sold an out of the money call spread. We gapped up and we're ripping higher. On the day. And then we got SPY sold an out of the money call spread there. 25 days left till expiration on both of these contracts. I would be really surprised if we didn't get a pullback within the next 25 days. But at the same time, if there's a market that's going to do that, it's this one, especially with Big Bear AI coming out with their big news. And then we got UNH.
Every time we go on air, you must have another short position on SPY, Errol.
Why
do you keep doing this?
Wait. I could have swore this position's been on.
Has it been on?
Yeah.
I'm not sure. I thought this was a new one. I thought last time you were accused in NASDAQ and how we've repositioned into SPY.
Maybe that was that one. Maybe that was that one. One thing I will say is look. Getting long at these levels is like
that's totally valid. You'll catch it one of these times, and it'll be magnificent.
100%.
When it happens.
All right, guys, it's a $5 wide, 25 days left till expiration, and 660 contract. We got like $250 worth of risk on the position. Not too bad, but completely. We got QQQ, SPY, UNH. UNH popped off a little bit. What was it last week? I think the news was with Warren Buffett.
Oh, you're defined risk on UNH? Coward.
I am defined risk on UNH. Yo, we have been dipping a little bit, right? We were gonna go do. We were looking at some calls, some naked calls. That's where I was leaning. Even debated on a zebra to the upside. What you got on there right now? Just naked calls.
Yeah, I mean, I have one naked call because I'm not a madman, and it was a lot of premium.
Oh yeah, but my defined risk. Yeah.
Well, this thing could go to infinity. You know?
Valid.
What if?
We don't want to cap the risk on this one. I agree. So I opened up the platform this morning, and I seen someone make a post about UNH. I wasn't even in the market, and they were on their story talking about I made great investment decisions the last few years. Like these are people that are not in the market at all. So I'm like, Yo, did UNH pop off even more over the weekend? Because more people are talking about UNH. They're not even really in the market. So I opened the platform. I'm still pretty much break even on it. I'm up like 20, 30 bucks. I'm like, okay, we haven't gone anywhere. But if we continue to pull back, it'll give us another opportunity to add a little bit more to the position. But that's where we're at.
Yeah, that's true. I'm hoping selfishly that we do not pull back on that. It seems like, I mean, it went
got
up.
a lot of time on those to cook, right?
Yeah. This is June 2026. So I'm close to a year on those. I mean, 9 months, I suppose. But we got up and tested this 360 level on UNH. I have just dove back to 340, but taking a nice bounce up today. It seems like maybe that 360 to 335 rundown was about all that it needed.
Yeah.
And perhaps we're about to, make a move to. Am I allowed to say higher highs? I don't think I am because it's still so far down. Local. We're gonna make our way to some local maxima. How about that? How about some mathematical terminology for you?
Go ahead and define local maximum for us, please, Gus.
I'm on
Go ahead and use that in a sentence, please.
Local maxima?
No, I'm just kidding.
Oh, it's like I just used it in a sentence. First of all, second,
joking.
It's the local maximum. There you go.
Define local maximum.
Find it. Academic weapon, they call me. I'm on the Peace Guy Gus bus. Hell yeah, Wolf. Let's go. Peace Guy.
Oh, the Peace Guy.
Peace Guy to the moon.
I said the Peace Guy. I was like, what are we making peace of? For real? All right, Peace Guy. What do we got going on with Paramount over here?
Yeah,
Paramount dipping on the day, but we're rallying back.
Yeah, keeps on chugging. Slight move down today. But yeah, I'm in Peace Guy for the haul at this point. This is like I'll revisit this in June is sort of how I'm choosing to attack this. I want to let them get 2 2026 earnings calls in.
Yeah.
And then I will reevaluate kind of what I want to do with that position. But yeah, cruising.
Yeah, no, that's how you do it. See you next year.
Set and forget. Quite literally, except I never forget. I check it every single day.
Uber is ripping right now. Uber at all-time highs. Getting long at all-time highs is just crazy. Soul Train, and if you want to do that for me. But let's zoom out a little bit.
Please put on an Uber position. Let me see
Let's zoom out a little bit.
What's the reason?
What is the reason?
They just doing good? I mean, is this some fugazi reason? I'd love to get short, but I got to know if this is substantiated or not.
Buy, go up, sell, go down, bro. That simple.
Well, so you mean it go up right now?
No, it went up because there was buyers, and if it goes down, it's because there were sellers.
Is that why?
It has to be. No, I don't know.
Oh, so it's like when people put in a bid for like a higher price, it goes up?
Well, there is somebody that's left getting nothing. So, sometimes.
It's a game of winners and losers that we play.
No, just checking out what the Uber news was. Let's see if we have it over here. U.S. stock we left, S&P 500 top and bottom performing. You were touching on...
Accompanied by a trading volume. Has settled a lawsuit for $200 million over its 2019 IPO, which claimed misleading statements about profitability and safety risks, raising concerns about governance. They beat a lawsuit.
Dang.
So you mean to tell me that this lawsuit was hanging over them so bad that it justifies...
You know what that I mean,
like a 8% move?
It kind of sounds like... because the shareholders are... I mean, we're at all-time highs. If you bought below all-time highs, you're in the money. You're making money. I just wonder where that lawsuit came from and who it was from. I'm curious.
I'm getting short.
I'm really curious to see.
I'm sold.
Who that lawsuit was from and why. Was it somebody that was a shareholder from the beginning from IPO and was like waiting to sue them once they were profitable and he knew they could get paid? Like what, where did that come from?
That is a good point. I mean, the lawsuit is from 2019.
Right.
To my knowledge. So they sued right around the time of IPO.
Yeah.
I don't know. Let's see here. Let's go. When is their next earnings?
So we got earnings October 30th.
October 30.
Just about 30 days away. I'm going to let it go until earnings. Maybe we get a little bit more pumped up IV within the next few weeks.
I'm trying to decide if I want to get like short within that time frame and take earnings out of the equation, or if I think that there's no way that earnings could possibly continue to substantiate this growth and that would send them down, and if I actually want to be long through earnings.
A directional trade is always a possibility. You don't got to worry about any type of vol crush through earnings.
Yeah, but then it's like, well, in the scenario I'm describing where I think that earnings underwhelms, I do think that there would be a run up before earnings. Then I'm left sweating that out. I don't know if I want things to expire the week before necessarily.
Right.
But the $92 dip, good news in lift, overall growth going higher, says Soul Train. Me, I shouldn't be short. Am I obligated to be contrarian to the only opinion that I have?
No, I'm going to debate this zebra to the downside. I mean, we barely got any extrinsic value on it.
Maybe I could break out the old-fashioned Mike Butler double doink on this one. Go like
double doink, double dip.
The double doink. It's where you take a shorter dated expiration where you need, in broad strokes, a shorter dated expiration where you need a move one direction, and then a longer dated expiration on the same stock where you need to move the other direction.
Okay. A double doink.
Yeah, double doink. I don't think I'm gonna get that sophisticated.
So right here, I was looking at the zebra. One of the reasons why the zebra is really nice, if you guys aren't familiar with it, I know Liz and Jenny kind of pioneered it. Right now, theoretically, we could get on 93 short deltas on Uber. That's going to take about $1,000 worth of buying power. So every dollar move, we will make or lose about $93 to $94. We can round up. We'll go to $94. And that's only taking about $1 worth of buying power. So, I mean, if this rips $5, right, you make $500. If it's $10, you make $1,000. You got $1,000 worth of risk. If right here at the spot price, we wanted to buy $1,000, what is Uber trading for right now? $100. If we wanted to buy 100 shares of Uber, that's going to be about 10 grand. So it's about 10% of the capital requirement to get directional. And it's just a way to get some synthetic directional exposure in the market. But that's always an option, especially with we got earnings. You kind of done with the Uber trade over there?
Yeah, I'm trying to get a fill right now.
Okay. The double doink is where you hit two parts of the crossbar.
Yes, the name for the double doink trade is very much inspired by the double doinks in the NFL. All right, yeah, I've just gotten short
was thinking
Uber.
Soccer.
Oh,
crossbar.
No, yeah, double doink. It's like I think it's a Chris Collinsworth term, but yeah, some years ago there was might have been the Bears.
It started
actually.
in Chicago.
Yeah, I was gonna say it is a Bears thing. Yeah, where can I get a name on that kicker? Was it Cairo Santos or is it pre-Cairo Santos? Is it
it wasn't Cairo. Cody Parker.
Yeah, Cody Parker had a game-winning field goal lined up, and he kicked it, and it hit the left crossbar, and then the bottom crossbar, and then it missed. And then Chris Collinsworth was like, "It's a double doink," and then that's stuck since then. So yeah.
Oh yeah, the double doink.
Double doink.
Yeah.
Or did it go in? Somebody tell me if it went in. I'm speaking out of my ass here.
It did not go in.
Okay,
It broke our hearts.
Okay, I'm good. I know.
I'm still healing from it.
I know what's up. I can remember the Bears fans like hating that kicker, but I didn't know if I was off base there.
I think the lawsuit was Uber's algo. Uber's algo was price gouging the drivers? Interesting. Not surprised.
I think that might be a different lawsuit, though. I want to say that's a 2017 lawsuit, and I happen to know that offhand because I recently made a TikTok on Uber. I could be speaking out of turn there, but I think that there was a 2017 lawsuit where Travis Kalanick had to leave the company, and that was the price gouging one, and then this one has something to do with their IPO, but maybe I'm mistaken. In any case, I have gotten short. I went October 3rd, so just 11 DTE. I'm going to take that earnings all the way out of the equation and just try to play for a $1 down move. I am short the 100 call, long the 101. So defined risk, that was $52 a premium for $44 of buying power.
Nice.
So I'm content with that ratio.
Nice. Soul Train, Uber position is on, so there we go.
Drin, okay, first, Soul Train, I apologize for getting opposite your Uber position. This is incredibly short, just trying to catch the little tiny pullback that I think we're going to see here. And Drin, with some insider info, I'm an Uber driver on the side and business is way slower, for sure. That's good intel. I used to drive for DoorDash. I respect it. Anonymous Josh makes an appearance.
What are some of the cities that get the most traffic for Uber?
I mean, I would imagine it's just correlated with population.
Right, of course. So, I mean, right off the bat, I think Chicago could land in the top 5.
Oh, certainly, yeah. I mean, I would imagine it's, New York, Chicago, L.A.
And then also, I think,
Houston.
Super cold over here during the winter. Does that drop off?
Let me take a sidebar on that comment here for a second. When I first moved up here this past winter in February, I had an Uber driver, one of my first nights here. I don't remember what I was doing, but I expressed that I was new to the city. And I said, "Oh man, I bet driving for you is a lot easier in the winter or I bet driving for you is a lot harder in the winter because more people drive. I would bet that more people walk during the summer and it lightens up." And he said, "Oh no, the roads actually get way busier during the summer." And I thought that sounded paradoxical and backwards. And having been here through a summer, he was totally lying. That's just like not true at all. It is so much. There's so many less cars on the road in the summer.
Maybe he didn't understand you.
Maybe.
Yeah.
I mean, we had no language barrier. It was it was just an American dude.
Okay.
Yeah. So I don't know. We have different experiences there. Maybe it's just different areas, or he sees more because he drives for Uber and he has some kind of inflated. I don't know.
So
but
you took it from O'Hare to the city.
No,
you took it from Midway.
No, I was going from somewhere in the city to somewhere in the city.
Okay.
I think I was actually going to hang out with Ivan.
Maybe he stays in the neighborhood that he's in. I don't know.
Yeah,
I don't know geographic wise. I don't know.
I don't know. Really threw me off. But it sounded backwards when he said it, but I was like, this guy drives in Chicago for a living. I trust his judgment. And then I got to the summer and I was like, that guy was so full of shit. He didn't know
taking anybody's opinion again.
Yeah, exactly. Lyft was on the news. California has made some changes to the law where insurance has become cheaper. That's interesting. Vegas gets a ton of Uber business. That I can believe. That was my other sort of angle of thinking, is that I bet that there's some super duper car dependent cities that are lower in population but still shoot up those ranks. Like I would bet that Dallas is high on the Uber list just because it's highly car dependent. Houston is both car dependent and gigantic, so I know they're on there. The Uber in Colorado, I'm not sure if there's more drivers.
Where you at in Colorado? I was born and raised in the Springs. So it's like the spring. Have you ever been to Colorado?
I have, yeah.
You've been to Denver, south of Denver at all?
Yeah, I mean, I was just in Denver in March.
So Colorado Springs, I grew up. It's not like it's so weird. It's massive, but the downtown isn't super large, but it's such a, by land mass, large. I wouldn't even call it a city, really. I don't know what to call it, but it is a large, I wouldn't even call it a town because it's a lot bigger than a town, but anyways, down from around those parts. Not super populated with like a metropolitan, but it kind of feels like there'd still be a lot of Uber business going on down there too. So curious about those.
Big deal here. A lot of college students doing DoorDash.
Did DoorDash come from a college student?
Maybe.
I could have swore.
Yeah. I have heard that. It's like it was a cookie place. They wanted some cookies sometime and they couldn't get cookies, and then they were like, "Let us deliver your cookies," and then it spawned out of that, something like that.
I mean, that's usually how a lot of innovation.
Yeah.
Right. They run into a problem like, I hate that I'm running into this. Let's do X, Y, and Z.
Drin says he's in Springs. Yeah, I recall.
Small world.
I recall. I can remember my dad saying that while he was in college, which is early '90s. Yeah, that's right. That there was a company like that just existed on Ohio State's campus that was in the phone book, but it was just DoorDash. You would call this third-party company and say, "Hey, I want food from here. Bring it to this address," and then they would go do it and bring it to you and bill you, and I'm sure put some kind of upcharge on there or whatever. But the idea has been out there. Yeah, it was just that DoorDash was the first people to really go after it. And I don't even think DoorDash was the first mover. This is a baseless claim, but I really feel like Grubhub was the first mover and that they have just lost
I think it was.
the race.
I think Grubhub was.
But Grubhub feels like the early stage of that to me.
Yeah, DoorDash definitely capitalized and took advantage of Grubhub's initial move in the marketplace because they capitalized and came out as a top dog long term. Colorado Springs is only 470,000 people. I live in Manila.
Oh, David, you're in Manila? That's interesting.
14 million.
Yeah, it's one of the densest cities in the world.
Good Lord. I was like, I think you put an extra one. 14 million.
Manila.
Gold,
it's a crazy town.
Absolutely ripping to the highs. Metals nonstop. Let us know if you're trading anything like gold or silver. I know these metal products have been no joke either, just like the silver market, making another high here. DoorDash hired up a ton of Tesla people when they were scaling. I think I heard something along the lines of that.
That sounds... Oh, DoorDash you're talking about. I was going to say, I know Uber has some kind of program with Tesla where those drivers can like rent or like lease or finance a Tesla through Uber that they drive with.
Yes, I was in an Uber with whatever it is that we're talking about.
Yeah.
I had asked, he was like, this isn't my vehicle. I had to go pick up a new one. Sorry, I was late. I was like, oh, you have a vehicle that you can, like, that's pretty sick. And I asked a couple questions, but maybe it has something to do with that.
Yeah, I talked to a guy one time, and yeah, I mean, he said it was pretty much like, just like what you're describing. I didn't really get many details, but there's some kind of deal with Uber where they give you a Tesla to drive for Uber. I don't know if you go to a fleet location and pick it up or if you just keep it at your house, but you drive it for Uber, and then he said that there's just like a flat cut that comes out of their earnings. And they obviously can only use the vehicle for Uber, but then Uber just takes a flat cut out of their earnings, but then it means that they don't have to pay for wear and tear on their own vehicle or gas or whatever, and so it makes more sense for, I guess, if you're like full time.
Yeah,
that's where that starts to come into play.
Yeah.
But yeah, that's interesting. Drin, if you were saying you drove for Uber, right? If you got any intel on that, feel free to let us know. I'd be intrigued. DoorDash hired a ton of Tesla people when they were scaling. That I find interesting. I think DoorDash has made excellent moves. You want to pull that up, D-Dash?
Yeah,
or just Dash, actually. But yeah, I think that they've made excellent moves. This is one that I was deeply long on through the move that they had, like that May to August type of move that you're seeing. I took like 3-month longs in that time frame, and they hit with flying colors. But yeah, they just made some really good investments in the UK. Spent a few $1 billion. They acquired Deliveroo and 7 Rooms. Is that what it's called? 7 Rooms. They acquired the 2 largest UK delivery services and are basically just going to use their infrastructure to take over in the UK. I think that's a phenomenal call. And yeah, I mean, I don't know. I think if we just start getting lazier and lazier, I think
convenience wins all days.
Yeah,
all day. Hey, comfort, bro. Comfort is the pathway to suffering.
I used DoorDash twice this weekend. So that's the type of environment. I don't want to leave my football game to walk down the street to I mean, I want a Jersey Mike's. It's 3/4 of a mile away. You're talking about like an hour, round trip or something. I mean, this wouldn't be that long. 45-minute round trip.
I mean, someone was crossing the road. It could be 45.
That's true. Well, yeah. I mean, I'm thinking like 15 there. Order the food. Go through all the J Mike stuff. They got to throw it on the grill. All that. Give it to me. Get home. Probably 45-minute ensemble. That's like a half of college football. Yeah. I ain't doing that.
So I literally just ordered the groceries again this weekend, and it's just so nice. It never gets old. So the guy comes to the front door today and hold it open, and then he's just taking stuff off the cart, and I'm just like, we said no words. He just opened. He's like, Errol, I head nod down, and then he just starts taking the stuff off. I grabbed it, put it down. We didn't say a word for like 3 minutes. And then he goes, all right, thank you, brother. Have a good day. I was like, thank you too, brother. Have a good day. We didn't say anything. We just got down to business. It was just so convenient. And then look, more jobs are created because of that, which is, it's nice.
I always just choose the leave it door thing. I take even the one further step out. Like I say, like contactless delivery or whatever, and just have them leave it. I do that because when
inside?
No, they
at the front door.
Yeah, like it's like at my apartment door, but not like in the lobby. Like it is just I open my door and grab the stuff.
Okay.
But yeah, I do that because when I was an Uber driver or a DoorDash driver, I always really appreciated when people would just choose to leave it door because like over the course of like a 6-hour DoorDashing session, if you have 10 people that make you wait 2 minutes at the door, it's like time is money. That adds up all of a sudden. So yeah, I liked when people would just let me set it down and go.
That's what I thought. That's why I was like, if I don't even let him bring this cart inside,
sure,
and he's right here. So you just confirmed it for me. I was like, I hope this makes his day easier because he just like dropped off, took the stuff off, and pretty much just went right back down.
Yeah, I just do everything I can.
I was like, bro, I hope that made
their life
way
easier.
Yeah.
I also, holy crap, guys! If you are a DoorDash user and you live in an apartment, please, for the love of God, make sure that you have a gate code on there. Make sure that you have instructions for how they're supposed to operate in the lobby if there is one, and put your apartment number somewhere. I can't tell you how often I would pull up to a complex and then they just don't have an apartment number at all. And then I have to call you. You don't want to talk to me, the delivery guy. You'd rather I just bring your food to you. Put your apartment number on things, people.
This might be rage bait.
No wonder Gen Zs complain about not owning homes. I don't complain about not owning a home. I know that I'm financially irresponsible.
No, but that might be rage bait.
What, Scramble's thing might be rage bait?
yeah, Scramble, it's gotta be.
I
Cost of living,
I would imagine
completely different home values. I mean, interest. We could go on.
Because they'd rather be buying those damn coffees and TV sets.
Coffees. I know we touched on the topic, but TVs are way cheaper than monitors. My ultra wide just went out. My ultra wide monitor, it just randomly I turn it on. There's a line down the middle, and I'm like, brother. Why? Because ultra wides aren't.
expensive.
Yeah, I mean they were like the OG TV prices pretty much.
Dreamless of input. They have a deal. Uber have a deal with Hertz. They had it for a while. Here in Denver, it's $350 a week, and it covers everything for Tesla. You can do electric Kia for $300 a week. Interesting. Electric Kia. What? Man. Is that one of those prices is wrong? I don't know which one it is. Is the Kia? I mean, I guess electric Kias are pretty nice. I feel like those should be the same price point or more different than they are. I can't really decide. Those are interesting price points. But yeah, I mean that feels like a good deal. I mean, I don't know. I would imagine $300 is like one day of Ubering if you're doing it full time. So yeah, I mean if you just work your Monday for the man and then you're making money after that, makes sense.
I'm just skimming this watch, just making sure we're not missing anything.
What the heck is K-View?
High volume.
Oh, I got you.
High volume watch list. We got INFI, too cheap. Anything under $30, I'm not even gonna look at.
I'm looking at 52-week near low. Goldman, or sorry, not Goldman. General Mills is GIS.
What are they doing?
Bad.
Wow, everything. I mean, if you're I mean, if you're buying breakouts, good Lord, these things are, everything in this market is working. Like it kind of seems like most individual names are holding their breakouts. I mean, you know, the broader market is very strong, and we don't see that all the time. But I mean, almost all the names are finding follow through to the upside, which we don't typically see all the time.
Man, what's wrong with General Mills? You guys stop buying your cereal? I buy my cereal.
I don't eat cereal anymore.
Really?
I don't. What cereal do you eat again? I know we talked about this a couple days ago.
Oh, I do everything. I mean, I always have cereal in the house, but like I mix it up a lot.
Yeah, it's been a while.
Right now I have, let me think about my pantry here. I have Captain Crunch berries. Not all berries though, the regular one, just with some berries. All berries, it's too much. And then I have Frosted Mini Wheats.
Yeah.
And I have Apple Jacks. That's my current.
Apple Jacks is
my current setup. Other ones that frequently find their way into the rotation: Lucky Charms, Frosted Flakes. Yeah,
all my top ones are coming off the bench. That's crazy.
No, it's not that they're coming off the bench. It's just
literally. I was gonna say Frosted Flakes, Lucky Charms, literally in that order.
I get tired of things. You gotta rotate it through, keep it fresh. But I do cereal almost every night before bed. Maybe I'm a madman.
Spin off of J&J. No, I was looking at KVU, not like how the options chain is looking right now, but I don't think I've ever traded this one scramble.
Oh, that makes sense. I was wondering. I actually was about to Google earlier today, but got sidetracked. Who owns Tylenol? But that makes it all come together right there. What else we got?
We got J&J advertised. Let's check out mRNA. mRNA's been on its butt. Decent IV. We got earnings coming November 6th. We'll skip over that one. P-Sky, WBD, Oracle. Oracle's been the talk of the town lately too. Up on the day, 14 points. 73.5 IV rank right now. Dividends October 9th. Let's go to the 60 days. You're going to get $10 wides on the options chain right now. 240, not collecting a lot at the expected move. You can go a little deeper in there. $3. Now we're going to go a little deeper. 337, that's decent. 64. We're pretty close to the money here. But also, I'm not looking to be bearish Oracle either. Just want to see what those contracts are going for. CTC was the way to go for cereal. My wife makes fun of me for eating breakfast cereal for dinner, for dessert after dinner.
I eat breakfast cereal for dessert after dinner almost every night, Bob. Solidarity on that. Yes, love it. It works. It is so functional as a dessert.
Yeah,
it's great.
Gus's future wife, and Bob saw your wife. They might get along because it sounds like one of her best.
Yeah, no, I eat like such a dog, man. Like my diet just does not change from day to day. I mean, it depends on what dieting phase I'm in a bodybuilding context, but like broadly speaking, yeah. I mean, if
I didn't have a girlfriend, I'd probably eat cardboard every day. Honestly, like I'm down for the same thing every day.
No, yeah, I do the same thing
Less
every day.
thinking about what you're gonna eat. I don't really mind the enjoyment of it. I just want to be full.
Yeah, my breakfast hasn't changed in years and years. That's the most staple one. The only meal that has any variance is lunch because they feed us here. And then outside of that, it is every day I get home, lift, protein shake. I do dinner, bowl of cereal, 2 hours, bowl of cereal, bed. It's great.
Yeah.
There's usually a copious amount of chocolate milk worked in broadly there as well. Just kind of wherever.
It's chocolate. Strawberry milk is goated, but we'll let that
slide. Yeah, Errol's really hung up on the strawberry milk thing. We need to do a poll sometime because I ain't buying that anybody on the planet likes strawberry milk.
Unfortunately, though, I think chocolate milk would definitely win the popular vote, no doubt. But the electoral, watch out.
Watch out.
Watch out for that electoral vote.
I gave up cereal. Can't get away from the added sugar. Hope you guys stay healthy. Yeah, of course. It's
No, I know it's a silent killer.
Yeah.
I know we joke about it and all that, but I am cognizant of the amount of sugar I consume.
It's everything within reason. I would say the cereal is probably the sweetest thing that I do all day. I have no sweet tooth. I do not. I drink no soda. I don't really care.
You don't put additional sugar in your cereal, do you?
No.
Okay. I know some people do. No judgment over here if you do.
I have done that before. Oh, I've done that with protein cereals before.
Oh, I might need a half a bag of sugar with the protein. Yeah, I can't get around protein meals. I don't like them.
Like Magic Spoon is the closest that I've gotten. Like Magic Spoon is pretty good, but it's still just not right. It just feels like you're munching on protein.
Magic Spoon, is that the brand of the protein?
Yeah, okay. Magic Spoon. It's like you may have seen like YouTubers plug it. They advertise with a lot of like large YouTubers.
Strawberry milk only if it's fresh. All milk.
Straight out the strawberry cow.
All milk only if it's fresh.
Well, I mean, nobody wants spoiled milk.
Absolutely.
What's the definition of fresh here, though? Like, what? Because milk is never like typically milk you're buying on a store.
Fresh could be taken as like cold out the fridge.
Cereal twice a day, but no sweet tooth. I guess cereal is the sweet tooth, to be fair. Like I
don't have a sweet tooth, guys.
It's like, but like super sweet stuff. Like I can't do pretty much any candy. I can do
gummies. Give me some gummy life.
Yeah, gummies.
Food
That's
snacks. Love them.
It's too much.
I hate the sugar in them though. I just like the texture.
Yeah, I don't do soda. Used to do a lot of sweet tea when I was in like high school and college, but I couldn't tell you the last time I've had a sweet tea now.
Sweet tea has a lot of sugar.
Yeah, sweet tea.
I love orange juice. Orange juice got a lot of sugar.
Sweet tea is bonkers.
A lot of juice has got a lot of sugar.
I like juices, but I never keep juices in the house.
Neither do I. I took them out.
Juices are funny enough. That's like always a like hotel or like travel staple for me. It's
Really?
like if I'm especially if I'm at a hotel like that serves breakfast like a Hampton or something. Yeah, I'm grabbing apple juice. I'm grabbing apple juice, milk, a coffee, and a water. You will see Gus Downing sitting there with 4 cups. Count them: 1, 2, 3, 4.
Apple juice, milk, and a water.
Apple juice, milk, coffee, water.
Apple juice, milk, coffee, water. I bet.
It's well rounded. We are the only species that drinks milk from other mammals.
So I had this conversation again the other day. Was the milk push in the early 2000s when we were in school, was that not influenced by the milk industry a little bit?
What do you mean? Got milk?
Got milk.
Yeah, that just was the milk industry.
No, but I believe, absolutely the milk industry. We had Michael Jordan on the ads. I mean, any high-profile individual you can imagine in that time was on there. But milk was like a shtick growing up. It was like, it'll make your bones strong, it'll do this, that, and the other. But I heard, we're going to have to go down to the research on it, but I heard that was more of a marketing push rather than in the best interest for the young kids as it was made seem in that day and age.
Oh, sure. Well, yeah.
Of course, it's business is business, but...
Yeah, I mean, yes, I do think there was definitely some framing there. I know, like, chocolate milk especially, I remember there was a weird little period, like maybe 2010 to 2014 type time frame where they were pushing chocolate milk as, like, a recovery thing. Like, pro athletes drink chocolate milk to recover.
Yeah.
And, like, I mean, it's a fair post-workout recovery thing. It's, you know, a little bit of glycogen.
Smart marketing, too.
Yeah, a little bit of glycogen, a little bit of protein, but, like, it's not a protein shake. But, yeah, I don't know. I thought that was funny. I don't think I was influenced by that at all. My mother would tell you that I had a babysitter when I was like young, like sub 3 years old, that gave me chocolate milk one time, and then I was just an addict. Like from that first moment, just for the rest of my life, I was like, chocolate milk, this is the greatest thing. I've just discovered the milk ETF, which is ticker milk.
That sounds terrible.
We could have taken a shot at that.
Terrible.
Let's have a look.
I haven't drank actual milk in so long.
Oh man, yeah.
Once we in college we bought the almond milk, which I don't know why in college we were even buying the almond milk. We almost spent our extra $1 in our bank account to get the almond milk because it's a little more expensive. But we bought the almond milk and we never got anything else since. None of us ever went back and got regular milk. And it's not that it doesn't taste bad. I don't know why psychologically I cannot grab a clean glass of cold raw milk and just drink it. I don't know, just mentally.
I'm 16 ounces of milk into today already.
Oh wow.
And there will be another 12 after work. That's a daily thing. So yeah, that's 28 right there. You who suckered us in. Quickest way to put on weight is drinking whole fat milk. That is definitely true. Rancher, go mad strat, gallon of milk a day. Go mad.
Do it. I can't do it. I can't do it.
I was pretty close to go mad on my initial books when I was like very first lifting, and muscle just came from everywhere.
Rip into the highs. Good Lord. These underlines are insane, right? This market is wild. Like I feel like it's understated. I feel like these moves in the market are extremely impressive.
Well, that's the thing is we keep going back to this, we get all-time highs conversation, but it's like in order for us to get all-time highs like this, it means that all these individual names are making all-time highs in aggregate every single day. It's crazy.
Literally almost all breakouts are breaking out and holding. I mean, I don't see that all the time.
They were pushing chocolate milk to my grandparents, such as Yoo-Hoo. Hey man, be sure to drink your Ovaltine. I know that was a push.
Ovaltine. Oh. You just took another one out my memory bank.
That's Christmas Story, right?
Is it?
I think so.
Isn't Ovaltine an actual?
Ovaltine is real. It's a real chocolate milk powder.
That's the only thing I know it by. I don't know.
Oh yeah, and Christmas Story, I think it's Christmas Story. Somebody will be quick to correct me if I'm wrong, but there's a whole thing where he's like, I haven't seen this movie in a long time, guys. I'm about to do a horrible job quoting this. Production team, get ready to cringe. But he's like, yeah, there's a guy, Ralphie, right? That's the main character, I think. He's like listening to radio broadcasts over the course of some weeks, and every day he gets a new letter and a message or something, and then at the very end he goes to decode the message and he figures out it's just an Ovaltine ad. Be sure to drink your Ovaltine.
Was it a good ad? It sounded like it was a pretty smart ad.
Here I am.
There we go.
I think the ad has outlasted Ovaltine as a brand. So let me see.
Well, I guess the ad didn't do its job then.
Ovaltine. No, it's still around.
It is. Supposedly, the milk in the morning will keep you more hydrated than Gatorade.
Been around since...
I hear Gatorade...
Been around since 1904.
Gatorade has sodium in it.
Gatorade, I could go on a whole other tirade about Gatorade. Gatorade and Powerade are sugar water. I don't understand how they get off pushing themselves as electrolyte drinks, both of them unilaterally. It's Gatorade puts 5% of your daily sodium allocation in a Gatorade. That is it. That is the only electrolyte beverage. It's got so many grams of sugar. Powerade then turns around and puts 10% of your daily sodium, just that, no other electrolytes, which, by the way, Americans get plenty of sodium anyway. They put 10% daily sodium in there, and then Powerade says twice as many electrolytes as Gatorade, and they both suck. It's like, there we go. Thank you. Thank you.
See what we got here.
The decoder ring. Yeah, I drink my Ovaltine every day. Good. I'm happy this is resonating with people. But that totally just derailed my train of thought here.
Mine too.
What the hell were we even just talking about?
I looked back in the direction I was looking so it would come back to me, and it didn't. The Ovaltine. That got me too.
I was on such a good tangent. Gatorade, that's what I was talking about. Thank you, chat.
Gatorade doubled the size.
Anyway, yeah. So then Powerade says double the electrolytes of Gatorade, and it's crap. This frustrates the heck out of me. It frustrates me that they market these things to children, and children somehow think that they are good for you. Body Armor is good. Body Armor is legit. It's got all the stuff. Liquid IV is good.
You know how you know it's the good stuff? Because it tastes like shit compared to Powerade and Gatorade.
Body Armor?
In my opinion.
Oh, hell
I think
no.
Body Armor. Okay,
I will die on this hill. It's just the best tasting.
I gotta admit.
Oh, man.
I love me some Body Armor. Let me just say that. But the first time, so I'm a senior in high school. I'm doing a group project with my friend Megan. She's like, my dad's gonna come and bring me Sobeys. Do you remember those drinks?
No.
They're not for sale anymore, but they were for sale in like all the little fridges by the checkout lines in the grocery stores. But Sobeys, I don't know if anybody else remembers the Sobeys, but she was like, yo, we're gonna get Sobeys, what flavor do you want? I was like, oh, I'm down. Can you tell him if you can get me a strawberry banana one? It's one of my favorites. He brings them, and she was like, he said they're not there anymore. I guess they're not selling them, but he brought 2 Body Armors. This is like 2016, 2017. And I take the lid off, I take a sip, and I'm like, what did my lips just taste? Right off the bat, I taste the coconut water. And I'm like, this tastes weird. This tastes like water that was just in somebody else's mouth. Like, that's my description of coconut water. But it just caught me so off guard. It's not that it's bad, but it just was not what I was expecting. You know when it's something that throws you off so much?
I just think I think it tastes real.
It was just my first reaction.
I think it's almost disorienting, and then it tastes real. Like when you taste like the fruit punch Body Armor, you're expecting like a super synthetic artificial Gatorade type of fruit punch flavor, Hawaiian punch type flavor, and I think it just actually tastes like, I don't know. The yellow Body Armor, the pineapple one, is the most goated sports drink on the market. I will die on this hill. It is so good. It's great. I buy the powders now, the Body Armor powders, but I have in my house right now no fewer than 20 Body Armor, the yellow Body Armor packets. Love it.
The description you made, though, about consuming the Body Armor, about how it feels real, that's such a real statement. That's such a weird way to put it, but I know what you mean when you sip it. It doesn't feel like artificially.
Sure, yeah.
That's another way to put it, too.
Yeah. And the Body Armors are super sugary. The Sugar Hill, they do make zero sugar ones, which are better, but the sugar thing does not end with the Body Armor, but they just actually have legit electrolytes, and if you're using it in the use case, which is drinking it while you're doing some grueling physical activity, simple sugar is good.
For practicality, Body Armor is literally my go-to.
Yeah.
Like the next morning, if I'm not feeling good, got a headache, whatever, Body Armor is the move.
Sobe still exists, owned by Pepsi.
Okay, I didn't know that.
Body Armor tastes terrible. I'm a Gatorade guy. Yeah.
Sobe, in my opinion, was one of the best drinks. I mean, they were always in the mini fridges by the checkout lines, like in every store. I don't know what happened to them. It has a little lizard on the bottle.
I know what you're talking about now. Now that I see the caps, the capital B.
Yes.
That makes sense.
Literally so fire.
James Harden is an angel investor in Body Armor. It's like his most profitable investment ever. There's a fun fact.
Oh, didn't know that. I would admit, I don't think I've tried the pineapple Body Armor. Well, Bob, you're not missing any.
What happened to this segment is a good question. We got derailed here talking about sports drinks.
It's all right. We got just about enough time to start wrapping up now. Anything else to add before we wrap for the day, guys?
Yeah, no. I got no closing remarks. Body Armor superiority, milk superiority. That would be my ending words here.
Cool. We'll see how these positions pan out. Again, we're trading all-time highs. If you don't know how to get long right now, maybe just staying on the sideline, staying cash is also a position, but all-time highs. We'll be back here next time. Thanks for taking the time to hang out with us. We'll catch you guys soon. Peace.
It's option. Jive.
Tomas, we are back, my friend. That's right. We've got an option jive with my man Kai in the house. Talk to us, Kai.
How are we doing, guys?
Hey, Kai.
Hey. You ready for the some interesting stuff?
Ready. Ready as I'll ever be.
Ready. Beautiful. So what happened last week? Some important things. The first one, definitely the Wednesday's Fed meeting. Cut 25 basis points. But the interesting things after that, the 3 trading sessions from Wednesday afternoon to Friday, the yields actually rise. So bond price drops, the U.S. dollars increase, all the foreign currencies against dollars drop, which everything goes against your position, right? Because you're long bonds and you're long yen or short dollar.
Well, we just bought bonds right here, and the yen actually has gone our way. So the yen's actually higher right now, and bonds are lower. So we just bought them last night. So this has actually been, this rate cut was fine for us. It didn't really impact anything.
I mean, it was a known, right?
Yeah.
Do you think it's because of all priced in before the decision?
Of course.
Okay. Yeah. So the second interesting thing is the Russell hit the new all-time high again since the November last year, and all 4 indices hit the new record highs simultaneously on Friday.
Yeah, I saw that. We were not extremely happy about that, being short 2 of the 4, but it is what it is.
Okay. And the last one is definitely the TikTok deal, the Oracle. Yep, this is from last week. Next week, or this coming week, I know you're not interested in all these.
Hold on, so I got to ask you a question. Now that TikTok is going to be like, kind of taken over by those people, like Tesla was, kind of, will you no longer be using TikTok if that happens?
No, I'm still going to use TikTok because...
Oh, so in the privacy of your own kind of little private Idaho, you can use those products, but you can't drive a Tesla?
That's exactly correct. Because it's still... Got it. That's a Chinese app. Thank you for your help.
All right, I just want to make sure. You hated the people that are going to be running it, so I just thought...
No. There's a difference. I like the people that run TikTok. I don't like the people that own TikTok. There's a big difference. People that own TikTok, I can't stand. Hey, listen, I like the Bears. I'm a Bear fan. I like the people that run the Bears. I don't like the people that own the Bears.
So you're still a Bear fan. So it's not the owner, it's the people that run it.
In the case of TikTok, yes. In the case of Tesla, it's the same owner who also runs it.
Got it. Okay.
Now,
all right. I'll keep
if you'd like more clarification in the future, I'd be happy to give that to you, Snarkosaurus, with a broken wrist.
Sorry, guys. Sorry, guys. I was short on time.
Don't make me break that other wrist of yours. I will. I will come there and I will smash that other wrist. I will Kathy Bates you, and it'll be ugly.
Soon it's going to be an American company.
We'll see.
So, what's coming up this week? Some economic events, PCE, durable goods, which you don't care, Thursday, Friday. And what is the last one? Oh, and also we still have some interesting earnings this week. MU, Micron, and Costco, Tuesday and Thursday. I think you probably can trade these two, right?
We have positions on them both. I mean...
Yeah, because it moved a lot for MU in the past.
I mean, I'm a little long Costco. I'm a little short Micron right now. But, I mean, that has nothing to do with what I'll have on, when their earnings come out.
Sure. Okay, so talking about the weekly move, all 4 indices went up for sure, all in green. Can we go to the next slide? 1.2% for S&P and NASDAQ, leading the other indices at 2.2%. But everything is in green. So next slide, if we're talking about weekly expect move, it was slightly outside of the expect move, 1.0% at the beginning of last week, and the expect moved almost the same, 69 versus 70. So it's 1.1%. Nothing changed. I think the main reasons it was VIX was slightly higher, 15.5. It's still below the average and mean.
Okay.
Okay. Let's see the IVR across different assets last week. Most of the assets didn't change or drop a little bit. The only thing we saw increase was the euro or the currencies. And the currencies implied volatility increased. The rest of the assets didn't even move.
Yeah, taking a look here, you're 100% correct. It's business as usual, right? I mean, that's really what it shows here on implied volatility.
The scariest thing on this chart is just there's no vol anywhere. I mean, the euro doesn't count, and net guess seems like it. I know 38 seems high relative to everything else, but for net gas, that's really low.
Yeah. So overall, last week was a quiet week, implied volatility wise. Yeah. Price, everything went up.
Yep.
So next one, some interesting observation from last week. Definitely Russell hit the new high the first time since November 2024. And next slide, all four indices. We go to next slide. So all four indices, we saw the new high, the record area since November 2021. That was the last time we saw it. And that top only lasts for 2 months until the January 2022.
Yeah, do you remember what happened right after that top?
Yeah,
we went down for the next year straight.
Yeah, 2022. Yeah, for sure.
Yep.
But that was coincident with the interest rate change, right?
I don't.
Don't
try to bring facts into this, okay?
Okay.
I don't remember the exact interest rates didn't change that much, I don't think, but whatever.
Selective memory by Mr. Sosnoff right now. It says, I'm gonna tell you something, Saz. You keep this up, bad things are gonna happen to you.
Aside from these, I didn't put in the slide is the gold and silver reach new highs again.
Yeah, I'm glad you didn't put that in there because I'm short GDX and I didn't want to have to talk about it again. So thank you. You're a good man. You're a good man.
Nothing new for gold.
You're a good man.
Next slide is the interest rate, right? So the interest rate rises after the Fed meeting. So 10-year Treasury yield rise to 4.13 the end of Friday. Right now, slightly lower.
Yeah, people would wonder how is this possible? But that's what happens when everything's priced in advance.
But I don't think the bond price is that high yet. It's a trading range for a while.
Yeah, I'm just saying. I mean, you wouldn't expect after the Fed cuts rates that bonds yields would go straight up.
Okay. Yeah. All right. Next one is the top 5 and the bottom 5 performers in S&P 500. Mostly we see a large upside move. Intel up 20 for sure. The investment from NVIDIA, CRWD 13, AMAT 11, and CAT PLTR is roughly 7 to 8%. Downside, not too much move. Humana, 5% AVGO, 5% is just some little correction from the market top. Land, we had earnings on Thursday. UNH, 3% is nothing for UNH.
That's true.
Mm-hmm. Yeah, so we don't have a lot of earnings, but I still put one slide. Some interesting one, probably worth trading. MU on Tuesday. Next slide. And Costco on Thursday, definitely two biggest one. AutoZone, CarMax, I don't think you want to trade them because of liquidity, but some people probably might be interested in these.
Yeah, totally agree with you. Even Costco sometimes is a hard fill.
Yeah, it's $1,000 stock, right? Other than spreads, few people can trade naked positions.
And MU really seems to have a mind of its own when it comes to earnings too. From my experience, hasn't been very, very good to Tony.
Oh, is it? I don't think MU's been good to any traders.
Oh, I believe MU is one of the top 5 best performers this year, or very close. I just read it yesterday, but I don't remember.
You could be right. It was an $84 stock in the beginning of the year. Don't quote me on the exact price there. It's 160 and change right now. So
I remember the top one is Seagate, but some other hardware devices companies are all in the top 5.
Very good. So good job out of you, Kai. Even the S&P is down 16 and change. We've had a pretty tight range here of about 5 handles top to bottom. We'll see what's going to go with the opening bell immediately following these messages. We'll be back in 90 seconds. Tasty Live. Thanks, Kai.
Peace.
It's option jive.
It's option
Tomas, we're
jive.
back.
It's option jive.
This is when a trader's like a caged animal, and even the S&Ps are moving 2 handles every 20 minutes. They get like this, and they just start talking to themselves, and
keeps me alive.
They don't pay
Do you
attention.
want to know? Let me tell you about what I did on Saturday, because I didn't have a chance to tell you this, because it's very.
I actually saw a picture. I think you sent it to me. You underperformed because you did. Yeah, go ahead. Tell everybody what you did, and I'll tell them how you
Let me see if I've got a picture I could send to John so he could show.
Mm-hmm.
Thank you.
John, I'm trying to find this so I can.
You're going to email it, aren't you?
Let me see if I could send this to you, because it's very important.
Oh my God! This is Tom preparation too, everybody. So he really prepared for this.
You can't see. It's not big enough. You can't really tell.
That's what she said. It was a Saturday night, right?
Omaha.
Right. No. She already wrote me. We don't need to see this. It's okay.
John.
Long story short, Sosnoff was doing a charitable thing, and they asked him to make 8 slabs of ribs. He came up with 6, and they said, you'll like it. Is that not the truth?
Hey, so John, I'll tell you the story. So Donnie has a rib fest every year for a charity, right? And it's on a city block, and he said, hey, can you make some ribs? But I was in New York. So when I got home from New York, before I even went home, I went out and bought 6 slabs of ribs, a couple of pounds of chicken, a bunch of beans. And on Saturday morning, I cooked 6 slabs of ribs. You would have been proud.
I would have been proud. I would like a good rib.
So there was about, I'd say 5 or 6 of us that cooked, 5 or 6 slabs of ribs or something like that, or Donnie cooked like 8 slabs. So we had like 30 slabs of ribs. That's a lot of ribs.
That's a lot of ribs. I mean, did you do them all on the grill, or did you do some inside, some outside?
I started them all inside and finished them all outside. Donnie smoked them the whole time. The other guys did.
Because he's a true rib connoisseur.
Well, I didn't have enough time.
Well, you know what? No. That's for people who don't prepare. Do you have enough time? 24 hours is a long time to cook ribs, okay?
I was babysitting you.
This day didn't sneak up on you. You could have bought the ribs on Wednesday. You're only going to go to Costco anyway. They're all blister packages. They last forever.
No, I don't like Costco.
You could have woke up early enough. You didn't have to go to breakfast.
No, I don't like Costco ribs. They're too thick, and I don't like them. I like the small baby back.
You could have gone to the butcher, got any rib you wanted to. You could have got your Barrico rib or whatever it is that you bougie people eat, and then you could have done it. Don't go to breakfast.
No, I went to breakfast yesterday with the boys.
I guess I'm not a boy.
Well, you were too busy getting your sponge bath.
Thank you.
Yesterday morning, I went to breakfast with, it was a dream team. It was me, Jules, Slappy, and Butchie.
Aww. What were you trying to do? Make a mahjong team?
We were just talking about you mostly the whole time. They wanted a lot of information. I gave them a lot.
They were real happy about my arm. They just wanted pictures as proof.
That's right. So a lot of talk was about you, but We had a very nice breakfast. Jules was on his way to play a tournament, but she was on his way to, I'm not sure to do what. Steve was on his way. I don't know what he was doing either. But we all had stuff to do, but we had breakfast together. It was very nice. Anyway, my rib story is that we had like 30 racks of ribs around that. Maybe there was like 90 or 100 people total. And, but then I had chicken and like a million side dishes. It was beautiful.
Very nice, very nice. And did you go? You went to the Rib Fest, I'm assuming, because you dropped them off at the very least.
I worked it.
Oh, you worked it. Okay, so you served your ribs. Was there a rib cook-off? Did you make the?
No, there wasn't a rib cook-off. There was.
You didn't need like a guest rib connoisseur to try them out or something like that. Somebody who's not one of the boys.
I ate everybody's ribs. I was sick when I was left there. I couldn't move. I wanted to go home and watch the football game. I wanted to watch Indiana play. Indiana played Illinois. I wanted to watch that game. Corinne went with me for a while, but she looked at all the ribs and she goes, "This is making me sick just to smell this." So, all right. Anyway, you ready?
Sounds like fun.
It was fun. If you love ribs, there was enough there to get anybody sick.
I'm sure.
Some guy made ribs where he poured he had like a lemon aioli sauce on top. It was delicious.
Oh, that's different.
Yeah, like a Greek. Another guy did Greek ribs. Another guy did. He did like,
Greek ribs. What do you do? Like, you know, talk meanly to them from like the backside of the rib.
And then another guy did.
Did he cook the ribs over and like cook them only like one side down or something like that?
Another guy. I'm not even listening to you. Another guy did spicy ribs. I did spicy chicken.
There was nobody who did like a Korean style rib because I like that.
Not this year.
Well, maybe Donnie will invite me sometime.
I don't think so. I don't
think so either. I like Donnie. I think Donnie likes me.
All right, let's do this. Ready, John? Let's do it. Option strategies with same risk profiles. Option strategies with same risk profiles. Matt, I think this is right up your alley. I think you're going to be good at this one today. Option strategies with same.
Let me try.
With same risk profiles. You've been doing this for 40 years. You should know this. Option trading is strategic and engaging because of a variety of strategies available. However, the same variety can sometimes be confusing. How do you want your hot dog? There are approximately 20 premium selling strategies that fall into 8 categories. And they listed them here for you. Covered calls, time spread, Jade Lizard, ratio spread, iron condor, straddle strangle, put call spreads, and naked calls. These are kind of the 8 categories, then we mess with them. Let's go next slide. There are 4 pairs of strategies that are synthetically equivalent, meaning that they share nearly identical risk profiles. Understanding their similarities and differences is helpful for making trading decisions. We talked about one of these already today, the covered call versus the naked put on confirm and send. Then you could obviously do the long call spread versus short put spread, or long put spread versus short call spread, the ratio spread versus the big lizard, the diagonal versus a poor man's covered call. They're all very similar. They're all synthetic equivalents, which require matching strike prices and expiration dates.
And all would have been a great strategy in this past market that we've had.
No doubt it. Let's go to the next slide. So the first one is a covered call, long 100 shares plus a short call. It has nearly the same risk profile as a short put. Let's go to the next slide. We talked about this already today. And voila. The SPY at the money covered calls and puts are exactly the same. Now we would never do an at the money covered call. We would never do an at the money put. What delta would you use for both sides, Bat? as a default.
I mean, for me, I'm gonna probably, if I'm gonna do it, an at the money covered call with the puts. What are they? I can't see the screen that well here. What are they using? They're buying 100 shares of stock and they're selling a call out of the money. That works.
No. These are what they want to show is the same as at the money for the same, but they're
using the same strikes here. They're using, like I said.
Yeah. They're using the same strike to show you the same thing.
Right. So for a poor man's covered call, or I don't understand the question here. I'm so sorry.
Okay. Well, not poor man's covered. For a covered call, we generally would buy stock and sell about 30 delta. For a put, for a naked put, we would.
I still sell the 30 delta. I do the out of the money.
Yeah, I mean, we usually sell the 25 or 30 delta naked put, which gives us about a 75% probability of profit. And on the call side, we usually buy the stock, sell about the 30 delta call, which would give us about a 65% probability of profit. That's all.
Right. One has, over 60 deltas, the buy the stock, sell the call, and the other one has less than 30 deltas. So they're two same trades, but completely different. That's why my answer when we did confirm incentives, it depends on how bullish you are. The covered call, you're going to be able to make more money and have a slightly lower probability of success. The naked put, you're going to have a higher probability of success, make less money.
Exactly. Let's go to the next slide. So here we go, put spreads and call spreads. And like I said before, these are really interchangeable when using the same strike prices. As hedge positions, the risk profiles are nearly identical. This is another example, though, of when we buy we don't do it exactly like this. When we buy a put spread, we'll buy one strike in the money and sell one strike out of the money. And when we buy a call spread, we'll buy one strike in the money and sell one strike out of the money. And when we sell a put spread, we'll sell an out of the money put spread, usually around the expected move. And when we when we sell a call spread, we'll sell a call spread out of the money, usually at the expected move. So although these have the same risk profiles, if you choose the same strikes, we generally, just like the covered call, the naked put, we would generally set up our short call or short put when we're doing a credit spread at the expected move. When we sell a naked put, we usually go to the expected move. When Tony and I do a live show, we do everything at the expected move, which is always going to be somewhere in that same delta area. And then when we're doing the long put spread or long call spread, we do it right at the money. Let's go to the next slide. And you can see here that although synthetically equivalent, professionals choose between these strategies based on bid-ask considerations. I mean, sometimes I don't really consider it a bid-ask consideration if it's a liquid underlying. I really consider it a probability of profit. If I'm going to buy a call spread or a put spread, I know it's a 50-50 shot. If I'm going to sell, but I can make more money. If I'm going to sell a call spread or put spread, I know it's a high probability trade, but I can make less money. It's just a question of what you're shooting for.
That's correct.
Let's go to the next slide. So the ratio spread and a jade lizard. They're both three-legged strategies, and they combined a naked option sale with a spread in the opposite direction. Okay, so a ratio spread is, let's just say for argument's sake here, long one, short two, and a jade lizard is short one, short a call spread. In both cases, or reverse jade lizard, just the opposite. In both cases, you're going to be naked short an option.
That is correct. That is correct. And they just broke up the strategy so that you could see them both there.
Yep, they broke it down. Let's go to the next slide. So when using identical strike prices, again, this is just to make the point, these strategies become synthetically equivalent because the embedded put and call spreads are interchangeable. In practice, though, traders typically sell out of the money ratio spreads. We do. We buy the option at the expected move, and then we sell whatever we can beyond that to generate a credit. We do this at our live shows. But the at the money jade lizards, we do the same thing. We'll sell the put at the expected move, and we'll sell a call spread where we can get enough credit to hopefully do the thing for more than the width of strikes. But again, the point being here is that the risk profiles are synthetically equivalent, but we do it at the expected move as a preference thing.
That's correct. And we do a lot of this on our live show. We deal with the expected move, I mean, religiously.
Yep. Let us go to the next slide. Perfect. A diagonal strategy is less commonly used. Unlike other premium selling strategies, it requires paying a debit upfront and benefits from increasing implied volatility. When using the same strikes and expiration dates, it becomes identical to a poor man's covered call. And again, we do not use the same strikes and expiration dates, but if we did, it would be the exact same, synthetically equivalent. Let's go next slide. And you can see it here. So these strategies are used in different market conditions. A diagonal we use for, the nice thing about diagonal I like is that you can adjust the strikes, and sometimes I'll move the front month strike. Like we made a trade on Friday where I moved the front month strike actually higher than the long strike. And sometimes we'll do that relatively close to expiration. But the poor man's covered call, it's just a substitute for a covered call. You buy an at or in the money call long term, and you sell it out of the money call either at the expected move or somewhere around the 30 delta.
Mm-hmm.
And we use a longer duration expiration for those, often leaps. Let's go to the next slide. So the takeaways from this, there's a lot of good content in here with these same risk profiles. Understanding synthetic positions helps traders manage complex adjustments and portfolios, and using the appropriate strategy for market conditions improves trading efficiency and reduces cost. So there's some really interesting takeaways from this. The first is that there's a lot of things, if you use the same strike, they're synthetically equivalent. But that's not how we really trade them. That's my biggest takeaway. What we do is we trade things, with a optimal duration and an optimal strike price based on expected move. I think that's the best way to do it. But to understand these similar risk profiles, this is a really good piece.
Very nice. Yes. Good job. Good job by the team. Good job by you, Southern, finishing just about at the top of the hour, because we've got another market measure coming your way. Even the S&P, Southern, let's take a quick look at the market here. It's actually caught a small bid. Even the S&Ps are up $5.25. Cancel crash, Southern, as the NASDAQ is unchanged, and the Russell just went positive by 40 cents. Dow still the weakest of the group, down 111. Volatility up a skosh, 5 cents to 17.75. Bonds going the other direction, down 4. Notes are still holding on to small gains too, but basically an unchanged market until you get to Bitcoin, that's down almost 2,000, but is over 114 for the first time that I've seen this morning. Ethereum really not catching any bit at all, down 241, although it is off of the lows that we saw earlier around 41.16. It's 42.40 right now. Oil continues its slide down 48 cents over the last couple of days, and gold getting its rally back on, Sadnov, holding steady up 50. Let's round up there. We'll take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live. That's right, with a little bit of a market measure here. Before we do that, take a quick look at the market. Sadnov, I have a question for you. Even the S&P is down 2, NASDAQ down 15. On the upside, you got Tesla up 16 and change. You got Apple up another almost $6 on top of gains from Friday. Can this market go lower, even though you do have such stocks as, I don't know, Microsoft down almost $5, ABGO down a couple of bucks, Nvidia down a couple of bucks? What do you think, yourself? Big tug of war going on.
There is a big tug of war. I don't necessarily love the rotation, because I'd rather see them, I'd rather see a little more of a
all go up. Makes it a lot easier.
100%. Yeah, it's really mixed. My screen is mixed all over, as you would say. Mm-hmm. Yeah, I don't know what to make of it. I don't want to even consider buying them here. I'm staying short. I don't love my NASDAQ shorts.
Even though you believe it's buy Rosh Hashanah and sell Yom Kippur, you're going to keep your shorts.
Because I don't think I have enough time to get in and out. I'm a little slower than I used to be. I don't have that maneuverability that I used to have, that blazing, deceptive speed. I don't have that. My first step isn't as fast as it used to be. So I got to I got to hold the position a little bit.
Understood. Yeah. I'll give you this. I mean, I think you're at the later years of your career here. I'm going to give it to you.
Yeah. It's always been deceptive. It's just not quite as fast as it used to be.
It's always been deceptive. It's just not quite as fast. Listen to that statement.
Yeah, that's exactly right. It's always been deceptive. It's just
not very fast.
Yeah, exactly. Exactly. All right, let's do this. We have a bunch of stuff. Time is it? It's 9:10 in the morning. We're in Chicago. So if you are wherever you are in wherever you are, you're as a Tasty trader.
Wherever you are, there you are.
Tasty Nation is all over the world, just so you know. But in Tasty Nation's home base is in the West Loop in Chicago. And if you're new to Tasty, welcome. We're, like Vanetta said, we're hitting the fall season, and we still have a couple road shows left this year. So I just want to had a great show in New York. It was really fun. We're so appreciative for everybody that came out. Next one is in LA at the famous Fonda Theater. We have been there once before. So funny. One of my son's friends just posted was at a concert, and he posted something. I saw it on Instagram, and he was like, "You got to check this out at the Fonda Theater." And I was like, "Oh, I'm going to be there in 2 weeks." But if you haven't signed up yet, please do. We'll be there in less than 2 weeks, Friday, October 3rd. We head out to LA on the October 2nd, so can't wait to see everybody. Doors open at 8 a.m. Show starts at 9 a.m. Remember, the market out in LA opens at 6:30 in the morning. So we'll be 2.5 hours into the trading day, which will be great. Really looking forward to it, but we don't care. Every show starts the same. The next one we do after that will be Charlotte, where we'll start 15 minutes before the market opens, like we did in New York.
Yeah.
Hopefully Tony's arm will be fixed so he can use both hands. But
by October 24th, it's going to be touch and go, Saz. It'll either be that or it'll be having an operation. But don't worry, I'm a pecker, Sosnoff. I'm a pecker. I can do it with one hand. No big deal. I'm a big pecker. You know that. I've been pecking for a long time.
Then we'll be at the Fillmore in Charlotte, North Carolina on October 24th, and we'll finish up the year in early November 7th at Antone's Nightclub in Austin, Texas. Supposed to be a really cool venue, and we will be same thing.
I've had a lot of people writing to me about this. They really love this venue.
It'll be doors open at 8 and show starts at 9 a.m. And always love the quick little trip down to Austin, Texas, where we eat so much barbecue we're sick as a dog the next day. We're sweating barbecue sauce. Special appearance by our own Tom Preston that day, which will be a lot of fun. And yeah, so
it's fun.
Those are the 3 last shows we have to do this year. Mike, Nick, and Katie are going to still be on the road, and Dr. Jim's got a bunch of shows, but those are our 3 shows. tastylive.com/events. tastylive.com/events. Plenty of room at these shows. New York was all full, but we always have space until we get out there. So if you want to come to the show in LA, New York, just to give you an idea, we made just about 40 trades, 39 or 40 trades. We made some pretty decent money, but that
it's a couple of scalps. We did it.
But that's not why we do it. But we did have more than our usual number of scalps. We also traded, I think, 25 different positions. I want to say we probably used about 8 or 9 strategies all total. And we had some fun with it. It was good.
We sure did. We sure did.
We used a lot of Tony's money. That's always fun. So
we had a good time, regardless of whose money we used. We guard everybody's money the same, Salzbuff.
I know. Anyway, it's a good time. So hopefully you can make it out to the Fonda Theater in LA. It's gonna be a fun show. We love LA. Yeah. Plus my kid lives there, so I gotta spend a little extra time in LA.
Sweet.
All right, let's do it.
I'm ready.
Here you go. Extreme days and next day probabilities. We're going to take a look and see what happens when we have an extreme day and then what happens like the next day.
Sure.
What do you think it is?
Oof. I'm gonna say it has really no bearing on the next day. Maybe a slight edge to a small continuation, but it's going to be within the expected move of a day. It's not going to have a two back-to-back extreme days. That's the way I feel. What about you?
You know, I'm really mixed on this without seeing the data. I'm going to say that I'm going to say that an extreme day doesn't necessarily mean that you're going to have an immediate reversal or anything like that. But I'm going to say that extreme day generally means that the next day has a higher chance of being extreme as well. Just because an extreme day usually pumps up the vol. So that's why I'm thinking that. But I don't know. Let's take a look. So when you consider, and by the way, Bat, we're going to be taking calls at 9:30, right?
We are 855-238-2789 or 855-BE-TASTY. That's the number to call. I wouldn't want to step on you. You were talking about the shows and everything, so I didn't say it. But please get your phone ready. Give us a buzz. We'd love to hear from you. I got 4 or 5 lines open. We can open them now if you don't mind waiting. If not, you can wait till the segment's over and call us in then.
When you consider SPY from 2015 to present, any given day, the SPY had a 54% chance of an up day for the last 10 years and 46% chance of a down day. Given that SPY had a down day, SPY had a 55% chance of an up day the following day. Now, that's pretty much the same. So that would be in line with what Tony just said. Given that the SPY had an up day, a 46% chance of a down day, that's the same as it is on any other day. So in general, the probability of a reversion following day is only slightly higher than the probability of an up or down day in general. But so that's on a normal day, it doesn't make any difference. Gambler's fallacy. But what if the move is very large? Let's take a look. So we decided to look at 10 years of data and determine the probability that the SPY has an up day, given that the SPY has more than 2 standard deviations, okay, or a down day. So we're looking right now, we're looking at 2 standard deviation moves, which have about a less than 5% chance of happening. We looked at 40 different tickers. So we didn't just do the SPY. Given a 2 standard deviation up move or down move. Note it, we have a note here. Only the direction of the move, not the magnitude of the move, is considered here. So, and we have a list of tickers. We don't have to go through them all, but there's 20 different underlyings, including some ETFs and kind of like every major stock. Let's go to the next slide. All right, so normal market symmetry. In typical conditions, the SPY shows 54% up, 45.6% down, and a modest 8.8% bullish tilt, reflecting long-term market growth trends. That would surprise nobody. But post-crash reversal after 2 standard deviation down move events, the up probability increases to 60%, creating a positive 4.8% edge. This suggests that fear-driven overselling creates mathematical buying opportunities. Well, that's really interesting. But what's more interesting about that to me is that it kills the theory, Tony, of the trend is your friend.
Yeah, that's what I was kind of like a little bit alluding to here. But again, you're looking at the next day. That doesn't mean what happens over the next week or month or year.
So you can see the first 2 slides are up day in green, down day in red. That's the 54-46. And then after that, you have up day after a 2% down or down day after a 2% up. Those are big reversals.
Yep.
Let's go to the next slide. Now we're going to look at post-rally exhaustion. So after a 2 standard deviation up event, the down probability surges to 58% versus 45% normally. That's a 13% shift. That's pretty impressive. So the risk-reward implication, the stronger reversal after ups versus downs suggests tighter management when buying dips and wider targets when shorting rallies. Basically, again, this is very interesting because it debunks the myth that the trend is your friend, that there's such a thing as a breakout on a big up move,
right,
or a breakdown on a big down move. This completely debunks that. Again, let's go to the next slide. We've debunked it 50 times already, but we're debunking it one more time. It's a little harder to read for me as well, but in the past 10 years, among the 38 tickers reviewed, here are some that stood out with the most notable moves. McDonald's, a 25% downside reversal after rallies, only a 5% reversal after sell-offs, or 5.9% after sell-offs. Brazil ETF, a 12.5% bounce after crashes. Junior gold miners, a 10% bounce after sell-offs. NASDAQ, weak dip bounces, but sharp fades after rallies. Where's the fade here? Utilities, a 17% pullback after rallies, and Apple, a 15% fade after rallies. Let's see where we are today, Apple. Are we at a 2 standard deviation?
Apple's up big again.
Yeah, so the last 2 days in Apple, this is about a 2 standard deviation move. So we should be looking.
Rallies exhaust fast. So there's your opportunity. Look at put on a little bit more positions.
So Apple, 15% fade after rallies. And we have 2% moves in. Here, I'm going to do this right now.
I thought you might.
Because.
Plus, you got sell Rosh Hashanah.
Because, as you know, I trust our research. So I don't have a lot of time to look at options right now for a second, but.
You just went with stock.
Stock's going up faster than I can deal with it.
You could sell it.
Yeah.
Apple up $6.90.
So I just sold a bunch of Apple here stock. I'm going to do some options when we get to the next break. But I'm trusting the research here.
Apple IV rank is 14. It's neither here nor there, but I get it.
I'm looking, Tony, for I did not know the statistic before we did this study, which is what I love about Tasty Research. Apple, after a 2 standard deviation move, a 15% fade. We had a almost 3 standard deviation move in Apple on Friday. I'm going to say 3 standard deviations on Friday and almost 3 standard deviations today. It doesn't get any more than that. So I'm waiting for my fade.
I like it.
Let's go to the next slide. SPY is somewhat more likely to experience a reversal following a significant up day or a down day. However, it is not a strong trend. Among the 38 tickers tested, 58% were more likely to have an update following a large down day compared to
What's going on, everybody? We got another quiet Monday here, but it's really not as quiet as it seems. We'll talk through all the different things we're seeing here in the market on a Monday, September 22nd. Welcome to the most dangerous show on the tastylive network, folks. It's Engineering the Trade. I am your host, Jamal Chandler, and the wooden creature over here with with clothes on it. Yeah, you're
wooden creature with clothes.
It's not a
scarecrow?
not a puppet. It's not a puppet.
Like a
it's a real
scarecrow?
person. It's a real person.
Like a scarecrow.
It's Josh Fabian. How you doing, Josh?
Dude, this is arguably the best Monday since the Monday following the Sunday, which usually happens when we were in Green Bay at the end of last season.
Yeah, and why is that, Josh?
Because we finally remembered how to football.
Bears win!
We figured out how to football again.
Yesterday was awesome. I was at the game yesterday with my son and a friend of mine and his son. And the last time we went to a game...
I was with you. It was when we went.
Yes, that was the last time I went to a game, I think. I think that was the last time I went to a game.
Yeah.
But the time before that was we went, like the four of us went.
Uh-huh.
I don't think we won that day, but it was close. It was a good day. And it was kind of nice to tell the kids, like, I don't think there's been many times we left.
You get to enjoy it.
Like, when we went to that game, and that was against Arizona Cardinals around Christmas of 2023, we didn't win that day, right? I don't think we did.
I don't remember.
I know. I don't
remember. If we did, it wasn't a good
My son
win.
was asking me because that was the last time we were at a game. And he was like, did we win that day? I was like, I don't think so.
I don't think we did, no.
But those were the other times.
You know what?
Yesterday was awesome.
What yesterday reminded me of, the excitement, was the 90s Bulls. Like, you forget how much, and it's so stupid, and I'll be the first to admit, it's so stupid how much it affects me. But I was flying high. And then I was like, my God, the entire 90s decade, late 80s to end of the decade, I was like, this is what you got every day.
Urgent Purrs like Dallas is bad, like real bad. You know what?
You know what? Screw you.
We beat them the way that they were supposed to be beat. I've had this conversation with my son recently for his football games, because the last 3 football games he's played in, we've shut him out. We've won 20 to zip, 36 to zip this past week, and then 33 to zip the week before. And he's like, yeah, they weren't that good. I was like, so? And we beat them like they weren't good.
Yeah.
But guys, it doesn't.
You won.
That's right.
Yeah.
The schedule is the schedule. You just play.
And you know what?
Play.
Dallas isn't. Their offense is pretty okay.
It's pretty okay. They didn't have CD yesterday.
Losing CD hurt, but their offense is still.
Look, we beat them.
Yeah.
We beat them plain and simple. It is what it is.
And it wasn't just that we beat them because they played bad. Like, we played well.
Yeah.
Ben Johnson'd that offense.
Yep.
That flea flicker that hung up in the air for, I swear to God, that thing was in the, I'm like, come down.
I'm telling you, I was like this. When I was talking to Austin, I was like, yeah, so look at that defensive end and blah, blah. And then he flipped it back to him. I was like, wait, what? And then I was like, what? And then we started something and we stood up like, ah!
Ben Johnson's in the house.
Yeah. It was pretty awesome.
Yeah.
Yeah, awesome day yesterday.
And Green Bay lost.
Yeah, I know.
Which probably isn't good for in your household.
Yeah, so don't let my face fool you. Don't let my face fool you. I'm not going to say a whole lot about that. I could say I'm not going to say much about it, but yeah, it was a wild day.
I'm speaking for other people.
Yeah, for other people, please do. Stock market. What are your thoughts right now? Let me set the table for you.
Okay.
It's September. It's almost the end of a quarter. We just had a huge quadruple witching expiration. It's almost the end of a quarter here, coming up at the end of the month in the 8 days. Stock market's at all-time highs.
Mm-hmm.
Gold and silver at all-time highs.
Mm-hmm.
We just had a rate cut.
Mm-hmm.
Apparently, jobs are in the toilet.
Mm-hmm.
What do you think right now?
We live in the Matrix. It's an art. This is all simulation. I don't know. And so I'm long a bunch of stuff, and I have been. One of them that I was long was Oklo, just long stock, just straight up stock. And I got out of it today when it was down at 125. I'm like, all right, that's it. This market's, finally, things actually, it made sense that the market was starting to pull back because gold and silver was starting to run. And it's like, okay, we're finally going to we just had triple witching or quadruple witching. We're going to turn over. Get out at 125. The stock is what, 140 now?
Stock is 140 now. Yeah, it's literally sitting at 140.
No, granted, I had the intelligence to replace it with some short puts, but I'm confused. I'm just vols, flat to up.
You're saying in the market, or you're saying you're just saying the market?
The market, yeah. It's like I feel like there's an air pocket.
So there are a lot of names that I've noticed recently that are stock up, vol up, and this is one of them. Oklo is one of them. Oracle is another. IonQ is another. Like there's a couple of different names where we're seeing basically these stocks are crashing up and the vol is getting bid. So that's one thing that for people who haven't seen that too often, this does happen.
Yeah,
it's happening.
And the vol has to keep up with the stock because of the expected moves. Like that, it's rare, but yes, it does happen.
It's happening. I am, it also happens to be at a time where I have decided to get short vol in some of those names. IonQ, I am short of Strangle. I am short of Strangle in Oklo. I'm short of Strangle in Oracle. I know Oracle today, I just readjusted earlier. I was looking at it and I'm like, am I all the way wrong on this thing? Like, not really. Look, it's like 70. IVR keeps climbing. I'm short of Strangle, which this is exactly what I want when I want a short Strangle. Yeah. I want a name that actually is big enough where I can get short like a $15 to $25 like Strangle in something. Yep. And sit on it for but this name keeps moving up, and the news about TikTok keeps coming out every single day. Yep. And I don't know how big their stake is going to be.
But it's clearly going to be big enough.
Is it big enough that it's going to make it run another $100? That's what I don't know about. I don't know. I haven't changed yet. I just readjusted today. I'm still in it, but you start asking yourself those questions, and maybe it's just my impatience. Maybe I just need to sit on it and do nothing. IonQ, again, there's been a lot going on with the computing names more recently, but how can you turn down a 54 IVR? How can you not sell a 73 IVR with no earnings to come? I mean...
Here's the other thing that's throwing me. Sorry, I meant to mention this before. I was going to do the SPX 0DT this morning, and when I do it, I sell the straddle and I buy wings 20 points on either side. On average, I collect 13 and change, sometimes as much as 15. I looked at it this morning, $11.
Too low.
I've never seen it.
Yeah.
12 I see, and I won't do it, but it was 11. I'm like, okay.
So you're saying the
at the money and 20 points wide.
So I'm just looking at for tomorrow. It's the at the money straddle is 27.10, and you're just saying 20 points wide around
wings.
that. Wings.
Yeah.
Let's see what tomorrow looks like. So right now it's 15.
Yeah, I mean it's over. Assuming nothing else changes, it's going to be $12, $13 tomorrow morning. It's like nothing is making sense. Like the 1 day, 0DT, there's no vol.
Mm-hmm. No.
In VIX, we're actually up. What are we up? Like we were up like 30, 40 cents earlier.
Yeah, a little bit, tiny,
but up
44 cents.
Yeah.
Speaking of, I'm going to close this position. What the hell is the point of being in this? We ain't getting no damn popping ball.
Please close
on top of the fact that
maybe that'll be what happens. Maybe you can.
When I originally did it, VIX was 19. Now, front month VIX is 1780. So this Zebra doesn't really fully make sense. I have been closing out some things today. So I'm trying to, I don't know. Hold on. You're right. Some things don't necessarily make sense. I don't have a problem with the stock market being up and running. That's fine. I just think
there's just conflicting signals. It's like there's certain things you expect. Like at this point, I think I've seen everything that the market can throw at me. I've been doing this for a couple of years now. And
sometimes I hate.
And usually there's like, okay, well, that and that are together. That makes sense. So, okay. But I look at gold and silver up as much as they are, and the market's showing no signs of weakness whatsoever. Vol's just sort of hanging around. It's like nothing. Saudi prince is buying shares of Snapchat, which I get myself in a lot of trouble making a joke about that. I mean, It was a pretty good joke too. I mean, I'm not gonna share it on air. But I made it up. It's pretty good.
I gotta leg it. I can't just get out. It won't let me.
It's just like nothing.
I've decided to close a few things. Not because I think the market is going to tank. Like I had a long Russell 2000 call spread. It had a nice run. I'm out for now. I'll get in at a better level if we do pull back, if it ever pulls back. I mean, one of the things that I'm not going to do is I've just decided to take longs off the table as opposed to trying to get short anything.
Mm-hmm.
So the last week or so, I've had this put butterfly. I even rolled it on Thursday to this Monday, thinking it would give another day. But what's the point of that? All the market did was just keep going higher. So this is a waste of my time, and it was a waste of money. I mean, whatever, it happens. So now I guess my biggest positions are these shorts. I'm short Oracle, I'm short IronQ, I'm short Oklo, I'm short Baidu. What could go wrong there?
Well, it is Rosh Hashanah tonight, and as the most Jewish, which is not saying anything, like being the most Jewish Jew in the office, or comes on.
You think you are?
More so than I know more than Tom does. He knows nothing.
He is not.
And I'm an atheist, but but it is Sel Rosh Hashanah by Yom Kippur. So I'm long. Overall, I'm long. I sold some micros, E-minis, some E-micros. How do you say that?
No, I'm not going to tell you. It's more fun to watch you struggle.
It can't be micro E-minis. That's just oxymoronic.
You're a micro E-mini.
I'm also oxymoronic. Whatever. I sold some just more so as a hedge because I'm
a hedge against what? You're all year long.
My overall portfolio.
Is it going to really make you feel good though if that thing say it drops 50
I'd rather
points?
make money on this than the rest of my positions altogether. I'd rather make like $500 on this position, even if it cost me $2,000.
Exactly. And that's exactly what's going to happen.
I called it.
That's exactly. But I called it. Yeah. Look, it's great that the markets are all at all-time highs. I think it's great for everybody's 401k. And again, all-time highs is not a reason to sell. I just haven't seen as many great ideas outside of the ones that I'm currently in. Again, a lot of them are these short names. These are, you can say they're a little bit risky to be short strangles and these names that have had these huge runs, but I find them fascinating. And I also think that at some point they're going to calm down and ball comes in.
Well, I do think you're going to get, I would be shocked if we had a straight run from August to the end of the year.
Mm-hmm.
And we saw no volatility heading into quadruple witching, which is kind of weird for September.
And none during it on Friday. No real big movements.
Volume was big. I think option volume was like 39% above normal.
I mean, the biggest thing that happened on Friday was Oklo running.
Yeah, that's back when I was long stock.
That was amazing.
By the way, thank you for the other one that you got me into just before we went on air.
What? Oh, Open?
Yeah, it's dropped like at least a dime.
So Josh and I were both talking about Open. Nothing. I been watching this name recently. It keeps showing up. I'm sure you guys know this. It keeps showing up on option lists. It's there's been a ton of volume with it, stock and options. Today it is the number 8. It is number 8 on the list of option activity in the entire market, right? Just below IWM. And it's been up here for a while, and it's been in the top 20 list for the last couple of weeks. It's a lender, or sort of a robo-lender, I think, kind of one of those.
Yeah, they do. They use blockchain technology for lending.
Do they?
Yeah,
what they do?
Yeah, it's something about, it's something.
I did see that, yeah.
It's AI mortgages. No,
that's better. So that's
better. AI mortgages. Somebody's got to explain that on AI mortgages.
This stock's been had a huge move today. Talk about short squeeze. This thing was as high as $94 as BETR. Now it's back down to the 55 range.
The wheelchair I ordered is AI.
Is it halted right now? I wonder if it is. Anyway, I don't know if Open's going to do that, but that would be pretty sweet.
Well, they're in tangentially related.
So I got that in the personal account. I don't have anything on in here. I have had stuff on in here, I think. Yeah, I don't know. There's been Oh yeah, Donald's talking about APLD. This is a name I've heard about. What is this? What is this name?
PLD,
what is this thing?
What is it? Never heard of it.
What does it do? Let me know. I don't know what it does.
APLD.
Yeah, I've seen this name, but I don't even know what it does.
Something. Applied AI.
It's Applied Digital Corp. Very nice job.
I can't really see.
It sounds like applied something.
Well, I can't. There's a glare on the screen right here, so I couldn't read it. I'm like,
there's a lot of options going on.
I'm just gonna start a shell company and call it Applied AI.
Well, you should.
And just do a SPAC offering. People be like, "What do you do?" Like, "Oh, well, we use AI."
A SPAC offering and AI.
Yeah, we use AI to solve for complex.
You got to add something with Bitcoin.
We fund it with
together.
We mine Bitcoin to use AI to solve for complex logistics. Like just a whole bunch of multi-syllabic words, and people's like, "Oh yeah, it sounds interesting."
Perfect. When's the IPO coming out?
Yeah.
Yeah, I've seen this thing before, but I don't even know what it does. There's a lot of names like this nowadays. Stock up, ball up. It's been a big thing more recently, and I think if anything, that again, I don't think all-time highs is a problem. I think a lot of names like this with stock up, vol up becomes a problem at some point or another.
It can. I agree with you. Listen, for a good portion of my career, when we broke out to all-time highs, I'm jumping in.
Mm-hmm.
There's something to be said for the momentum of it. I don't do that as much now, but stock up or asset price up, vol up, unless it's a commodity. It's like, okay. And like I said, the other things that just feel weird, the gold, silver, we get a rate cut, they project 2 more rate cuts, and bonds and notes fall.
That's why I just got out of bonds, because I don't really, I talked about this heading into the meeting, and I got short gold on air the day before the meeting, and I was like, why are you getting short gold? I'm like, because weird things happen around these meetings, and yeah, this is a good thing for gold, but I wouldn't be surprised in the medium term if it fades. And sure enough, it faded.
Yeah,
and I got out. But yeah, it's
Actually, the Fed meeting, I made a lot of.
Oh, APLD has a deal with CoreWeave, huh? Okay. Yeah.
It's a fintech.
They
use AI.
This is a good price level, honestly, at $20-something. Like this is, I wouldn't sell it here yet. People are you probably want to get long it, but I don't know. It needs more strikes. It needs more strikes, honestly.
I'm just looking at swoosh. It's gotten really quiet here for like the last hour.
Yeah, it has. Well, speaking of the week, there's not much going on this week at all.
Well, earnings-wise, you got a ton of data.
In general, what data?
You got a lot of data coming out this week. First of all, you got somebody from the Fed speaking every day.
Don't care.
Tomorrow, you got services and manufacturing PMI.
Don't care about that.
You got PCE at the end of the week.
Don't care about that.
Liar.
Keep going.
You're
I don't.
Liar. You're telling lies.
When's the last time we moved on PCE?
You're a liar who tells lies.
When's the last time we moved on PCE? Okay.
The last time it was announced.
No, we did not. And if you listen to Chris and Ilya, which you do, they will tell you.
Listen,
I heard this from them.
Just because I have it on doesn't mean
I heard this shit from them. They say that all the inputs that go into PCE basically come out of CPI and PPI, so we already know what they're going to be anyway, so it doesn't matter. They said that. They said a macro data point doesn't matter. Imagine that. Okay. That's why we don't care. Dude, there's nothing this week.
You trade off of them a lot?
All the time.
Chris, if you're watching, you're welcome.
All the time. They're really, there isn't much this week. There's GDP.
New home sales.
I see, existing home sales.
It's the second revision of GDP, which is always a big deal to me.
There's nothing this week. And so you know what that means? That means these names have room to just keep running.
Powell's talking tomorrow.
These names have room to just keep running.
Listen, you know what else you have this week?
What?
The Trump administration is still around. They could hit tariffs. They could take tariffs off.
Exactly.
You could have a binary event any day of the week.
You're right about that. But this data is like whatever on our calendar is not worth anything. Okay.
The next year, it's not a very unique week. Say it. Say it. You want to say it.
You already said it. I don't have to.
I got into it with James earlier because he said very unique, and I lost it.
You already said it. I don't have to. Somebody asked about BBAI. I had, I was trading this name maybe about 2 years ago. Yeah. No real thoughts from me. It's pretty cheap. There's
stocks like this are fun. Like $6-7. You want to take a shot? Kind of like open. It's like if you're gonna take a shot, take a shot.
Yeah, I wouldn't blame you at all if I take a shot on this, whether it's stock or whether it's options. Yeah. I personally I would like to see it in a list like I look at on the OIC on the options list. Like just having a name in there just makes it doubly more interesting to me and makes me want to jump into it. So
there's also a listing requirement that once you fall below $7 or $8, I believe, don't quote me on the exact number, but you can end up on the pink sheets. So stuff like that can get. You go on
$7 or $8?
Yeah, there's something.
Nah, it's got to be lower than that. It's got to be like
no,
$2.
It's like, or no. I'm sorry. It's funds to invest in it. It has to be like $7 or $8.
Oh, yeah, probably, yeah, something like that.
It's something like that.
Yeah, below the listing exchange, though, I think it's.
I misspoke when I said that.
When you get long RH, it has a 26.5 IV rank.
No,
Restoration
their stuff is overpriced, and it's. I'm just doing my best Tom impression right now.
Their stuff is overpriced.
Oh, it's overpriced as hell.
Yeah, the restaurant is kind of cool.
I've never been in the restaurant. I bought something from there once years and years ago, and I'm like, we paid how much for this?
Yeah, right. No, this stuff is overpriced. When I get long RH, this stock was down in stock. It was one that I was kind of interested in, but I don't have any interest now. No. And see, that's what I mean. Like I could sit here and easily make a case for you why you could get long this name. There's no doubt about it. But I think there's better opportunities that could come on the other side of a pullback or whatever.
Yeah.
And then you'll be like, why the hell am I in RH when I can just get in and then one of these main names that we pay attention to all the time, the NVIDIAs or the Apples or AMDs or something like that. Maybe even Intel again.
Tesla.
Intel is halfway interesting again.
Intel, everybody wants a piece of Intel all of a sudden. They're like,
I know, right?
They're like the. Yeah, I'm gonna get myself in trouble. They're like I remember. They're like the girl that shows up at your high school reunion 20 years later, and you don't know who it is because she's
you're like, who's that?
Like, who is that?
Yeah.
And you're like, you're who?
Yeah.
Like,
yeah.
Damn. And cancel.
I know, right? Yeah, exactly. Oh, gosh.
Actually, it happened to me once. A girl that I knew my whole life. She grew like 1.5 feet in college, and I had no idea who she was when I saw her at our reunion.
She's like, Josh?
She's like, hey, Josh. I'm like, and I'm just looking at her. And she's like, do you know who I am? And I'm like, clueless. And when she told me who she was, I'm like, you're like 1.5 feet taller than you were when we graduated high school.
Yeah. And probably like 50 pounds lighter.
I'm done talking.
Oh man,
100.
Yeah, there's so many different things that I could make happen. I don't want to make happen right now.
I want to push.
I don't want to push, exactly. And like I said, like this RH was definitely a name that I was looking at for Zebra, for the Zebra play. This
Are the markets
CMG.
that are okay?
RH?
I remember something about RH markets not being great.
I
Maybe
don't
I'm
think they're
wrong.
that great. Probably, they're a little wide. Yeah, they are. They can be a little wide sometimes.
Nike, I was looking at Nike, but
Nike, no chance.
Well, take a look at the chart on Nike.
Nike, that stock is done.
Look at the chart.
Yeah, what about it?
All right, you see that huge gap right there?
Yeah, right here.
Yeah.
Yeah.
Yeah. I'd like to buy it on after that fills in.
But you don't want to be a Nike.
Dude, I want to be in everything that's not manufactured in this country in about 3.5 years.
Because why?
Because once you get a change in administrations, you're going to get
stocks are going to bounce back
in tariff policies.
Maybe.
Somebody's going to be like, I want my Jordans.
What I do know is that Oklo keeps going up. Oracle
Don't talk about
up.
Oh my God, it's
Tesla
142.
keeps
Oh my
going
God.
up.
Can't look at that Oklo.
These names just keep going up. IonQ still positive. Baidu is still positive. These names have
I
continually.
looked at IonQ last week and I didn't buy it. Instead, I bought. What did I buy?
We can still buy RGTI if you
I bought
want.
QUBT instead.
You can buy RGTI.
That's on 250 right
That's my play. I got this in the personal account. This one is. I got leap called in here.
Oklo of $7.5.
From like the teens. This one is the next one. What are the other ones? QUBT.
Yeah, that's down $2.5. That's the one I bought.
70 million in volume. And then IonQ is how much? 29 million in volume. Rigatoni, I call it.
Rigatoni.
76 million.
I'm in Rigatoni.
QBTS is the last one. 59. I mean, they're all doing the same thing. It's kind of wild.
Have you done any of the IPOs?
I did, John V. I did give up CRM. I just pitched that today. Yep, I just pitched it today. for no other reason than just, I mean, if it makes you feel any better, I still own this in my personal account, but in the show account, I'm out. I still think it's one that bounces back. And look, if we do have a pullback, I'm going to jump back in. It'll be one that'll be interesting. But I just wanted to take some positions off the table and sort of start fresh, kind of clear my head. I just got the biggest things I'm worried about right now are these shorts, as you can see, the Oracles, IonQ, Oklo, and Baidu. And those are the main ones I'm managing. I still have this IBIT long zebra in here. I still have, this kind of put butterfly and in the euro, which at some point I may just change back to a put spread. I was sort of, staving off some risk in a way, heading into the meeting. But
I'm with you, Charlie.
Now I might buy it back. Yeah, the market is a little bit, just trying to figure it out here. And so I wanted to cut a couple of positions and then also have the ability to have some capital in case something pops up. Again, I think it's going to be a quiet week. I think let me rephrase that. I think I haven't really seen too many quiet weeks this year. While I think it's going to be quiet from the standpoint of news, sort of, I should say macro news, I think we're still going to see a lot of movement and a lot of different names. There's been a lot of different single list names that have just been moving more recently.
Those stocks that you're talking about, now those are like FOMO stocks. Like, Oklos, and so people are just jumping on at the tail end of it. I see after I made the comment that SPOOs haven't done anything for the last 2 hours, we've now just rallied like 4 or 5
You know what's a little bit surprising is that Oklo isn't in this top 20 list of option-related activity.
I think it's just a squeeze.
I know, but even when GME was in squeeze mode, it was in a lot of options trading. There's not a lot of options.
What's the open interest in like some of the in-the-money calls?
I don't know, but just looking at the volume on the day, just a simple look at the volume.
A lot of volume. If you got a lot of in-the-money short calls, you got to buy the stock.
I'm just saying, there is in the front month like these weeklies, but that just tells you the rest of the stuff is a little expensive that people aren't trading.
Well, I think and good. It is expensive. The stock almost doubled in it has doubled in a week.
Yeah,
it's easy to get wrapped up in these types of markets and just think, oh, we're just going to run, and if I put $1,000 in, I'm going to have $5.
Surprising that Oracle isn't on the top 20 list neither, actually, as far as options go.
That's interesting.
It is interesting. Like you would think it would be. You know, another name that has been
especially with
SoFi.
Yeah, it's been on fire. Yeah, I looked at that this morning.
Yeah, I look like a genius talking about that name. I said something about it in an article. I look like a genius. That's right. That's another one. This BE.
Is that the one that I wrote for you?
No. I am the only person around here you don't write articles for. You write articles for. You're a ghostwriter for a lot of people.
I am that.
This BE, it's another name. I know. I looked at selling a strangle in here, but then I said, nah, I'm just asking for it because I'm already short strangles in a lot of these names that are stock up, vol up. I feel like I'd be asking for it if I sell one here. But it looks so good. Look at this thing. Like, this is a great strangle. The 60-120 strangle with stock trading at 86.
Dude, we looked at the what did I look at? I looked at the Oklo strangle this morning, the 280 or whatever it was, and it was like $12. Yeah. How did that work out?
It'd be working out just fine. Oh man.
Bob, I don't think anybody made money in the 0DTs today. They were trading too cheap.
Yeah, I don't think so.
You would have had to have held on to them all day because vol has not moved at all.
Well, I might sell the strangle in BE. I don't know. We'll see if Josh talks me out of it, but for now, I guess we're out of time, man.
We are.
I know. Thanks. It goes fast when you're having fun.
Yeah.
Folks, thanks for watching the show. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Hey everybody, well the bullish precious metals, bearish equities theme is still playing out nicely. I know that may seem odd because equities are up to lifetime highs, but it's a matter of proportion. My big long position, the one I'm really a big believer in, as you know, is palladium. Palladium's up about $50, 4.27%, whereas say the Dow, the YM futures are up 0.18%. So they're both green, but palladium is beating the pants off of equities. And I continue to believe, hard as it might be to imagine, that equities will go down in our lifetimes. But on a relative scale, precious metals is still ruling the roost because on a pro rata basis, like it's the equivalent of gold being up about $150 an ounce today. So that's cool. Let's jump in. Got a lot of charts. I will go at a brisk pace. We'll begin with the spider. As required by federal law, we are up to lifetime highs and have been so pretty much since April 7. What can you say? Just green every day. There's the diamonds up a little bit. Start off a little bit weak, ending strong. Looks like another lifetime high close on that. The cubes are especially strong, partly because of this sort of, we'll kindly call it a virtuous cycle of two more mega companies doing a deal with each other in a rather circular fashion. So it wasn't Oracle this time. This time it was NVIDIA. So NVIDIA doing a $100 billion deal with OpenAI, which of course is not public, but they are, I think, the largest private company in the world. So that has pushed NVIDIA up, as well as a lot of other AI-related stocks. Alphabet is actually down a bit. It's had a tremendous 5 months or so, but it's showing a little bit of weakness. Lifetime high remains on Friday. I'm not sure if that's because they weren't part of this big deal. I don't know, but NVIDIA is doing great. It's up 6.71. Looks like probably a lifetime high close. We have matched the earlier intraday peak. And as you can see, this is the biggest up day in many, many months for NVIDIA. Taiwan Semiconductor also up, lifetime high on this one. And all that's flowing into SMH, the semiconductor ETF, which itself is also at a lifetime high. SMH up about 2.25%, like so. We had been banging around here for months and months and months. Finally here in early July, getting above that level, range bound for a while, and then since the end of August, pretty much a straight line higher. So AI continues to have tremendous sway. Even in just kind of related areas, like here's Oklo. This is Sam Altman's nuclear energy company, lifetime high on this one, up 4.34%. And then, of course, in the world of quantum computing, that's also caught fire again, especially last week. But here's Rigetti RGTI up, lifetime high, about 2% plus on this one. So it will keep going up till it stops. This is just feeding on itself. In terms of precious metals, though, which is kind of my deep love affair, here is gold getting close to $3,800 an ounce, which has never happened before. It looks, I don't think we're going to get out of this year with that 4,000 an ounce on the record books. But this was an incredible bullish pattern down here. It took literally over a decade to hammer out. But once it was done, it was done. And the breakout was around 2000, and we were approaching the doubling of that asset in a relatively short amount of time. The breakout was, it was only early last year. And so gold is just doing tremendously well because the people of Earth realizing the paper currency just ain't worth that much. And so the governments of the world, especially China, are gobbling up gold as fast as they can find it. The classic real money, the barbarous relic, as it's sometimes called, gold is doing great. But my big hang-up is with palladium, which does not have nearly the amazing prosperity of gold over the past couple of years, but I love the setup because this is, as I pointed out, the third instance in this history of a setup like this. This is the cleanest. It's thinly traded. It can do a lot of fake outs along the way, but I think it's going to ultimately do quite well. In sharp contrast to all this wonderful precious metal stuff, crypto continues to not do so peachy. The lifetime high on this one remains back a little more than a month ago and about $12,000 above present price levels. So gold and crypto have definitely disconnected. And crypto success was like 99% due to like political machinations. And they're kind of out of that juice right now. And so crypto's like shrugging its shoulders. And so it's being left out in the cold. Ethereum, for example, down about 8% on the day. Everyone's going crazy about Ethereum back here near the end of August. And it's burned off, approaching 20% of its entire value since that time. And then there's this catastrophe here, which is the Trump investment, which is down. I've lost track. A very large number. This doesn't incorporate its entire history. I think it peaked at around 100. Suffice to say, it's at lifetime lows today, looking pretty grim for that choice of investment vehicle. But getting back to the real stuff, the stuff you can hold in your hands, the stuff that's been with us since the days of the cavemen, gold GLD is up 1.71%, lifetime high on this one. It does not seem to need a breather. I sure wish it would take one because I would like more of this stuff, but it just keeps tromping higher. Silver, even better, 2.52%, blasting above this wonderful bullish pattern that you and I have been tracking for many months. Miners, it's just jet fuel. I mean, this is crazy. It's going hyperbolic. This will plunge at some point. I try from time to time to short it. It never works out. This will plunge at some point. This is so overbought. If you look at dollar X, well, let's look at it together. Here's dollar XAU. Look at this. I mean, that's just bonkers. So there's some diamond hands out there hanging on to this stuff, and they're doing very well for themselves. But things like this, the trees do not grow to the sky. But back to the whole palladium thing, and platinum's doing well also, by the way. But this is palladium. The unlike /PA, which showed 3 basing patterns, this only shows 2 because the history doesn't go back as far. This is all I've got. Well, it's not all I've got. It's all it didn't exist before then. So this is the entire history of this financial instrument. As I've mentioned, pretty thinly traded. The bid ask on this is usually 10, 15, 20, 25 cents, maybe more. It only trades in the low 6 figures each day typically. But for the long haul, I like it, and it's what I'm hanging on to in size. So fingers crossed. Even though everything's green, and even though we're at lifetime highs everywhere you look, I still have my arms crossed in my 20 short positions, and most of them are down. I got a couple of stinkers earlier. I got stopped out of TER first thing this morning. But on the whole, it's been a pretty good day. Here's just a few odds and ends from that trash pile. Here's D.R. Horton, DHI. We talked about this last week with the gap close. So we're down over 2% on DHI. Dick's Sporting Goods, DKS. This was a new idea last week. I emphasize the pattern is not complete, but I've tightened up the stop on this one because it's moving in the right direction. We're down 1.77% on this. This is a very large head and shoulders pattern, which I'll just underline again, is not finished yet and may never finish. This is completely speculative. Meta is down, which is pretty amazing because the NQ is up triple digits like usual. Meta has been slipping today. It's at the day's lows right now. I'm an enthusiastic bear on Meta for reasons that I keep hinting at but can never talk about. But my stop on this one is basically linked to Friday's high. So that's cool. Abercrombie and Fitch, where are you, ANF? There you are. Down almost 4%, slipping beneath that brief pop we had on Thursday and Friday. A couple more of these. Here's Boeing, BA, down about 1.5%. It peaked years ago. You can't say that about many big stocks like this, but Boeing's managed to do it. They peaked about going on 7 years now. So they've been just totally out in the cold, left out in the cold versus their compatriots. And then Wayfair, this had been just a eye-popping explosion higher, going up hundreds and hundreds and hundreds of percent. I guess because we're all buying furniture from them now, I don't know, but I think we've peaked on this one. Here's the double top I perceive on this one, and we're down about 3% on symbol W. So yay. But, the thing is that with the interest rate cut last week, people are scratching their heads because, as I've mentioned, bonds are kind of the weird one. The shorter term stuff, for 3, 5, 10 years, all that, that's been fine, but the long, the 30 years, continue to sink. That's being felt in places one would expect to be going higher. Like here's XHB, the home builders ETF. So this is down again. This has been sliding for weeks at this point. And here's TLT, down again about 1/3%. So paradoxically, and this is one of those kind of buy the rumor, sell the news kind of things, I shorted it on this day near the peak because of this gap, 91.10. That was the gap, didn't close it, turned south, and since then, red, 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 red. It's not thrilling, it doesn't go up and down 10% a day, but it's moving in the right way, and as expected, so that's pretty righteous too. But, not to seem trite, but it is just a truism at this point. This market will keep going up until it stops going up. This trend line has across the board, whether you're looking at the Indu, the CompQ, the NDX, the OEX, you name it. It is just steady, smooth sailing. And it will break at some point. I'll probably mention it when it does. But as it is now, we just wait it out and look for the opportunities beneath the rocks here and there. So hope you're doing well. And we'll have a good full week ahead, so I will see you tomorrow. Thanks for stopping by.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through a scraper. You know, one of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, you know, when you smash them. It's great.
In with Tony. You mix it in.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live with the last call. Sadnov, you finally got it right. It was by Rosh Hashanah.
Oh my God, you freaking idiots. All of you guys. You and your whole little group of pista monkeys.
Just so you know, it's not until sundown. You sell now, Sadnov. Right where you want them. Okay? I mean, it's called pot odds, Sadnov.
Hold on. You can't sell after because you would have already missed the move.
No, you sell now before the close. Don't you understand?
Yeah, you sell before the close. They didn't say that in the.
But this is nothing.
They didn't say that in the Trader's Almanac, and they didn't say that when all you guys. It
was implied. It was
when all you Chat GPTers went out and looked at
all the good people knew that, Sadnov. Maybe you just haven't been, maybe you just haven't been where you should be.
Well, the truth is, I had it right all along. It's always been buy Rosh Hashanah, sell Yom Kippur. Now you can sell them till your hands bleed.
Oh, no, don't get on that bandwagon. I don't want to hear it. Even the S&Ps, without a down tick, up 31, even fooled me today with volatility up 20 cents. NASDAQ up 143, Russell up 15, and the Dow up 100. It is a 0.5 percentage point move, well above the expected move of $17 on the E-mini S&P. So no bueno, unless you really manage your 0-day options.
Oh yeah. By the way, can I thank you for that too? Thank you for the 0-day SPX trade.
It was a home run for 3 hours. You had 3 hours to do it this.
I didn't even have 15 minutes. Nice try.
You could have made your 15 to 20% easy.
No, you're wrong. Johnny, listen, you're wrong. I sold the low tick.
Who you calling Johnny?
I'm calling you and your whole Johnny family Johnnies.
Oh.
Just so you know.
Easy.
Calling the whole thing, only the male side. Okay.
Calling all Johnnies.
Yeah. Okay. All you guys completely so far off your rocker.
Relax there now. Relax there. Bonds down 3 ticks, 116.08. You did have a little bit of a good scalp in there, caught a little bit of
I don't care. Didn't matter.
It's the only thing you did positive. Let me give it to you today.
No, I was short some Reddit.
We'll talk about a lot of other things in a moment.
I was short some Reddit. I was short some Google. Those things all worked. The stocks that were down today stayed down. And the stocks that were up stayed up. This was not a lot of reversals intraday. I mean, maybe Nvidia, but that's about it.
Microsoft has been soft all day too.
Yeah, a lot of stocks. It's a weird day with volatility up and gold up $75 and silver up bucking.
I'm so done with gold. I can't really. The world's worst commodity trader. I just can't.
Stick out the word commodity.
What's that?
Nothing.
I do it small. I don't trade it big. And I know they're going to slap me, but I figure I got the intestinal fortitude. You know what I mean?
I couldn't wait to sell Apple today. I sold it 4 different times. Needless to say, it hasn't worked. I sold S&Ps today. You took me down in the SPX.
Oh, man.
I took myself down in other things. This was just an all-around bad effort today. I blame mostly you. Because I think that's reasonable.
It's fair. Sure.
But no, I didn't have a good effort today. I mean, this is probably the move, the craziest move of me all based on our research today messed me up too, because that Apple move. So you had 3 standard deviations followed by 2 standard. I'm not exactly sure actually what the expected move was. Let me just see.
Pretty much. I mean, expected was $5 or less 4 days for the next 4 days.
Oh yeah. There's a 4 standard deviation move today. At 3 standard deviation move 5. That's ridiculous. So I'm sitting there with Apple, and now I'm short it. And
now what?
Well, I want to sell more, but I think I can wait till after the close and do it in the post market.
Get higher?
I think so. I don't know.
Okie dokie. Well, see what happens.
Yeah.
Don't wait too long though, because you remember sundown.
Oh my God.
I'm just saying.
Oh my God. Yeah.
Just saying.
I'm just looking around to see what the hell do I need to do.
Sadnov, the olive branch has been tossed across the aisle. I know you'll accept it. My Taiwanese sources say that ABC says Jimmy Kimmel can come back next week. Are we all good now?
Yeah, because I think about 2 million people canceled their Disney subscriptions. Disney. Money talks. People canceling their trip
down 90 cents. Let's not. Let's not talk out of our arse.
Well, I sold all my Disney stock if it matters to you.
Oh, did you? What'd you have? 3 shares you were going to give to your grandkid? Come on, get out of here.
No, I've never actually owned Disney, to be fair.
Yeah.
I've never been to Disney. I've never owned Disney. I'll never go to Disney. And it had nothing to do with Jimmy Kimmel. I'm just not going to Disney. I remember the one time I got trapped at a restaurant in Disney. I couldn't even get out of that. I was like, oh my God, who would actually come here because they want to? Driving around that like giant, have you been there? Yeah, you've been there.
Yeah, sure.
Oh my God. Get me out of here. Save me. But all right, let's talk more importantly. Yeah, the bonds were kind of piggish. I'm really surprised the notes are down. Let me see where they are right now.
Look at how many even the S&Ps have traded today, Sadnov. 830,000.
Why? That doesn't make any sense why it's so low.
Well, the absence of buyers, obviously.
Well, how can they have an absence of buyers?
Just teasing you. Just teasing you.
How is there an absence I'm just curious where it doesn't look like there's an absence of buyers. They're up 30. Yeah, I sold them a couple times today. It didn't work once.
Oh. Going into foliage weekend. Oof.
It's a lot of unnecessary pressure on foliage weekend.
Totally.
And she doesn't understand that kind of stuff. It's not like,
I know. She lives oblivious to the pressure.
Yeah.
Nvidia buying their own chips. Stocks up $6.
Yeah, instead of buying their own stock now, they're just buying their own chips.
It makes it easier. It's accretive that way.
I'm going to try that.
You should start buying your own coffee, which I hear coffee prices are going up, Sadlov. If you can't make money now, forget about it. You're going to have to pass that on to the consumer. Not going to be good.
Oh, yeah. No.
Don't worry. Bread prices are stable.
Don't worry. Yeah, I think we're going to stop selling coffee. We're just going to sell Trader Joe's coffee or something.
Why not?
All right. Well, anyway, as I go through my list here of just stuff today.
Oracle up 19. Sorry.
I don't really care. I don't have an Oracle position. But as I go through my list here, just to have a little chit chat. We talked about the stock indices. We talked about bonds. They've just been range bound all day. I can't believe they're on their butts. Notes the same way. I'm bidding 21.5 right now for some notes, but that's just double down.
Mm-hmm.
The VIX being up 25 cents, the futures, that's kind of interesting. And by the way,
yeah, it honestly is. Don't you think?
Yeah, I think it is. And by the way, the VIX cash is up a lot.
You talking about VIX?
Yeah, I mean, I'm just saying it's up over 50 cents.
Yeah.
Well, it's up 3%.
68% of the time, you're 100% right. Sure.
On the day the market's making record highs. I mean, it's kind of weird.
A little bit. I mean, I said, and I've said all along, we needed an update with the VIX /VX higher. You're getting that today, but
okay. So let me ask you a question.
Yeah.
Then you're taking credit for everything?
I am taking credit for everything. That's right. Much like you will be.
Every direction, you got everything covered as foretold.
No. I actually thought we were going to sell off earlier today. I thought we would rally a little bit, not get the positive, and we would sell off. So
okay, still going through commodities. We talked about gold and silver. They're out of control today. The dollar again gets freaking annihilated today versus the euro.
So are you just telling me you haven't gotten anything right for a while in the dollar? Is that what you're telling me?
No, the euro, I'm fine. I'm long yen, so I'm fine. Natural gas got killed today. I'm long natural gas. That was not good. Bitcoin got killed today, but we don't have any of that really. And all the softs got myrtleized today.
Yeah, Bitcoin and Ethereum, Tom. Ethereum down 300. That's almost a 7% move.
I know, and believe me, I have ETHA with one of my worst stocks today. Reddit got killed. Apple up 10. Reddit down. Look at these stocks. Okay, can I just give you 3 stocks on my screen in a row? Apple up 10, Reddit down 10, Meta down 10, Coinbase down 10, Amazon down 3.5, Palantir down 3.5, Roku down 3, and then Nvidia up 6. How the hell are we where we are? I don't get it. Tesla up 8, but Microsoft down 3, Google down 3. You know, we're I don't know. We're all it's crazy town.
It is a little unusual. I will give you that. You don't have all the rising tides right now with all the ships. No, you are correct.
Yeah, I can go on, but that's kind of the big kids, and the rest of the list is somewhere wrapped around in there. Yeah, I'm surprised by the S&P volume. Actually, you know what? I'm not, because when we go up, nobody trades. When we go down, that's when everybody jumps in. So I'm not really surprised by the S&P volume. I think if there's any surprise today, it's probably just volatility, just trading up, which is a little bit weird. So either two things are going to happen tomorrow. Either we're crashing or volatility is going to crash.
Either we're going to have a downtick. Let's just start with a downtick. Either we're going to have a downtick or volatility is going to continue to be soft. And volatility is more mean reverting than the market. But I don't know. Like you just stated, a lot of stocks here are kind of making some unusual moves into all-time highs. AppLovin's been a stock that's taken us there. It's down $9. CRCL is down $7. That BMNR, I know it's only a $55 stock, but this is another stock that's been in play when the market rallies. This thing goes kaboom, and this time it's down 10%, almost $6. So there are a couple of stocks that give some hope to some two-sided action. AVGO is another one. I know it's only $5 on a $300 and almost $40 stock, but still a few up days here, some weakness here. So listen, maybe we're going to get other stocks that are going to lead this market higher. But what is this? The 97th up day in a row, Thomas? Or if it's not, it certainly feels like it.
I don't look at charts anymore. Not that I ever did, but I haven't looked at anything in so long because I don't want to see the picture, because I already know what I have on and I don't need any help.
How about this, Sosnoff? In the S&P 500, what do you think the up down is on the? Remember, there's 500 of them, so the number has to equal 500.
I would say it wouldn't surprise me if there was more down stocks than up stocks today.
You'd be wrong, but go ahead.
Oh, then I'll say 250, 250.
You're right. 260, 240. 260 up, 240 down.
Okay, well, close enough.
Yeah, all I'm saying is you don't have a lot of, breath.
No good ticky.
No good ticky. No good ticky today. No good ticky.
No good ticky.
Oh my God, I had an email, not today, but it had to be on Friday or Thursday or something like that, asking me if I've ever heard of the ticky. I go, yeah. I've heard of ticky. We used to scream its name in the pit when we needed to move. Look at the ticky.
We used to have in our office, we had the ticky on a screen, and and every time it went like plus, up or down 30, because it was basically a Dow ticky kind of thing. And so every time it was plus 30, that meant the last 30 ticks, every single stock had an uptick.
Positive or all negative, right?
So we would always, plus 30, we'd sell futures, down 30, we'd buy futures, right? Every single time. It never worked. Like one time, I think it worked, and every other time we thought it would work.
Yeah, right.
Yeah, no, it's kind of interesting because let's just take a look here. What's this date? Since 9/2, what day is today?
It's the 22nd, Sal. No, since the beginning of September, we haven't had a downtick. That's correct. Is that what you're trying to say?
Yeah, since the beginning of September, we've basically had 3 down days.
Minuscule, yeah, sure.
Yeah, small down days, 2 or 3 small down days. We have gone in September alone. This is very interesting. From let's call it 6,400 to 6,750.
Without really taking a breather.
Without taking a breather, yeah. So we've had 350 points of up move. Now, if you looked at, let's take a quick look, SPX from now to the end of the year, 350 up points would take us right now to about, let's see, where are we?
7,000.
Plus or minus 350. It would be to the end of December, expected move. Middle of December.
7,000. It's a nice round number. NASDAQ over 25,000, Sadnoff, right here. Get your 25,000 hats out.
It's been there.
All right, I know. Well, I'm just telling you right now.
Yeah, I don't have
2,500.
So you're going to sell them at 25,000 NASDAQ?
I'd be out 11 points if I did.
Yeah, but it's a fun little trade here. Give it to him. Let him have it. You're a tough guy.
Yeah, you're a tough guy. I'm scared. I'm playing injured. Remember? You didn't even ask me how my hand is feeling.
I can see you're fine.
I'm not fine. I can't use it. It hurts.
What do you need that hand for anyway?
Guidance. How can I how can I guide them? Can't guide them. It's not good. Bad.
Well, at least I know one person in your house is happy.
No, man, I got to do all the work. You kidding me? It's not happy at all. It's bad. Very bad.
All right, I need something to do here for the close.
9 minutes to go. Why don't you sell some puts or schmutz and SPX? Go ahead, do it. If we can get a down move, it's the only way we can do it is if you sell something. Now you missed it. The Spoos rallied another point.
Not a chance. I want to sell some NASDAQ futures here at 2,500, but I got it. I have this funny little feeling that I could do it better tomorrow.
I don't know why. I mean, yeah, I know why, because every day we open higher. I mean, so it's not a foolish thing. I mean, I guess Bitcoin is a little bit stubborn, and
actually, we opened sharply lower this morning, so it's the up openings
over 50 handle move top to bottom.
I know we're down 22 points on the opening, 22, 21. We're up 32 now, but I don't want a down opening tomorrow. Down openings are death for bears. We need an up opening.
Now you tell us. You couldn't tell us that earlier today. Then we could have benefited from it.
I need an up opening. Telling you right now.
Volatility hanging in there, up 25 cents, actually creeping up a little bit.
Yeah. Well, didn't we buy some volatility on Friday?
During the show?
Yeah. Did we buy?
Yes, we did. We scalped it.
Oh, we scalped it. But we bought VXM, right?
Yeah. We did good.
Yeah, that was a very aggressive.
Gold, silver, you did good in gold, silver. You could probably put that on again if you're really interested.
I don't know how that would have done today. It probably would have been okay. Gold, silver up $1.40. It's pretty big.
Yeah.
Yeah. All right. Well, I got some.
A little something in net gas, 42 IV rank, new lows.
I already did it. I already did way too much in net gas. I'm not prepared for net gas to go to $1.
I'm going to ask you something now that we've rallied a little bit that you asked me last night. What's cheap?
Yeah, I did ask you that last night. Okay. You want to know what's cheap?
Yeah.
Nat gas.
Bonds.
Boeing. Bonds on balance. Bonds.
Why are bonds going down?
I don't know. They've been down every single day since the Fed lowered rates. Hold on. I'll give you more. Oh, I mean, I'm going to say corn, wheat, and soybeans are not expensive, but I don't know if they're cheap. What else is cheap here? I mean, volatility for sure.
Besides you this weekend. Yes, go ahead.
PayPal.
I
know I'm reaching.
Yeah, you're reaching.
Yeah. What else is cheap? There's not much.
Yeah.
I mean, what, Nike?
Oh, please.
Starbucks.
These are stocks that have been cheap.
TTD, I'm out of cheap. And Chipotle, your favorite. Those are your cheap stocks. They're all crap. And I'll tell you what, I'll throw Costco in the mix, give you an expensive stock.
Yeah, I last time for option trades every Tuesday and Thursday back in early September when Costco was kind of sliding, I did a little bit of a long delta Costco trade. We're there again. Maybe Costco is the play. Ivy rank at 31.
Yeah, it's
earnings September 25th. What are you trying to get me in trouble with the earnings now? You're supposed to look after me. You told my mom you would look after me. You hurt me, okay, by pulling my arm, okay? You hurt me. And we were in New York on stage. You're like, come here. You pull me. You hurt my arm. You don't even know your own strength sometimes. And now you want me to trade Costco when it has earnings in 3 days. What?
I'm just saying, you want something cheap. That's all I got that's cheap. And those are the worst list of cheap stocks I've ever seen. But if you want expensive stuff, I can go on for hours.
That's it. Well, everything got a little bit more expensive today, South. If we make new all-time highs.
Yep. Well, I mean,
Uh-oh. Oh, you bought more notes. You didn't want to see that come through.
no, I did. I'm totally fine with that.
Oh, no.
I'm very comfortable buying 10-year notes here. I don't think there's too much downside.
Oh.
I guess that's going to come back and haunt me someday.
Someday real soon, probably, too.
Yeah.
Ugh.
Let's see what else do we got going on here as we're definitely not stumbling into the close.
Oh, we had our first downtick of the day, 4 handles there. I don't know if you caught them in the evening S&Ps were over 29.
I caught it. It was huge.
Yeah, sure.
Well, I'm positioned. I don't like my position.
I'm positioned. I don't like my position.
I'm positioned and I don't like my position. I got nothing going for me. I got to roll. I'm going to do something that I absolutely hate.
What is that?
I'm going to roll my 0 day, which you cost me a lot of money on, to the next day.
All you did was sell calls? And that was my trade?
That was your trade. You went at the expected move. Don't you remember?
I do remember. But I mean, so you just sold one side?
That's right. At the expected move. You told me it was a layup. $11 expected move. I went $11 out of the money or $12 out of the money. And it went $25.
Yeah, a little bit wrong.
A little bit. I'm going to come back tomorrow, make it all back.
You got some duration now. I just went to sell the $11 away puts is what I told you.
No, you didn't. But here's what I'm going to do now. I'm going to roll this into perpetuity until I make money.
You know what? If you trade it small enough, you might have the opportunity to do that.
I'm going to do it.
I'm going to do it.
I'm going to do it. I'm going to trade it in perpetuity. All right, let's see here. Man. S&P's up 33, new high. NASDAQ, new high. Oh, I didn't sell the NASDAQ futures. Now you can sell them back.
In 2514, they're 3 points higher than before. I mean, was that what we were waiting for?
I don't know. I'm going to sell 15s. If I can.
Just put it out there. They seem to trade there.
I agree. Just put them out there. I learned my lesson today. You don't reach for it. Don't bang anything. But when they start going down and you don't bang anything, you're not going to get filled with anything.
Okie dokie.
All right, what's the best short on the board for tomorrow? I think it's Apple. I think you sell Apple after the close.
Oh,
I think you sell Apple in the post market.
You know what? I like the call. Apple had been an underperformer for some time, caught itself a little bit of a bid, and now it's gone parabolic. I mean, it really has. I mean, you remember in April, it hardly rallied off of its lows, and now it's made everything back. It's it's approaching all-time highs. I will give you that. Good call by you. Although Ivy rank of 15. Ugh.
I just got shorted today, so I'm going to try to sell a little more in the post market. I should be down about, what do we say, 15%. 15% is let's see, 37.50. According to our research, it should be down 37.50 tomorrow. Within the next few weeks, it should be down $37.50. Just so mark your calendars here, boys and girls. It's trading for 256. It should trade to 220 in the next 3 weeks.
Easy breezy.
According to our research.
Correct.
I have a post-market offer ready to be sent in about uno momento, por favor.
Yeah, you got less than a minute left of this day, Sadnoff. Even the S&Ps won't even trade 1 million cars, Sadnoff. 964 on the day. They're going to close up 28, Sadnoff. They can't find a bid. NASDAQ, look at you. What did you want? The dollar? Look, it cost yourself money. We're under 25,000 as for.
Oh, my God.
Sadnoff, I'm telling you right now, the holiday's starting. Get in, get early. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with you know who. Peace. Yes, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, with confirm and send. But before we do, can we please take a quick look at the market? Even the S&Ps, they look like they're down around 19 handles right now, Sadloff. Basically a tight market overnight, or a tight range overnight, of about 25 to 30 handles here on the E-mini S&Ps. The expected move for today is closer to 17 or 18 handles. For the week, you're looking at 66 handles on the overall market. We'll see what happens there. NASDAQ down 67. I'm so used to saying up every day. Russell down 6. And the Dow down 200, all of them basically off of all-time highs. So taking a little bit of a breather here on Rosh Hashanah. Volatility up 22 cents off of its lows, and bonds completely unchanged, 116.11. The big movers in the clubhouse, cryptocurrencies, Bitcoin trading 113.5. You can see here how it's broken out of that tight range it's had, selling off back to numbers that we haven't seen since earlier in September. Ethereum is down 2 or 3 times as much as that, down around $250, about 5.5% on a percentage basis. Oil down 62 cents. It too has been oscillating down around here up to around 64. It's 61.78. Gold, that's your big mover to the upside. New highs, up almost $50 to 37.55, another 1.25% move. Silver also up almost 2%. That's 84 cents. Big move in silver for new highs. Net gas down small, trading just under 320, 318 and change. That's all I got, Sadloff. AZO for earnings. It's not too much of a trading vehicle for us.
Yeah, the gold is new highs, but I don't think silver's not ever close to new highs.
Silver's not close to new highs?
I mean, recently, yes, but not historical new highs. Gold is historical.
All I'm looking at here is
but I've traded silver in the 60 handle before.
Understood. I'm not going back to grandpa times. I'm just going back to this year. It's a new high. Listen, I remember when you could run a 30-yard dash. You can't anymore, but you could have a new fast time.
You missed me in the airport the other day then, because I had to do like about a half a mile dash. It was long.
I remember you told me.
All right, let's take a look and see what we got here this morning. Confirm and send, John. Perfect. Monday, September 22nd. How important is diversification, this person asks? Is it possible to be successful while only trading a few products?
Sure. People have done it. It's not my preferred way. I think you're missing out on a lot of other opportunities. And if it's working for you and you're only trading a few products and you feel really confident in those, go for it. I think you should broaden yourself out. You're leaving yourself a little bit pigeonholed, but I have no problem with it. And if it's working, like I said, never stop. Now, if it's not working, maybe then you got to, broaden your horizons a little bit.
We both grew up in this business only trading one product. So yeah, and I've seen some people be very successful only trading, one product, and sometimes based on certain liquidity issues or other things, people can only trade a few products. I think it's more important than I think it's very important to be able to trade a non-correlated portfolio with lots of diversification to strategy, to products, to everything else. I don't think you should ever limit yourself. But could you? Sure, it's possible.
Sure.
Yeah, absolutely. We did it. I supported myself for 20 years, just trading basically one product. Let's go next slide. Do you think it's best to be delta neutral or to skew some long delta because of positive drift?
No, it's been best to be skewed long because we're at all-time highs. I don't want to sound like I'm not grateful for the bull market that we've had in the past. Is it going to continue? That's nobody knows. So I guess I'd prefer, at this point of view, to be a little bit more delta neutral, or maybe even skewed a little delta short. That's just me. Now you have to do what you want to do. It's worked to be delta long. It's worked to buy every dip. I don't know what's going to continue, but keep that in the back of your mind.
You know, first of all, it's almost impossible to always be delta neutral. We're very opinionated and we get very directional, but on the show here we talk about being delta neutral because it's the best. You don't want to hear our market opinions. You want to hear us talk about things that you want to hear us give takeaways and, you know, strategic ideas, you know, optimizing the mechanics, all the stuff that we do really well here on Tasty. That's what you want to hear. You don't care about the, you know, if I'm bullish on a stock or Tony's bearish on the same stock, or, you know, I'm bullish on an index or he's bearish on the index. Like, who cares? That's just chatter everybody else in financial media can do. So we talk about delta neutral a lot because we don't want to make it into a directional play. We want to make it more into a strategic play. But I agree with Tony. I mean, just because the market's record high is obviously positive drift. Yeah. But we're totally fine with having some market direction, long or short. But sometimes it's really good to be delta neutral too. I have plenty of positions on. Half my portfolio is delta neutral.
Sure.
Let's go next slide. Under what circumstances would it make sense to open a position with a covered call versus a short put?
A position with a covered call versus short put. If you want to, here, let's assume that you use the same short strikes. So you're basically doing an in the money put and an out of the money call with long stock. So if you're buying stock, selling an out of the money call versus selling an in the money put, same strike, it's the same. And I would kind of argue that maybe you should go with the short put, not buy the stock, sell the covered call, for the only factor being if the stock pays a dividend, because it's going to use a lot more buying power buying the stock, selling the short call than it would the short put. Now, if you're just doing a put that's out of the money, two different animals, you have a higher probability of success on the short put versus the covered call. You can make more money on the covered call. So it really depends on how bullish you are on the stock. I would prefer, and I do typically, a short put that's out of the money and not the covered call. Again, personal preference. A lot of personal preference questions here, so I don't know if you're okay with them. Usually you tell us what our preference is.
They are synthetically, although they are synthetically the same thing. For me, it depends a lot on a couple of factors. Obviously, I prefer the short put to the covered call just because it requires less capital. 20% versus 100% or 50%, whatever you want to borrow for the stock. But I prefer the short put because it has a higher probability of profit and it requires less capital. But sometimes I will use a covered call when the stock is cheap and I don't feel like the liquidity's there, meaning the liquidity options just isn't interesting to me, so I'll do a covered call. And sometimes I will do a covered call because I have the available capital and the covered call will give me a little bit more upside. So that's really pretty much the reason. Covered call, liquidity, a little more upside. Short put, much more capital efficient, higher probability of profit. Let's go next slide.
Very good.
When calculating ROI, return on investment, do you use the total premium collected as a percentage of buying power, or do you use 50% of the premium or do you use 50% of the premium collected? What the hell did I just get filled on? Oh,
Reddit, you bought back some stock, it looks like.
I had a pre-market bid in at 256.
256.09 or something.
256.09. Wow, that's good. Okay.
That puts Reddit down around $8.
$8, yeah.
Yep.
Good. No complaints there. So when calculating return on investments, use the total premium initially collected as a percentage of buying power, or to use 50% of the premium collected, since that is when you close winners. Tony?
Now, if I'm looking at return on capital, which I don't do a lot of, but let's just say I am, I'm going to use my buying power versus whatever my profit is. So I'm gonna do the straight out, no 50% of anything else. I'm just gonna use my buying power versus whatever I made.
When you calculate your return on investment, you use the buying power. So do you use the premium initially collected as a percentage of buying power? Yes. You don't use 50% of the premium collected, right, since that's what you close. You use the premium collected as a percentage of buying power. Yep, exactly.
Perfect.
Let's go to the next slide. What is the minimum account size needed to trade options as a full-time job replacement?
Oh, man. I don't have this. I don't have the. I wish there was a formula I could use to do this for somebody. But I will say this: whatever the number you think it is, add something to it, because when you have to make money, when you're going to this as a full-time replacement, it takes a little bit of an adjustment. A lot of people have a very hard time not having a paycheck, or it's the first time they haven't had a paycheck. Many years, decades, I never had a paycheck. It was something I was used to, that pressure to perform. A lot of people can't do that. So whatever you think it is, put a little bit more. 6 months of expenses plus your trading account, would be my high, would be like a broad-based number. Thomas?
I mean, we get this question so much over the years. I would say if you want to trade full-time job replacement, you're probably going to need portfolio margin. So 150 to 250, 175 to 250 would be the first place I would go. You could probably give it a shot with 100,000, much less than that. Like Tony said, you're going to need some money to live on, some other things, much less than that.
So how much reserve to live on? How much of your expenses would you say? 6 months? That's what I can.
Yeah, you definitely. 6 months. Yeah, for sure.
So 6 months plus your trading account.
Yeah, going back to when we all kind of started in this business, we didn't need that much because
we were rats.
Well, one, we were rats, but two, we also had unlimited leverage intraday.
We did. So it's a very, very small account. I mean, listen, I started with $5,000. Could act like.
But unlimited leverage intraday makes a big difference.
Sure.
That does not exist today. So
that is correct. That is correct.
Let's go to the next slide. So this is the last one. This person writes, I have a question that I would love your help with. My account is 500K. My current buying power usage is about 20%. I feel like this is too low, but I feel like it would be pushing it if I do more than I'm doing now. I'm still learning to scale. Any advice? Do you think this is too low or appropriate for the current conditions?
Pushing it. No, I think you're there. I mean, in this market, for premium selling, 20 to 25%, I think is that's where I am. I mean, I don't know about everybody else, but it's where I am. It's hard to find high probability expensive stocks premium right now. Easy to find a lot of expensive stocks, but premium wise, I think you're right. And it changes quickly, so don't worry, you'll have plenty of opportunity.
I just looked at my own stuff, and my buying power usage is really low right now. I'm like in the same range. I knew it's low. Usually I'm in the 40 to 50 range buying power. Sometimes I get as low as like low 30s, high 20s, but I'm actually below that right now. So, I completely feel your concern. I think a lot of us are in that same boat. I mean,
you also have a lot more directional positions too.
Well, that's because I'm just bored. I'm trying to do some stuff. But these are the tough times right now when you have vol really low, and you don't lose a lot, you don't make a lot if you're trading delta neutral. If you put some directional stuff on, obviously you have a little bit more risk. But these are the times that it is very difficult to actually be disciplined, because it's easy to lose your discipline here. I mean, I'm going to go with Tony on this one. I'm okay with you where you are. I mean, I know you're only using 100K of 500K and you feel like you're way under invested. You're going to have opportunity that's going to be in your face very soon.
Sure.
That's just the way this stuff works. When you least expect it, expect it.
Very good, sir. You know what I got to expect? I got to expect to take a quick little break here because we got an action jive next. We're back in 90 seconds. Tasty Live.
It's option. Jive.
It's option.
Tomas, we're
Jive.
back.
It's option jive.
This is when a trader's like a caged animal, and even the S&Ps are moving two handles every 20 minutes. They get like this, and they just start talking to themselves, and
keeps me alive.
They don't pay
Do you want
attention.
to know? Let me tell you about what I did on Saturday, because I didn't have a chance to tell you this, because it's very important.
I actually saw a picture. I think you sent it to me. You underperformed because you did this. Yeah, go ahead. Tell everybody what you did, and I'll tell them how you
Let me see if I've got a picture I could send to John so he could show.
Mm-hmm.
Thank you.
John, I'm trying to find this so I can...
You're going to email it, aren't you?
Let me see if I could send this to you, because it's very important.
Oh my God! This is Tom preparation too, everybody. So he really prepared for this.
You can't see. It's not big enough. You can't really tell.
That's what she said. It was a Saturday night, right?
Oh my!
Right. No. She already wrote me. We don't need to see this. It's okay.
John.
Long story short, Sosnoff was doing a charitable thing, and they asked him to make 8 slabs of ribs. He came up with 6, and they said, you'll like it. Is that not the truth?
Hey, so John, I'll tell you the story. So Donnie has a rib fest every year for a charity, right? And it's on a city block, and he said, hey, can you make some ribs? But I was in New York. So when I got home from New York, before I even went home, I went out and bought 6 slabs of ribs, a couple of pounds of chicken, a bunch of beans. And on Saturday morning, I cooked 6 slabs of ribs. You would have been proud.
I would have been proud. I would like a good rib.
So there was about, I'd say 5 or 6 of us that cooked, 5 or 6 slabs of ribs or something like that, or Donnie cooked like 8 slabs. So we had like 30 slabs of ribs. That's a lot of ribs.
That's a lot of ribs. I mean, did you do them all on the grill, or did you do some inside, some outside?
I started them all inside and finished them all outside. Donnie smoked them the whole time. The other guys did.
Because he's a true rib connoisseur.
Well, I didn't have enough time.
Well, you know what? No. That's for people who don't prepare. Do you have enough time? 24 hours is a long time to cook ribs, okay?
I was babysitting you.
This day didn't sneak up on you. You could have bought the ribs on a Wednesday. You're only going to go to Costco anyway. They're all blister packages. They last forever.
No, I don't like Costco.
You could have woke up early enough. You didn't have to go to breakfast.
No, I don't like Costco ribs. They're too thick, and I don't like them. I like the small
Okay, so
baby
you could
back.
have gone to the butcher, got any rib you wanted to. You could have got your Iberico rib or whatever it is that you bougie people eat, and then you could have done it. Don't go to breakfast.
No, I went to breakfast yesterday with the boys.
I guess I'm not a boy.
Well, you were too busy getting your sponge bath.
Thank you.
Yesterday morning, I went to breakfast with, it was a dream team. It was me, Jules, Slappy, and Butchie.
What were you trying to do? Make a mahjong team?
We were just talking about you mostly the whole time. They wanted a lot of information. I gave them a lot.
They were real happy about my arm. They just wanted pictures as proof.
That's right. So a lot of talk was about you, but we had a very nice breakfast. Jules was on his way to play a tournament, but she was on his way to, I'm not sure to do what. Steve was on his way. I don't know what he was doing either. But we all had stuff to do, but we had breakfast together. It was very nice. Anyway, my rib story is that we had like 30 racks of ribs around that. Maybe there was like 90 or 100 people total. And, but then I had chicken and like a million side dishes. It was beautiful.
Very nice, very nice. And did you go? You went to the Rib Fest, I'm assuming, because you dropped them off at the very least.
I worked it.
Oh, you worked it. Okay, so you served your ribs. Was there a rib cook-off? Did you make the?
No, there wasn't a rib cook-off. There was.
You didn't need like a guest rib connoisseur to try them out or something like that. Somebody who's not one of the boys.
I ate everybody's ribs. I was sick when I was left there. I couldn't move. I wanted to go home and watch the football game. I wanted to watch Indiana play. Indiana played Illinois. I wanted to watch that game. Corinne went with me for a while, but she looked at all the ribs and she goes, "This is making me sick just to smell of this." So, all right. Anyway, you ready?
Sounds like fun.
It was fun. If you love ribs, there was enough there to get anybody sick.
I'm sure.
Some guy made ribs where he poured he had like a lemon aioli sauce on top that was delicious.
Oh, that's different.
Yeah, like a Greek. Another guy did Greek ribs. Another guy did he did like,
Greek ribs. What do you do? Like talk meanly to them from like the backside of the rib?
And then another guy did
he flip the ribs over and like cook them only like one side down or something like that?
Another guy, I'm not even listening to you. Another guy did spicy ribs. I did spicy chicken.
There was nobody who did like a Korean style rib because I like that.
Not this year.
Well, maybe Donnie will invite me sometime.
I don't think so.
I don't think so either. I like
banned.
Donnie. I think Donnie likes me.
All right, let's do this. Ready, John? Let's do it. Option strategies with same risk profiles. Option strategies with same risk profiles. Matt, I think this is right up your alley. I think you're going to be good at this one today. Option strategies
right.
with
same.
Let me try.
With same risk profiles. You've been doing this for 40 years. You should know this. Option trading is strategic and engaging because of a variety of strategies available. However, the same variety can sometimes be confusing. How do you want your hot dog? There are approximately 20 premium selling strategies that fall into 8 categories. And they listed them here for you. Covered calls, time spread, jade lizard, ratio spread, iron condor, straddle strangle, put call spreads, and naked calls. These are kind of the 8 categories, then we mess with them. Let's go next slide. There are 4 pairs of strategies that are synthetically equivalent, meaning that they share nearly identical risk profiles. Understanding their similarities and differences is helpful for making trading decisions. We talked about one of these already today, the covered call versus the naked put on confirm and send. Then you could obviously do the long call spread versus short put spread, or long put spread versus short call spread, the ratio spread versus the big lizard, the diagonal versus a poor man's covered call. They're all very similar. They're all synthetic equivalents, which require matching strike prices and expiration dates.
And all would have been a great strategy in this past market that we've had.
No doubt about it. Let's go to the next slide. So the first one is a covered call, long 100 shares plus a short call. It has nearly the same risk profile as a short put. Let's go to the next slide. We talked about this already today. And voila. The SPY at the money covered calls and puts are exactly the same. Now we would never do an at the money covered call. We would never do an at the money put. What delta would you use for both sides, Bat? As a default.
I mean, for me, I'm going to probably, if I'm going to do it, an at the money covered call with the puts. What are they? I can't see the screen that well here. What are they using? They're buying 100 shares of stock and they're selling a call out of the money.
No. These are what they want to show is the same as at the money for the same. But they're
using the same strikes here. They're using, like I said.
Yeah. They're using the same strike to show you the same thing.
Right. So for a poor man's covered call, or I don't understand the question here. I'm so sorry.
Okay. Well, not poor man's covered. For a covered call, we generally would buy stock and sell about 30 delta. For a put, for a naked put, we would.
I still sell the 30 delta. I do the out of the money.
Yeah, I mean, we usually sell the 25 or 30 delta naked put, which gives us about a 75% probability of profit. And on the call side, we usually buy the stock, sell about the 30 delta call, which would give us about a 65% probability of profit. That's all.
Right. One has, over 60 deltas, the buy the stock, sell the call. And the other one has less than 30 deltas. So they're two same trades, but completely different. That's why my answer when we did confirm and send us, it depends on how bullish you are. The covered call, you're going to be able to make more money and have a slightly lower probability of success. The naked put, you're going to have a higher probability of success, make less money.
Exactly. Let's go to the next slide. So here we go, put spreads and call spreads. And like I said before, these are really interchangeable when using the same strike prices. As hedge positions, the risk profiles are nearly identical. This is another example, though, of when we buy we don't do it exactly like this. When we buy a put spread, we'll buy one strike in the money and sell one strike out of the money. And when we buy a call spread, we'll buy one strike in the money and sell one strike out of the money. And when we sell a put spread, we'll sell an out of the money put spread, usually around the expected move. And when when we sell a call spread, we'll sell a call spread out of the money, usually at the expected move. So although these have the same risk profiles, if you choose the same strikes, we generally, just like the covered call, the naked put, we would generally set up our short call or short put when we're doing a credit spread at the expected move. When we sell a naked put, we usually go to the expected move. When Tony and I do a live show, we do everything at the expected move, which is always going to be somewhere in that same delta area. And then when we're doing the long put spread or long call spread, we do it right at the money. Let's go to the next slide. And you can see here that although synthetically equivalent, professionals choose between these strategies based on bid-ask considerations. I mean, sometimes I don't really consider it a bid-ask consideration if it's a liquid underlying. I really consider it a probability of profit. If I'm going to buy a call spread or a put spread, I know it's a 50-50 shot. If I'm going to sell, but I can make more money. If I'm going to sell a call spread or put spread, I know it's a high probability trade, but I can make less money. It's just a question of what you're shooting for.
That's correct.
Let's go to the next slide. So the ratio spread and a jade lizard. They're both three-legged strategies, and they combined a naked option sale with a spread in the opposite direction. Okay, so a ratio spread is, let's just say for argument's sake here, long 1, short 2. And a Jade Lizard is short one, short a call spread. In both cases, or reverse Jade Lizard, just the opposite. In both cases, you're going to be naked short an option.
That is correct. That is correct. And they just broke up the strategy so that you could see them both there.
Yep, they broke it down. Let's go to the next slide. So when using identical strike prices, again, this is just to make the point, these strategies become synthetically equivalent because the embedded put and call spreads are interchangeable. In practice, though, traders typically sell out of the money ratio spreads. We do. We buy the option at the expected move, and then we sell whatever we can beyond that to generate a credit. We do this at our live shows. But the at the money Jade Lizards, we do the same thing. We'll sell the put at the expected move, and we'll sell a call spread where we can get enough credit to hopefully do the thing for more than the width of strikes. But again, the point being here is that the risk profiles are synthetically equivalent, but we do it at the expected move as a preference thing.
That's correct. And we do a lot of this on our live show. We deal with the expected move, I mean, religiously.
Yep. Let us go to the next slide. Perfect. A diagonal strategy is less commonly used. Unlike other premium selling strategies, it requires paying a debit upfront and benefits from increasing implied volatility. When using the same strikes and expiration dates, it becomes identical to a poor man's covered call. And again, we do not use the same strikes and expiration dates, but if we did, it would be the exact same, synthetically equivalent. Let's go to the next slide. And you can see it here. So these strategies are used in different market conditions. A diagonal we use for, the nice thing about diagonal I like is that you can adjust the strikes, and sometimes I'll move the front month strike. Like we made a trade on Friday where I moved the front month strike actually higher than the long strike. And sometimes we'll do that relatively close to expiration. But the poor man's covered call, it's just a substitute for a covered call. You buy an at or in the money call long term, and you sell it out of the money call either at the expected move or somewhere around the 30 delta. And we use a longer duration expiration for those, often leaps. Let's go to the next slide. So the takeaways from this, there's a lot of good content in here with these same risk profiles. Understanding synthetic positions helps traders manage complex adjustments and portfolios, and using the appropriate strategy for market conditions improves trading efficiency and reduces cost. So there's some really interesting takeaways from this. The first is that there's a lot of things, if you use the same strike, they're synthetically equivalent. But that's not how we really trade them. That's my biggest takeaway. What we do is we trade things, with a optimal duration and an optimal strike price based on expected move. I think that's the best way to do it. But to understand these similar risk profiles, this is a really good piece.
Very nice. Yes. Good job. Good job by the team. Good job by you, Southern, finishing just about at the top of the hour, because we've got another market measure coming your way. Even the S&P, Southern, let's take a quick look at the market here. It's actually caught a small bid. Even the S&Ps are up $5.25. Cancel crash, Southern, as the NASDAQ is unchanged, and the Russell just went positive by 40 cents. Dow still the weakest of the group, down 111. Volatility up a skosh, 5 cents to 17.75. Bonds going the other direction, down 4. Notes are still holding on to small gains too, but basically an unchanged market until you get to Bitcoin, that's down almost 2,000, but is over 114 for the first time that I've seen this morning. Ethereum really not catching any bit at all, down 241, although it is off of the lows that we saw earlier around 41.16. It's 42.40 right now. Oil continues its slide, down 48 cents over the last couple of days, and gold getting its rally back on, side off, holding steady up 50. Let's round up there. We'll take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live. That's right, with a little bit of a market measure here. Before we do that, take a quick look at the market. Saznoff, I have a question for you. Even the S&P is down 2, NASDAQ down 15. On the upside, you got Tesla up 16 and change. You got Apple up another almost $6 on top of gains from Friday. Can this market go lower, even though you do have such stocks as, I don't know, Microsoft down almost $5, AVGO down a couple of bucks, NVIDIA down a couple of bucks. What do you think here's a big tug of war going on?
There is a big tug of war. I don't necessarily love the rotation because I'd rather see them, I'd rather see a little more of a
go up, makes it a lot easier.
100%. Yeah, it's really mixed. My screen is mixed all over, as you would say.
Mm-hmm.
Yeah, I don't know what to make of it. I don't want to even consider buying them here. I'm staying short. I don't love my NASDAQ shorts.
Even though you believe it's buy Rosh Hashanah and sell Yom Kippur, you're going to keep your shorts.
Because I don't think I have enough time to get in and out. I'm a little slower than I used to be. I don't have that maneuverability that I used to have, that blazing, deceptive speed. I don't have that. My first step isn't as fast as it used to be. So I got to I got to hold the position a little bit.
Understood. Yeah. I'll give you this. I mean, I think you're at the later years of your career here. I'm going to give it to you.
Yeah. It's always been deceptive. It's just not quite as fast as it used to be.
It's always been deceptive. It's just not quite as fast. Listen to that statement.
Yeah, that's exactly right. It's always been deceptive. It's just
not very fast.
Yeah, exactly. Exactly. All right, let's do this. We have a bunch of stuff. Time is it? It's 9:10 in the morning. We're in Chicago. So if you are wherever you are in Tasty, wherever you are, you're as a Tasty trader.
Wherever you are, there you are.
Tasty Nation is all over the world, just so you know. But in Tasty Nation's home base is in the West Loop in Chicago. And if you're new to Tasty, welcome. We're, like Vanetta said, we're hitting the fall season, and we still have a couple road shows left this year. So I just want to had a great show in New York. It was really fun. We're so appreciative for everybody that came out. Mm-hmm. Next one is in LA at the famous Fonda Theater. We have been there once before. So funny. One of my son's friends just posted was at a concert, and he posted something. I saw it on Instagram, and he was like, "You got to check this out at the Fonda Theater." And I was like, "I'm going to be there in 2 weeks." But if you haven't signed up yet, please do. We'll be there in less than 2 weeks, Friday, October 3rd. We head out to LA on the October 2nd, so can't wait to see everybody. Doors open at 8 a.m. Show starts at 9 a.m. Remember, the market out in LA opens at 6:30 in the morning. So we'll be 2.5 hours into the trading day, which will be great. Really looking forward to it, but we don't care. Every show starts the same. The next one we do after that will be Charlotte, where we'll start, 15 minutes before the market opens, like we did in New York.
Yeah.
Hopefully Tony's arm will be fixed so he can use both hands. But
by October 24th, it's going to be touch and go, Saz. It'll either be that or it'll be having an operation. But don't worry, I'm a pecker, Saznoff. I'm a pecker. I can do it with one hand. No big deal. I'm a big pecker. You know that. I've been pecking for a long time.
Then we'll be at the Fillmore in Charlotte, North Carolina on October 24th, and we'll finish up the year in early November 7th at Antone's Nightclub in Austin, Texas. Supposed to be a really cool venue, and we will be same thing.
I've had a lot of people writing to me about this. They really love this venue.
It'll be doors open at 8 and show starts at 9 a.m. and always love the quick little trip down to Austin, Texas, where we eat so much barbecue we're sick as a dog the next day. We're sweating barbecue sauce. Special appearance by our own Tom Preston that day, which will be a lot of fun. And yeah, so
it's fun.
Those are the 3 last shows we have to do this year. I mean, Mike, Nick, and Katie are going to still be on the road, and Dr. Jim's got a bunch of shows, but those are our 3 shows. tastylive.com/events. tastylive.com/events. Plenty of room at these shows. New York was all full, but you know, we always have space until we get out there. So if you want to come to the show in LA, New York, just to give you an idea, we made just about, I think about 40 trades, 39 or 40 trades. We made some pretty decent money, but that
it's a couple of scalps. We did it.
But that's not why we do it. But we did have more than our usual number of scalps. We also traded, I think, 25 different positions. I want to say we probably used about 8 or 9 strategies all total, and we had some fun with it. It was good.
We sure did. We sure did.
We used a lot of Tony's money. That's always fun. So
we had a good time, regardless of whose money we used. We guard everybody's money the same, Sosnoff.
I know. Anyway, it's a good time. So hopefully you can make it out to the Fonda Theater in LA. It's gonna be a fun show. We love LA. Yeah. Plus my kid lives there, so I gotta spend a little extra time in LA.
Sweet.
All right, let's do it.
I'm ready.
Here you go. Extreme days and next day probabilities. We're going to take a look and see what happens when we have an extreme day and then what happens like the next day.
Sure.
What do you think it is?
Oof. I'm gonna say it has really no bearing on the next day. Maybe a slight edge to a small continuation, but it's going to be within the expected move of a day. It's not going to have a 2 back-to-back extreme days. That's the way I feel. What about you?
You know, I'm really mixed on this without seeing the data. I'm going to say that I'm going to say that an extreme day doesn't necessarily mean that you're going to have an immediate reversal or anything like that. But I'm going to say that extreme day generally means that the next day has a higher chance of being extreme as well. Just because an extreme day usually pumps up the vol. So that's why I'm thinking that. But I don't know. Let's take a look. So when you consider, and by the way, Bat, we're going to be taking calls at 9:30, right?
We are 855-238-2789 or 855-BE-TASTY. That's the number to call. I wouldn't want to step on you. You were talking about the shows and everything, so I didn't say it. But please get your phone ready. Give us a buzz. We'd love to hear from you. I got 4 or 5 lines open. We can open them now if you don't mind waiting. If not, you can wait till the segment's over and call us in then.
When you consider SPY from 2015 to present, any given day, the SPY had a 54% chance of an up day for the last 10 years and 46% chance of a down day. Given that SPY had a down day, SPY had a 55% chance of an up day the following day. Now, that's pretty much the same. So that would be in line with what Tony just said. Given that the SPY had an up day, a 46% chance of a down day, that's the same as it is on any other day. So in general, the probability of a reversion following day is only slightly higher than the probability of an up or down day in general. But so that's on a normal day, it doesn't make any difference. Gambler's fallacy. But what if the move is very large? Let's take a look. So we decided to look at 10 years of data and determine the probability that the SPY has an up day, given that the SPY has more than 2 standard deviations, or a down day. So So we're looking right now, we're looking at 2 standard deviation moves, which have about a less than 5% chance of happening. We looked at 40 different tickers. So we didn't just do the SPY. Give it a 2 standard deviation up move or down move. Note it, we have a note here. Only the direction of the move, not the magnitude of the move, is considered here. So, and we have a list of tickers. We don't have to go through them all, but there's 20 different underlyings, including some ETFs and kind of like every major stock. Let's go to the next slide. All right, so normal market symmetry. In typical conditions, the SPY shows 54% up, 45.6% down, and a modest 8.8% bullish tilt, reflecting long-term market growth trends. That would surprise nobody. But post-crash reversal, after 2 standard deviation down move events, the up probability increases to 60%, creating a positive 4.8% edge. This suggests that fear-driven overselling creates mathematical buying opportunities. Well, that's really interesting. But what's more interesting about that to me is that it kills the theory, Tony, of the trend is your friend.
Yeah, that's what I was kind of like a little bit alluding to here. But again, you're looking at the next day. That doesn't mean what happens over the next week or month or year.
So you can see the first 2 slides are up day in green, down day in red. That's the 54.46. And then after that, you have up day after a 2% down or down day after a 2% up. Those are big reversals.
Yep.
Let's go to the next slide. Now we're going to look at post-rally exhaustion. So after a 2 standard deviation up event, the down probability surges to 58% versus 45% normally. That's a 13% shift. That's pretty impressive. So the risk-reward implication, the stronger reversal after ups versus downs suggests tighter management when buying dips and wider targets when shorting rallies. Basically, again, this is very interesting because it debunks the myth that the trend is your friend, that there's such a thing as a breakout on a big up move.
Right.
Or a breakdown on a big down move. This completely debunks that. Again, let's go to the next slide. We've debunked it 50 times already, but we're debunking it one more time. It's a little harder to read for me as well, but in the past 10 years, among the 38 tickers reviewed, here are some that stood out with the most notable moves. McDonald's, a 25% downside reversal after rallies, only a 5% reversal after sell-offs, or 5.9% after sell-offs. Brazil ETF, a 12.5% bounce after crashes. Junior gold miners, a 10% bounce after sell-offs. NASDAQ, weak dip bounces, but sharp fades after rallies. Where's the fade here? Utilities, a 17% pullback after rallies, and Apple, a 15% fade after rallies. Let's see where we are today, Apple. Are we at a 2 standard deviation?
Apple's up big again.
Yeah, so the last 2 days in Apple, this is about a 2 standard deviation move. So we should be looking.
Rallies exhaust fast. So there's your opportunity. Look at put on a little bit more positions.
So Apple, 15% fade after rallies, and we have 2% moves in. Here, I'm going to do this right now.
I thought you might.
Because.
Plus, you got sell Rosh Hashanah.
Because, as you know, I trust our research. So I don't have a lot of time to look at options right now for a second, but.
You just went with stock.
Stock's going up faster than I can deal with it.
You could sell it.
Yeah.
Apple up $6.90.
So I just sold a bunch of Apple here stock. I'm going to do some options when we get to the next break. But I'm trusting the research here.
Apple IV rank is 14. It's neither here nor there, but I get it.
I'm looking, Tony, for I did not know the statistic before we did this study, which is what I love about Tasty Research. Apple, after a 2 standard deviation move, a 15% fade. We had a almost 3 standard deviation move in Apple on Friday. I'm going to say 3 standard deviations on Friday and almost 3 standard deviations today. It doesn't get any more than that. So I'm waiting for my fade.
I like it.
Let's go to the next slide. SPY is somewhat more likely to experience a reversal following a significant update or a down day. However, it is not a strong trend. Among the 38 tickers tested, 58% were more likely to have an update following a large down day compared to generally having an update. 74% were likely to have a down day following a large update. I like those odds. And then you can see the other tickers breaking this down. 22 out of 38 tickers, 58% showed mean reversion after a 2 standard deviation down day. And what I'm looking for here is the 2 standard deviation up day. So 28 out of 38 tickers, 74% showed mean reversion after 2 standard deviation up days. That's very interesting. This asymmetry is important because it shows that markets are more reliable at pulling back after extreme rallies than bouncing after extreme sell-offs. And I assume if this is not an extreme rally, Tony, I don't know what is.
Well, this has been an extreme rally for quite some time.
I understand that. Let's go to the next slide. And some takeaways. The statistics lightly support a contrarian approach following a large up day or down day, but this basically remains speculation and position sizes should reflect that. I totally agree with that, but it doesn't support a continuation of the trend, and that's what's more important. Additionally, although the underlying price is more likely to revert the day after a large move, the options won't necessarily behave the same way because IV and duration also impact performance. Okay, I like it.
Good job. Good little study. Would you say I was more right or more on?
I would say your answer
this is a tough one for you. I got you.
I would say your answer was you kind of chickened out and you didn't really take a stance. I would say your answer is not that interesting.
I kind of chickened out and didn't take a stand.
Yeah, but you said your answer was
that they do not. I say that they do not continue the next day, and there might be a slight edge to the upside of a continuation. But
then I didn't hear what you said. I didn't listen.
You didn't hear what I said?
I didn't listen. I mean, I've become really good at blocking out most of the things you say, so that I must have just inadvertently blocked that out.
Let me take a quick 90-second.
Let me turn off my blocker because I can turn it on or off.
Yeah, your beta blockers. Let me take a quick 90-second break and come back. We got more Tasty Live, but I need your phone calls. That's right now, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. It'll be below me just a moment here. So give us a buzz. It'll be up there. I promise it will be. Call. We got 4 or 5 lines open. Love to hear from you now.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like I live in Italy. Yeah. Like we drive like. I drove a truck in New York City. I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh. It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Okay.
I think you got me.
Yeah.
Oh, I don't know you that well. Short put?
Short putty.
Come on.
For myself, I wrote strangle. For him, I wrote ratio spread.
Strangle. Strangle. Strangle ratio spread. Strangle ratio spread.
That makes sense.
Sure.
So Liz says, you say your favorite strategy is a zebra, and you got it right. And
Yes.
you said Jenny's was a jade lizard, but Jenny said hers is short put.
That's it. I'm telling the truth. Mine is. I might be.
Oh, there's a short put component to the Jade Lizard. By default, I'm accepting this.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
And we are back to look at markets that once again are inching their way to record highs. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we are going to try and figure out what it is that's going on here because the mix of assets is looking a little bit unusual, but nevertheless, we have a week in front of us with plenty of event risk to contend with, and so we'll go through that as well and see if we can figure out where these markets are heading this week, and most importantly, where the opportunity here lies as more and more markets reach into the stratosphere. That, of course, makes things expensive and begs the question, what is there to be trading that looks attractive? And so we'll get a little update on the positions that I have on as well to try and take advantage of what's going on out here. So let's first take a look at the performance that we have for last week. We can see here stocks managed to accelerate a little bit higher. S&P up 2%, NASDAQ up 3 and some change. Interestingly, you'll note, although, of course, we got the rate cut that everybody was so anxiously waiting for, we do not get any kind of progression lower on yields. As a matter of fact, the 10-year is up 1.6%. The 2-year flat, basically telling you that the Fed didn't give markets anything that smelled particularly dovish. Nevertheless, gold up, the euro steady, the yen a little bit lower. So when we consider then what the Fed ultimately did, what we find is it wasn't dovish, but stocks liked it anyway as a kind of catch-all. What's interesting as well is that Bitcoin, which typically acts as a kind of risk appetite on steroids sort of asset that typically gives you a more volatile, bigger amplitude move of whatever is going on on the baseline risk sentiment front, which is, of course, stock markets. That diverged last week, and we have here a Bitcoin that is down fractionally, 1.7%. Not the biggest move ever, but certainly interesting and something of a disconnect with everything else that was going on last week. Though, of course, for that matter, so was the stock market, and we'll take a look at why. Here's how we start the week this week. Stocks, again, inching a little bit higher. Rates going in a still higher direction, albeit not with the greatest amount of vigor. S&P up almost 0.4%. NASDAQ up 0.5%. 10-year up almost 0.4%. 2-year almost a full percentage point higher. Crude oil going nowhere. And interestingly enough, for all the higher yields that we see here, gold surging over 2%. Euro up a touch, yen basically flat, and Bitcoin continuing to lose ground. In fact, this is quite the sizable decline here, at least in relative terms, for Bitcoin. It's certainly not the biggest Bitcoin move ever, not by a long shot, as a matter of fact. Bitcoin tends to be relatively volatile, but this is no small move, this 2.24%, even in relative terms. It is the biggest decline in just about 3-4 weeks. As a matter of fact, going back to September the 4th will be just under 4 weeks. So certainly a sizable turn here for Bitcoin, which is an interesting, again, piece of evidence here as we look cross-market at the same time that stocks are going higher. And so one does kind of wonder what this limping upward for the stock market is all about. And of course, how it is that gold is higher when we're looking at a situation here where the yield structure seems to be moving such that we're looking at a Fed that didn't really give the markets anything particularly dovish to be looking at. What did the Fed then give, and why are we looking at the situation that we're looking at? Why is this all so convoluted? Well, here is the outlook that everybody was so focused on. Of course, the rate cut itself, the 25 basis point revision, that was well and thoroughly priced in ahead of the announcement, so no surprise there. The real sort of market mover here, as we talked about ahead of the monetary policy announcement, was the revision of the summary of economic projections. And here things get pretty interesting, because what we find is that even as the Fed cuts rates, and even as Fed Chair Powell lays out the case for cutting them, saying, look, the balance of risks has changed, the risks to the labor market have increased, we need to start to turn the dial on adjusting our policy balance in line with the shifting of these risks. So if the risk of inflation has, let's say, marginally declined, at least according to the Fed, because they think that the one-time increase to costs from tariffs will not be a lasting one. Famous last words, of course. We've heard this story before. But nevertheless, that's the core argument. And at the same time, of course, we've had a run of weakness in jobless claims. We've had a run of weakness in payrolls data. And so the Fed basically saying, look, the balance of risks has changed, and so we're going to turn the dial on policy. All that as the rationale aside, we look at these forecasts, and the Fed has increased its expectations for GDP, upgraded those this year, next year, and even in 2027. Downgraded expectations for the unemployment rate next year and the year after. Upgraded inflation expectations for next year. And given us an outlook on rates that basically keeps us in a much less dovish sort of framework than the markets might have anticipated, or indeed than they've actually priced in. So consider here the Fed nominally reduces the sort of rate outlook that they had for this year, and so basically absorbs what the market already knew going into this by at least a week, which is that the Fed is not going to do the 2 cuts they said they would do as of June, but instead are on the side of 3. And so we can see from 3.9 to 3.6, that's 75 basis points in cuts. And you can see that, of course, from the baseline of 4.4. So 4.4 was the center line for the Fed funds target, and down to 3.6 would be 3 cuts. Now, from there, albeit from this lower baseline of 3.6 versus 3.9, we have a single rate cut on the menu for 2026, a single rate cut for 2027. Now, is this dovish? Well, ostensibly, no. It's status quo for the Fed, because as we can see here, this is the likelihood for policy in Fed funds futures for October's meeting. And we can see that indeed we are looking for this cut to happen at the next time that the Fed meets. It was already there a week prior to today, and so at the start of last week, we can see we're not quite at 80%, but meaningfully better than even odds that we're going to get this cut. So the market overwhelmingly knew that that cut was there. So that's your 50 basis points last week and this. And then here's December. So now, today, we've actually come down a little bit, 73.6% chance that we're going to get that third cut. At the end of last week, on Friday, it was a little bit greater, a little bit closer to 80. But a week back from today, the likelihood was nevertheless quite commanding, in the vicinity of about 65%. So again, much better than even. So it's not as if the Fed told the markets anything they didn't already know. Naturally, these are not 100% probabilities. These things weren't fully priced in. They're quite a bit away. So there's, of course, the uncertainty of the passage of time that has to be considered here. But nevertheless, the market saw in excess of 60% odds that we are going to get this third December cut. And of course, in excess of 70% odds that the second one is coming as of a week back from today. So days before the Fed met. So it's not really much of a dovish step here to say, oh, it's going to be 3 cuts. Yes, the markets knew. So the real disconnect here comes thereafter. The Fed still has only 1 rate cut on the menu for next year, as it did in June. Still has only 1 rate cut on the menu for 2027. Now, again, lower baseline, same policy path as June was, and we can see the markets have a very different kind of a perspective. So we can see here there is, after this 25 basis point cut that's already occurred, obviously there's an upshift here because of that, we have still at least 1 cut already in. So we can see that's already there, and a greater than even chance of a third, that's there as well. So looking at this then, the real disconnect is next year, where the market, unlike the Fed, is erring on the side of 3 cuts. Now, it's not fully discounting 3, it's at least 2, and then 15 basis points in the direction of a third cut. But if we consider what that means, 15 out of a 25 basis point move amounts to a 60% likelihood that we are going to get that third cut, which is obviously miles away from what the Fed has at just 25 basis points. And we can see, in fact, why the markets reacted the way that they did, why it is that we look at this and we see, oh, the Fed cut rates, but yields went up. The Fed cut rates, but the dollar didn't fall. Well, we can look at this and see, well, the lows on policy expectations this year and next before the Fed, before this upshift, was hanging around 140 basis points. We took 25 basis points of a cut away, but we moved more than that. So we've gone from about 140 basis points to about 100. That is to say, we moved by about 20 basis points more, about 15 basis points more, than just a single rate cut. And so this suggests the markets looked at that Fed outcome and said, yeah, this is not dovish. This is the other thing. It's, of course, tough to call it hawkish because obviously the Fed is cutting rates and planning to cut them again. But this is not the sort of dovish leveling up that the market was hoping for. Now, why was the market hoping for it? Well, as we've discussed here before, you can see that as we were going into this policy announcement, stocks were moving higher against a backdrop of increasingly dovish expectations, especially for next year. In fact, we did this analysis before, but we'll do it again here. We can see here was the top in stocks right around the middle of February. This was also the least dovish setting this year, give or take, for monetary policy this year and next. Then the rollout of the tariffs gave us a growth scare up until early April, right here, where the market decided that the administration is ostensibly responsive to market discipline. And when the market started to go haywire right here, we got the 90-day pause on tariffs and things got walked back. And so in the ensuing recovery of sentiment, we see that policy expectations became less dovish, and that corresponded with a move basically back to where stocks broke their range, right over here. And since then, the continued build in stock markets higher has come with policy expectations growing increasingly dovish. Not because we had significant movements for 2025. As a matter of fact, things seem to have anchored there, but because the markets increasingly anticipated that 20 to 26 would have more and more and more cuts. And so it wouldn't be a stretch to say, well, the reason that we're getting this steady build higher in risk sentiment, no big swings, but just this relentless stair step upward, is that future money looks like it's going to be cheaper. And that, of course, is a boon for asset prices. But then what we see in the aftermath of the Fed move is that even with, apparently, this idea that the Fed was not as dovish as the markets and showed resistance to going that way, stock markets still went higher. Now, how does that make sense? Well, ostensibly, if we look back at the forecast here, what we find is that apparently the Fed intends to run the economy hot. Hence the higher growth expectations, hence the higher inflation expectations. In other words, what the Fed is looking to do here is perhaps let inflation stay higher for longer so as to underpin the labor market. And of course, the Fed envisions that it's going to be successful in doing this, hence the lower unemployment rate. And so perhaps what stock markets are saying here is, well, look, until this thing begins to cave in on itself, that is, if inflation were to get out of hand, if the Fed is in fact successful, should say, in boosting growth and underpinning the labor market and checking that deterioration, that's going to see inflation higher, and inflation is going to stay higher, and hopefully it's not so much higher that it becomes entrenched. And again, the Fed is making the bet that it won't. But the hope is, of course, that it won't be so high as to begin to undermine growth. And that's what these forecasts suggest, that the Fed sees that not happening. But of course, the risk is if inflation begins to build to a greater extent and to a more lasting extent than the Fed is anticipating, well, that, of course, begins to hurt consumption, which is 68% of the economy and already on soft footing after the weakest 6 months in the first half of the year in 5 years. That, of course, references back to 2020. And those 6 months, the first 6 months of that year, was the COVID lockdown. So not exactly the world's best reference point. So if we consider that in this context, we say, well, the Fed is going to basically shut one eye as it looks on inflation and say, we're going to let this thing run hotter. And until the market hits the first roadblock whereby that becomes a problem and starts to work backwards against growth, well, stocks have decided that they're going to run this until they can't or until they are shown otherwise. Whereas if we look at the US dollar, the situation is a lot more kind of textbook. The outlook has become less dovish, clearly, and the dollar seems to have started some sort of a bottoming effort, as we've been talking about before here. Here's the previous swing bottom in early July, where this massive dollar sell-off stopped and attempted to at least pause for digestion. And here is where we find that same bottom again. Perhaps now we're looking at a dollar that's going to attempt to mount a reversal. And of course, were we to do that against the backdrop of higher yields in a run-it-hot economy, that would make sense in the sense that it would bolster the dollar's yield advantage against other major currencies. Now, informing this narrative in the week ahead will be some key data points. The first batch here, looking at the flash set of S&P Global PMI figures for September. The critical numbers here, although we're going to get a slew of them from Australia, from the UK, from Japan. The key ones are from the Eurozone, where we're looking for basically stasis near the levels where we were at in August. This basically corresponds to modest growth. As ever, the PMIs are centered around 50, where that's neither growth nor contraction. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so from 51 to 51.1 is a slight positive growth and a slight acceleration from August into September. Whereas looking at the composite index for the U.S., these composite indexes, of course, taking in both the manufacturing and the services sub-indexes, there we're looking for a move from 55.1 to 54.6, so a slight slowdown in U.S. growth. And of course, nominally, we can see that the U.S. is growing here meaningfully faster than is the Eurozone. No surprise there. That's been the story since at least the middle of last year. And we focus on the U.S. and the Eurozone because we can see that the global economy, as we've pointed out before, is primarily driven by three engines. The U.S., which accounts for more than a quarter of global GDP, the Eurozone, and China. Now, we're not going to get China PMI data in this batch. That usually comes a couple weeks after. But we are going to get this Eurozone data. And so between what we're seeing in the U.S. and the Eurozone, we get the lion's share of what matters for global GDP. So we're going to see if these numbers are going to come out relatively supportive, especially for the U.S., and see if this run-it-hot idea is going to pan out and if the markets can continue to embrace it. Because, of course, if we already see signs of weakness, well, then at least the conversation around these Fed forecasts and the stock market's embrace of them as suddenly good news, whereas you might have expected them to act otherwise, considering how thoroughly they wanted the dovish version of the Fed last week, as we just saw. That narrative is going to start to get challenged and start to get questioned if, in fact, the economy seems to be going the other way. Now, for what it's worth, looking at the Atlanta Fed GDP Now model, not for its forecast of third quarter GDP, which is what it's attempting to do here, but for the direction of the data going into the model, that's the green line there, we can see most of this data seems to be relatively growth positive, hence the upward slope of that green line. Never mind what it's actually saying about the third quarter. It'll be many, many data points yet until this model is anything approaching accurate, but the tone of the data is what matters here. Another look at this from a different vantage point, this is the Citigroup Economic Surprise Index, which measures economic data surprises up or down and the tendency. And we can see here, this is the zero line down the middle here, where when we're above that zero line, as we've been tellingly since July, we have U.S. economic data looking better than expected. And as this edges higher, we can see it's actually expanding the margin by which we're getting these upside surprises narrowly. And so what this basically tells us is that economic data out of the U.S. is showing up rosier than baseline expectations have in mind. And so that, to some extent, sets the stage for these PMI numbers. If we continue to get hotter results, if these PMI numbers show us a strong U.S. economy, well, then this run it hot idea would get a little bit of credence, and maybe stocks can find some more fuel there. Now, closing out the week will be the other side of this equation, the inflation side, where we're looking at a 17-month high at headline PCE inflation at 2.8%, and a 19-month high on core PCE inflation at 3%. This is the Fed's favored inflation gauge. And needless to say, these are relatively heady numbers. And this is going to challenge the Fed's argument that inflation is something that is going to pass as the tariff increase that the administration has put forward kind of washes over the economy and works its way through the data. So looking at the dynamics here, we can see, perhaps most importantly, this 3-month annualized rate, which gives us a sense of dynamics, has now continued to increase for 3 consecutive months, showing us that the actual thrust, the momentum in this reflation is becoming stronger, whereas the 6-month rate is holding relatively steady and not giving ground. So inflationary pressure is building here. And so between the PMIs and this inflation report, we're going to stress test the Fed's argument here and see if the markets continue to buy it. If they continue to embrace the idea that we can see the dollar, say, and stocks going up at the same time, even as yields have stopped falling, at least in the acute sense. Now, positioning-wise, not a whole lot that I've changed here other than increased my exposure to the dollar. We're looking for it to do as we've discussed here and attempt to bottom. So I'm short the Aussie here, short the pound, short the euro, short the Canadian dollar. I still have my longer term exposure to Brazilian stocks, but this is not exactly a speculative idea over a nearer term. As we can see, there's 100 days to expiration here, 116 days here. This is looking for end of year and into January. It's working, but it's not anything that I'm looking to tinker with in any kind of near-term sense. We have still this long position in gold. That's working. This is being done through selling puts at 330, and we can see now that we're at 344, almost 345. That's working. On silver, that's a trade that was taken later, and so in this case, it's a straight up calls vertical from 38.5 and capped out at 47. We can see that's working as well, albeit more modestly, and taking a little bit of a stab at the long side of the bonds. It looks like we've had a decent pullback, of course, last week, but if the markets are going to say that there's all this easing in the pipeline and the Fed is resistant to doing it next year, maybe even the year after that, then ostensibly those rate cuts need to move further down along the yield curve. And so looking for that part of the curve, the long end, to start to price in some lower rates even as the front end holds. And so a call vertical there with 60 days in time to sit and wait and let this work itself out. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go from there. A little bit of a special schedule this week. We're going to be off tomorrow, back on Wednesday. As ever, I am also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back this week on Wednesday. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
All right, we're back. Tasty Crypto Show. I'm Dan Cecilia, and with me for the first time on the show, but a regular on the Tasty Live network, is Errol.
Yes.
Errol, what's up, man? Thanks for joining me.
Dan, thanks for having me on here, brother. I know we've been meaning to connect a little bit more. It's going to be nice to just have a nice conversation today. You guys have such fire intro music. I'm already taking notes.
We got
on our show.
Yeah, we got an awesome intro music, little DMX. I don't know what would be the intro music that you'd want to go with.
I don't know, but I would take. I'm down for the DMX too. Yeah. Put a little more thought into that. But no, it got me hyped as we were loading in here. But no, thanks for having me on here, brother. It's gonna be fun.
Yeah, thanks for joining us. We got a light show today, but I wanted to get you on, get you chatting markets. You know, I think we'll take a quick look here. Bitcoin's been down. We had a big run up over the last couple months, and kind of a little sell-off over the weekend here after the Fed announcement, Fed rate cuts last week. Everybody thought it was bullish. Now it's bearish. I have trouble following it, but typically I'm in it for the long term. But tell me a little bit. Do you have background in crypto? Are you interested in crypto? Because I don't think we've ever really dug into it.
Yeah, not much of a crypto trader.
Okay.
Not yet, at least. No.
Not yet.
But no, more of just a long-term hodler.
Okay.
Comes down to crypto.
Okay. What are you holding?
Bitcoin.
Just Bitcoin. Okay.
Bitcoin, Ethereum. I might still have a little bit of Cardano. That was more so like I like Cardano like 5 years ago. I might have a little bit of that, but really Bitcoin and ETH, the top two.
Okay. And you've never done anything like on chain. You never interacted with like dApps or
I mean, yes, I've had the wallet. I mean, I was getting into the NFT craze. I think that was a really good learning experience a few years ago. I kind of missed that era.
Yeah.
Even though I wasn't like an NFT guy, I'm not a blockchain guy, but it was fun. I remember the gas fees were outrageous.
Yeah.
Around that time.
Yep.
But no, I'm not super. This is not my neck of the woods by any means. I know the words, I understand the basics, but I'm not actively dealing with these dApps and those type of technology.
Okay, well we'll have to get you into it a little bit more because there's been a ton of updates since NFT craze. Like I think there's just been a lot of great apps launched, and Solana's another one where if you're into Cardano, Solana would be the next spot for you to kind of check out. So I'll have to get you set up with a wallet, or maybe we dust off the Tasty Crypto wallet if you still got it.
I have to do something.
Yeah,
yeah. But yeah, nothing too crazy.
Okay, so let me kind of put it on you if I can. What do you want to know about crypto? Like, is there anything like burning questions? Anything that?
So
yeah.
Great way to put it to start. Because actually, yeah.
Okay.
It is. That's why I'm kind of glad to talk with you. That keeps up with to speak with you. That keeps up with the industry regularly. I was super excited about Ethereum.
Okay.
Ethereum showed more utility than Bitcoin. Bitcoin more of a store of value kind of thing right now. What's the state of Ethereum right now? What are the developers building? I would have just thought that. So everybody was like, yo, these NFTs are going to be worthless, this, that, and the other. But it's like, yeah, but this was a perfect example to show what the blockchain and the technology can do, So I'm just confused at the state of the blockchain and where Ethereum is at. And are we waiting for the next cycle to see more things being built in this space? Have they already been built? I'm just not in the space day to day. So I'm kind of lost there. Where are we at?
Yeah, so I think it's a great question, and I think Ethereum has garnered a lot of attention, but also a lot of mixed opinions, a lot of hate, a lot of people love it, people hate it, people think it's the next money, online money, people think it's worthless.
Yeah.
So really, since the NFT craze, we've had a lot of updates to the network, right? So number one, we had something called the merge, and the merge moved us away from proof of work to proof of stake. So making it basically completely energy. Like there's no energy, there's no proof of work. Like you don't need mining or anything. It's all proof of stake now. We have the rise of layer 2s, right? So basically over the last couple of years, you mentioned gas fees. Over the last couple of years, they've created these things called layer 2s, which are essentially built on top of the Ethereum blockchain. They're their own individual chains. So one's called Base, which was launched by Coinbase. So Coinbase has launched their own. Robinhood's coming out with one.
I don't want to get too far ahead.
Yeah.
That would be considered the dApp.
That would be considered a scaling solution for Ethereum. dApps would be like Uniswap. So like decentralized exchanges like Uniswap, where you don't need like you don't need a central party to clear the market for you or make the market for you rather.
Mm-hmm.
You can just go to these apps, connect your wallet, and make a swap.
Okay.
So that would be considered a dApp. I guess like OpenSea, which is where NFTs were traded, is considered a dApp. A number of these applications, though, to your point, when they were built on Ethereum layer 1, they were expensive to run because of the gas fees.
Right.
So the layer 2 is basically a scaling solution. It's kind of like another chain built on top of Ethereum to allow you to run apps cheaply and efficiently.
Okay.
So, I mean, I can pull up Uniswap if we want to take a look at that, and I can show you how to switch the network. But basically, really all we really have now on ETH is the switch to proof of stake, which makes it easier for these applications to run.
Mm-hmm.
And now we have layer 2s, which essentially make it cheaper to process transactions and send everything to ETH. So NFTs have come back a little bit. There's actually this cool there's actually a really cool, not to get too far off topic, there's been a cool mechanism that somebody launched a token, and it's called Punk Strategy.
Okay.
Are you familiar with CryptoPunks?
I am familiar with the CryptoPunks.
Okay,
That's
yeah.
where it's branching off of.
Yeah, so they like launched something where it's a token and it has this like mechanism, and where the fees from the token trading, they go out and they buy CryptoPunks. So they'll buy the CryptoPunk and list it at two times higher than the floor price.
Okay.
So it's kind of like sparked this new NFT craze. But anyway, NFTs are still around. People are still collecting them. Obviously not as crazy as 2021, 2022, but still here, still collecting. I mean, I bought one last week by an artist called Jack Butcher.
Mm-hmm.
Probably not familiar with him.
Jack Butcher sounds so familiar. Is he on Twitter?
Yeah.
I might have came across something.
Yeah, he's like he kind of does like generative art. It's like a popular NFT artist.
Okay.
He launched one that I bought last week, went pretty crazy. But anyway, there's a bunch of stuff going on. I've jumped all over the place, but essentially what we have now is we have a scaling solution for Ethereum that allows cheaper transactions.
Okay.
And honestly, better applications to be ran.
So why does this have cheaper transactions? What's going on logistically where they can reduce that?
Yeah, so I want to preface this with I'm not a dev.
No, you're totally fine. So the way that I see it is what I known as gas fees. The gas fees were higher the more interaction that was going on the chain.
Yeah.
Right, this is like a line.
Yeah.
So to me, I'm just like, okay, is it because they haven't scaled to the level to where they want to be at yet? Why it's efficient cost-wise right now? And maybe that's a question because of my lack of understanding. It might be a little bit of an ignorant question.
No, it's not. It's not ignorant. Let me try and explain it in a simple way. So, basically, what happens is just like in a normal tech stack, like you don't have to run your own server instance, right? We kind of we build everything in the cloud now.
Right.
So it makes it cheaper, quicker, whatever, faster for us to build applications and host them in an AWS server, Google, whatever. So there's a similar idea there where, like, if you could think of the layer 1 Ethereum as sort of a physical instance of a big server, most people don't need all that. So they build this layer 2, and on the layer 2, it allows you to bundle transactions together.
Okay.
So you're bundling a bunch of data together. That's happening on an application or whatever, and then you are sending that bundled transaction, that data, it's all packaged up back to the layer 1 Ethereum for verification. So most people are just interacting with like a single instance or a single kind of part of the blockchain, and then once all those transactions kind of get packaged together, they're sent to the layer 1. So actually we went through this last week. Let me bring it up real quick.
Yeah.
Transaction. Yeah, so really technical though. I mean, here we go. So all the layer 2s are protocols built on top of the layer 1. So it just improves scalability, like I said, lower fees, faster confirmation. They're called roll-ups. Like I said, you roll up the data, package it up, send it to the layer 1 for processing.
Okay.
So similar to how you don't interact with like a massive server, you interact with an application that's hosted by a cloud server. Same type of idea. There is this interesting.
I thought this was A-ball pool for a second. Oh, that is A-ball pool.
It's actually a visualization of the blockchain. So
these are South Park people.
South Park people, yeah. So basically what you're seeing here is on the left you have Ethereum, on the right you have Bitcoin. So these little South Park people are all basically transactions. And this is the block. The bus is the block, right? So see how Bitcoin is slower. It's a larger block. ETH is a little bit quicker. And they kind of are waiting to get in line, and there's kind of these levels, these different ones. And if you pay more gas, you get in this first block and you're submitted to the blockchain quicker, right? So
cut the line fee.
Cut the line, yeah. There's these little green blobs, and those are the package data I was talking about from the layer 2.
Which ones are those green blobs?
They're these things. So if you click on it, see how it says blob?
Yeah.
So it kind of shows you it's essentially a package of data from a layer 2.
Okay.
So let me see if I can find the layer 2 here. Change street. Arbitrum. Okay. So Arbitrum is an example of a layer 2. So see how on the left here, you still have them all queuing to get on the bus, a little bit slower. Over here, all these transactions are put in their package. They're like mailing their package here.
Yeah.
And here's the mailman, and then they get on the escalator, and they're kind of all waiting to be packaged together to send to layer 1. So in a minute, you'll see all these packages kind of be scooped up and sent off to Ethereum, which is over here. So it's just a visualization of what's going on the chain.
Extremely helpful, by the way.
Okay, yeah. I struggle, like, it's abstract. You need a visualization.
Absolutely. Yeah.
And then over here, these are applications. So this is Uniswap. So you can kind of see Uniswap is a decentralized exchange. It uses liquidity pools to make markets without the need for order books or central facilitators, right? So no New York Stock Exchange, no Chicago Merc Exchange. It's using math and a different mechanism to basically cut out that middleman.
Yeah.
That's how markets are made in crypto on decentralized protocols. So it's called an automated market maker. I don't know if you ever came across it, but that's...
You're talking about Uniswap?
Yeah.
Yeah, I've used it before. I've lost money in it. I tried to transfer some tokens. I don't know where. Like that, you know what I'm saying?
Yeah.
It was just trying to learn by trial. And I think I got something in a wallet somewhere. I've tried to swap tokens to exchange it for wrapped ETH. I was doing the wrapped ETH and ETH. I needed something along those lines. And clearly, as you can see in my dialogue, there's somewhere.
It happens. It happens. I think the first couple of transactions I did, I've lost money.
Yeah.
I got stuck. I didn't have enough ETH for gas. I think that's like the most annoying part is when you go to submit a transaction, you're like, I have money in here, and then it's like
the gas fee.
Or whatever. So early, that's the early adoption kind of trying to overcome some of the just early tech stuff.
I knew it was I knew I was kind of walking with my eyes closed a little bit. It was a new space, but it happens.
I mean, I honestly think like if you can get over that, you're like 90% of the way there.
I mean, I'm extremely excited.
Yeah.
I'm extremely excited to ask you more questions.
I need to show you at some point. I don't know if we'll be able to do it on the show today, but I need to show you Solana because Solana will make it 100 times easier for you because you don't have to deal with like wrapped ETH. You're not dealing with any of like the gas fees.
Yeah.
It's really quick.
But is the wrapped ETH still important?
Yes.
Okay.
Yeah, and it's still important. The thing with ETH is like because it was one of the first, I guess, layer ones that had smart contracts. They built like the ETH token isn't actually like an ERC20 standard, which is what like the protocol is for tokens. So that's why they had they need a wrapped ETH because you needed to wrap it in the like ERC20. Yeah, it's like super tech nerdy stuff, but they just built it. They essentially built it wrong.
Yeah.
So it's just early tech hiccups is what I could say.
Yeah.
But still important. There's still like a reason for it to be there as far as like facilitating liquidity markets. It's definitely like something that's necessary, but I think they probably just built like it's kind of annoying to deal with that. So that's why I say Solana is probably a better blockchain for you to maybe be we'll take a look at some point. But so anyway, ETH scaled. We don't have to deal with as many gas fees. Still, has that sort of supply and demand economics, demand for block space, more users using it, gas fees go up. There's another mechanic where it's deflationary. So the supply of ETH is being staked, which means it's being locked up to earn a yield. Similar to how you would purchase like a bond or whatever, you're kind of locking up your cash. Not necessarily a dividend, but more of like you're locking up your cash in let's say a CD or savings account, and it generates a yield. So there's another site you can track this. Money. Basically, since it's gone to a proof of stake mechanism, you're reducing the supply because people are staking to initiate transactions, right? So on the left over here, if you could see my screen, here's like the supply rate, and it's basically at like a slightly positive on a 7-day time frame, 30-day. Here's like a 3-year time frame. So at one point after we merged proof of stake, it kind of was deflationary, meaning more ETH was being burned than being minted. And now it's slightly inflationary, but if you look at if we didn't merge it, if we didn't go off a proof of work, it would have been super inflationary. So so it's just
kind of have to rip the Band-Aid off.
Yeah. So it burned. We're burning like 700,000 Ethereum a year. It just kind of changes the supply demand mechanics of ETH. So less ETH on the market kind of affects the market cap, kind of affects circulating supply.
Yeah.
So and here's some gas statistics. So we've been able to reduce gas. They've been able to reduce gas fees pretty significantly. So back when you were talking about the NFT markets, you can see here base fees were massive, right? Like 64 Gwei, which is just the unit. You see spikes here, right? And now since we've gone proof of stake, it's been pretty low. It's been pretty manageable.
Yeah.
So even with people using it, it's kind of been pretty manageable. Not as crazy as when you were doing NFTs. So I think what's interesting is they've been able to upgrade the protocol to, I guess, manage the demand, right? Because if they made it non-upgradable, then you would just nobody would use it.
Yeah.
It'd be way too expensive to use. So, just kind of an overview of what has been going on since you were, I guess, last deeply.
It's been a minute.
Yeah.
No, I'm excited. I'm excited to ask you more questions too, just because think decentralized assets in general, always extremely interesting.
Yeah.
Especially decentralized exchanges.
Right.
Unironically, I think are extremely interesting too. So it was a nice update, kind of just where we are with things.
Yeah.
Because I didn't even know where to start. I was like, man, where are we at with crypto regulation? They gotta be lobbying to not get these crypto banks running and decentralized exchanges. Like the banks gotta be fearful of that. So those are some things that, been crossing my mind.
Yeah, for sure. I mean, I think if you want to take a look at, you're talking about DEXs, you're talking about some of the regulations.
Yeah.
I think we should take a look at like DeFi in general and just see like what's going on there.
Right.
Obviously you heard of stablecoins. I think if I'm taking a step back, I think the biggest innovation in the space was a stablecoin. Just the
You
fact.
think it was?
Yeah.
You think we, in terms of needing that to move forward?
Yes.
Okay.
For anything, right? Because why would you like? We don't price things in gold. We don't price things in platinum. We price it in dollars, a stable unit of exchange. We didn't even have something like a digital dollar until like 2020.
Okay.
So think about like 5 years ago, there was like no such thing as like liquid stable.
I can't believe that. Actually. It kind of feels surreal.
Yeah, exactly. Like I remember earlier.
2020, what?
Yeah.
2020.
And like think about it too is the gas fees that you're talking about with like Ethereum came out in like 2014, 2015. There was no such thing as a stable coin. So they had to price everything in Ethereum, making it way more confusing. And you know what I mean? And so like the fact that we have this digital dollar now that is a stable unit, it makes everything work so much more efficiently. Like if I want to like pay you, like you make a video for me or you come on the show, I want to pay you. Like, I don't know, maybe you would accept ETH, but more likely you would want a dollar.
Exactly. Yeah.
So just kind of
by default.
Just by default, yeah. So I always take a look at this tool, DeFi Llama. You can see stablecoin market cap here. Total value locked in DeFi, 150 billion. So DeFi really, like, you can go back to like 2017, even 2020. We only had about 500, 600 million. And then 2022, last cycle, popped up to 167 billion, all-time high. And then FTX and Terra Luna and all the kind of big crash happened. We bottomed out at 30 billion, and now we're kind of on the rise again. And I still think we're kind of peaking out at a local top of last cycle. So I think there's more room to run. But yeah, like 5 years ago, this wasn't even like a liquid market.
That's nuts.
Yeah. So just kind of trying to put things in perspective of where we're at in the space. Stablecoin market cap, about 290 billion. So digital dollars, right? Digital representation of a US dollar, we got about 300 billion worth of value.
Okay.
Which is tiny relative to every other market, but
it's emerging though.
We're pretty big. Yeah. Pretty big. So, I always say that is like the most, take a look at the market cap chart. Yeah. So 2020, there was only $5 billion worth of stable coins. So 2018 is when this first started being tracked, which is, I think was when Tether came out, 30 million. So yeah, we didn't even have like digital dollars until like 5 years ago.
Yeah, literally since yesterday.
Yeah.
That's wild. The space is moving quick though. It feels
super quick.
I mean, when you brought up that point of 2020, it's like, no way, only 2020. That was like yesterday.
Yeah.
But
yeah,
I'm still excited.
Yeah, so there's a ton of stuff going on, more liquidity in the space. I really think, like, for me, the big thing you got to get over as a beginner is losing your money to gas fees or whatever. Don't lose a seed phrase, hopefully, but
not that one.
Yeah, but it's something that everybody goes through. Like, I've been hacked. I've lost a couple thousands of dollars being hacked, clicking on a phishing link. It's kind of like early internet, right?
Exactly.
Like
it's wild west sometimes, especially 2020 when it was all popping up.
Yeah,
so
very wild west.
It was a wild west.
I could tell you so many stories about just crazy stuff happening, like buying pictures of monkeys for hundreds of thousands of dollars. Right. I remember I had a buddy that was helping me like mint NFTs. We minted a picture of a mouse, and the next day it was like worth 20 grand. I was like, just like stupid stuff happening. It was peak mania.
Right. I mean, peak, right?
Yeah.
I mean, with social media, it's arguably more peak mania than 98, 99. Bigger deal, internet, I get it. But we had social media to really fuel the fire.
Yeah, exactly. So, I think it creates a bigger feedback loop. I think it creates more mania. It's internet capital markets.
Yeah. And more early adopters.
Yeah.
Right? If that wasn't happening, I probably wouldn't have been familiar with these things, and at least knowing that I need to become even more familiar. I wouldn't have known the importance if that didn't happen.
Right.
Maybe I would have, but I don't know if at that time.
Yeah, I think social media kind of made it, at least Twitter made it kind of move faster, right? Because I think pre-2020, you had to be deep in like Reddit forums and.
Pre-2020, people were, let alone crypto, people were barely trading options and futures and stocks, let alone crypto. So yeah, you're right.
Yeah,
it's very few and far between. At that
COVID
time.
was an accelerator. I feel like
it was a launching pad.
Stuff. Yeah. But how about you? Like, what are you paying attention to? Even away from crypto, are you stocks or
a lot of futures?
A lot of futures.
Love the futures markets actually.
All right. Are you familiar with perpetual futures?
No, I'm not.
Okay. This might be something that was interesting to you. So, in the crypto markets. Mm-hmm. There really isn't this concept of dated futures, right? Because it's a 24/7, 365 market. Right. So we have this concept of perpetual futures. This is what drives most of the future markets, derivatives markets in crypto. So it's just a trading contract that lets you basically bet on whether crypto is going to go up or down without actually owning the crypto yourself, right? Similar to futures, but they don't expire. There's no such thing as like dated expiries or anything.
Okay.
So, traded on exchanges. Some are decentralized, some are centralized. Binance, Bybit are a couple examples of centralized. I'm sure you heard of Binance before. Mm-hmm. Hyperliquid, which is a very popular one that just emerged over the last year, is a decentralized one. And again, relatively small. I think 40 billion is open interest over 24 hours. But basically, you're trading off of a funding rate. So it's kind of like a swap, right? So you're not actually... There's no expiries or anything. You're just sort of betting long or short and paying. If you're long, you're paying a funding rate, so you're paying interest to the short seller, and then vice versa. Short seller is getting paid by the long. So there's a spot price, and then there's a spot price, and then there's like a future price, and the funding rate kind of keeps it in line.
Okay.
So you can take, you can go up to 100x leverage on some of these.
Oh, wow.
So yeah, so it's pretty big.
Okay.
The one I use the most is Hyperliquid.
That's the decentralized one.
Decentralized one. We'll see if we could take a look at it. I hope it lets me on because these aren't available in the States. But so if you're overseas, you can do some of this decentralized. Coinbase just launched some, but basically. Here you have, we'll do Bitcoin US dollar. So on Hyperliquid, you can go up to 100x leverage. There's a mark price and an oracle price. So like I said, mark price is your spot, your oracle price is your future. It's just different ways of representing the name of the price. So they're slightly different. So the mark price is typically the spot price is cheaper than the oracle price. And then there's a funding rate. So the funding rate here is about 10% annualized. So if you keep the position on, you're paying 10% basically to finance the position. So let's see here, size. I'll do 1 Bitcoin. It won't even let me because, there we go. So basically, if I were to trade 1 Bitcoin in size, your liquidation price would be $108,000 per Bitcoin. Order value would be 112, so I'm just putting it in at the mark price. Margin required 5,600. So this is where you get into like futures margin to own 1 Bitcoin worth of a size of a position. You need about $5,600, right? And then there's some fees and whatever else here is represented, but basically all you need to know is that you would get liquidated off of a liquidation price. So as long as it doesn't touch that, you're pretty fine, but you're paying interest. So that's another, you're financing the position. So that's kind of another little wrinkle.
So financing the position. So regardless if you profit or loss, you have to factor in what you're paying Okay, that makes sense. So I used to short a lot of small cap stocks like years ago, 6-7 years ago.
Sure.
And you had to use certain brokerages because you had to borrow the shares. You had to reserve the shares to short it beforehand. So a lot of the times, even if you didn't get the opportunity to short, you still paid the fee to reserve the shares.
Right.
So you still have to factor that into the cost. But that's just what came to my mind right off of the bat.
Similar idea.
Okay, so regardless of if I make or lose money, it's still a cost I have to factor in.
Right.
Okay.
Right. And the funding rate actually changes. Like this funding rate is supposed to keep this mark price and Oracle price like in line, right? Okay. So the mark price will always kind of converge to the Oracle price. So that funding rate, whether it's, big or small, depends on like how far those two prices get out of whack. So it's like it's kind of like it's like an arbitrage that keeps the price in line with what it's actually trading at.
Okay.
And then it changes this one changes hourly. So every hour you're paying this rate. If negative, shorts pay longs. So if it's a negative funding rate, shorts are paying the longs to finance the position. If it's a positive rate, longs are paying the shorts.
Okay.
Yeah, so like you can do different things. Like you can do like ratio trades. You can do, like you could go long Bitcoin, short the altcoins, right? Some of these have massive funding rates, especially like newer launch coins. So there's some interesting strategies there. It's just something a little bit different than I think traditional markets, because traditional markets typically go off like dated expiries. This is more of a swap. Sort of like a CFD, if you're familiar with like what a CFD is.
Yeah.
So this is another innovative thing in derivatives that's kind of unique to crypto, because the market trades 24/7, 365. So there's no like.
Are you flexing on us equity people right now?
Yeah.
It's like, by the way,
it trades all the time. So there's no turning off the markets. 24/5. Yeah, we've been there for.
I am jealous, to let you know. All right.
Well, there's also they're getting into like stocks now, and like you can do, let's see, pre-launch tokens. You can do, I guess they have like a whole meme. I mean, like let's look at this, like the Trump. Let's go to the Trump coin. Yeah, if you want to short this, you're paying like 17-18% annualized interest on your position. So it's kind of a lot to do some of this stuff. So like this is an interesting thing too when these meme coins go live, because you might look at it and you might be like, oh wow, it shot up and it's going crazy, but people come into like the perps markets and short it, and it's kind of like creates that like efficient market. I think people use the perps markets a lot to do some of that. There's a carry trade you can do where you can be long the spot and just short the futures.
Okay.
Collect the carry. So yeah, there's a number of different things you can do there. Let's see. They also have vaults, which is interesting. So you can just deposit into like a vault that runs an automated strategy. And so the APR on this one, which is it's called the hyper liquidity provider, 15-16% if you just kind of want to deposit your money and let someone else manage it.
There was an era where the APR on staking was insane on certain projects. Do you remind me a little bit of that era and why certain staking protocols had such high APRs? I know there was a lot of risk involved in some, but some did pay out those high APRs, if I'm not mistaken.
Yeah, so if you're talking about like DeFi vaults, there was an era where they were like juicing the returns on that. And the way I understood it was not sustainable for a long time, but people would be farming these vaults and it'd be like 500-600% APR.
Yes, and that would attract more.
Yeah,
in the beginning at least, right?
Yeah.
Okay.
I mean, they're not like that anymore, really. But
no, it was during the craze.
Yeah.
Right. Yeah. Again, risk involved, yes. Yeah. But I do remember seeing some staking protocols like some insane APR, and it was real. It didn't last long. They usually did that to market to get more people to the project, and then they lowered it things adjusted once
more people came in.
Yes. Not too familiar, but I do remember that.
I know exactly what you're talking about. This was just like, it was DeFi summer.
It was like just staking something, like just putting something along.
It was like they were minting more tokens. It was like it was just the interesting mechanic.
What you're saying, yes. That rings a bell.
The one that comes to mind for that is like Olympus DAO. And they had this. It's all like weird social mechanics or like economic mechanics. So they had something called like 3,3. So it was basically like I hold, you hold. It was like a weird like prisoner's dilemma type thing, but it kind of all turns into a Ponzi. Like
so game theory, yeah.
Game theory,
Kinda like
game theory, yeah. The way I understood it was if you were early, you got in early, you were like...
It was like hot potato, low-key.
Yeah. It was like, you got to get in for... It was, it was like Ponzi-nomics.
I mean,
we call it Ponzi-nomics.
Okay.
But to your point, it was a great marketing tactic because it was like it brought more people in, but the early ones always benefited. So the way I understood it was like, it was either like based off of some type of weird looping leverage where like the early deposits were taken and put into other pools and just kind of looped around, kind of rehypothecated in some ways, created that crazy like APR. The other one is they were minting new tokens. So it's like you weren't earning in US dollars. This is where I kind of get back to that like stablecoin thing. You were earning in the native token, but the liquidity was there to support it.
Right.
So that's where your like 500% APR came from, right? So if you were like, if you put $100 in and then, you know, in a week you had 1,000, but you had $1,000 worth of the token. You didn't have like $1,000, so you had to swap it.
Yeah.
So you had to be quick and you had to kind of like do some of that stuff. But yeah, there was interesting mechanics there.
Yeah.
You know, right now I would say like if you want to do that, you would go to Aave. They're not as...
Spell that for me.
AAVE.
Okay.
And this is where you can borrow lend. So this is...
Become your own bank.
Become your own bank.
Right.
That's the promise of DeFi. So let's just look at Ethereum. Supply APY, you're earning 1.61%. You could borrow at 2.3. So not too crazy, not too great. US dollar coin, 5.2%. Hey, better than a high yield savings account.
Anything's better than that.
Yeah. So
no, high yield savings account. Hey, I take that back. It's valid. It's valid.
Right. But here's the thing that's interesting, I think, because let's say you have a bunch of ETH and you want to, I guess, borrow against it. So you would, I don't know, deposit a bunch of ETH. You earn a yield plus, you know, whatever else you can earn off of it, and you could borrow at 2.3%. So, yeah, I mean, I don't know. I've seen people go buy houses this way. Like, don't sell and take the tax hit, finance it through DeFi.
Oh, really? Through
DeFi? Yeah. So like you only pay the spread.
Right.
I don't know if it works that well with ETH, but it definitely works pretty well with US dollar coin, Coinbase, Wrap, Bitcoin. Yeah, you could basically borrow at 2.3%, assuming ETH stays high, transfer it into US dollar coin, move it out to a bank, pay for a house. So let's say like you deposit $1 million worth of ETH, you could borrow up to 50-60%. So you borrow 600K. You could borrow at 2.3%, transfer it out into US dollars, go buy a house. Yeah. So you're only financing the house for 2.3%.
Right. I mean, if it's efficient.
But I mean, there's obviously it's kind of really risky. But
of course,
I've heard of people doing that.
Yeah. Of course. I was saying for individuals that have the disposable income or capital to where like if it for whatever reason, of course, no one's gonna want that. You
right.
Make that kind of money, but. I mean, saving 2 to 3%. I mean, percents are percentages. Yeah. So I mean, the higher dollar amount you go, I could imagine how that could be really attractive.
You're right.
With somebody that has a ton of disposable income and just like, yo, if I could save that on this, let me try it out. Let's see what.
Exactly. I've heard of people doing that.
I don't know if it was a let me try it out for them, but you know, it's been done.
It's been done. For sure.
I think there was a purchase in Florida, if I'm not mistaken, within the last 2 or 3 years I heard about with things being purchased through the blockchain, something like that. Don't know the validity on that either, but
they're putting home equity lines of credit on the blockchain too.
Oh wow!
You can, it's kind of crazy what's going on right now.
All I gotta say is anybody watching, I would tune into Dan and Jelly's show. Not even a plug, but because like we're all gonna need to be very well rounded in the DeFi space, anyways, in the future. It's inevitable, in my opinion.
Well, I hope we do a good job of explaining it. But if you want to check out some of the more stuff we do deeper, like we do a lot of NFT things, and I don't have my wallets loaded on this computer, which kind of makes it harder to show. But on Friday we do a live stream for about an hour, and we're just on chain. We're buying NFTs, we're swapping, we're deploying liquidity pools.
That's fire, actually.
yeah, if anybody wants to come,
and not just theoretical slides all the time. Like sometimes you go in there.
Yeah. Oh yeah.
Show what the wallet is. With the seed phrase, all that.
We made a token one day, and now we're like LPing it and showing people how to do that.
That's so fire.
So yeah, we'll have to do more of that stuff, and hopefully we'll get you on that show too, because I think that's where you can actually see it happen live. This show is a little bit more theoretical, I think, a little more
It's
beginner
helpful still.
focused.
It's helpful.
But yeah, I mean, I think we're good. Anything else you want to chat about, or?
No, I think that's all that was on the top of my mind that I couldn't wait to get off. Let me get Dan's thoughts on some of these things. So.
Yeah, so I hope I did an okay job explaining it. Appreciate you coming on.
Absolutely. Thanks for having me on.
Yeah, for sure.
I know we always been wanting to get, so thank you, brother.
Oh, yeah, dude.
It's fun.
Come back anytime. We'll have to get you on another show with some of the stuff. Maybe I'll come on the noon show with you and Gus. You guys can show me futures, because I have not done, I kid you not, like I started trading stocks in like 9th grade, 10th grade. I was super big into finance, whatever. Did a little bit of options. I was like a licensed broker for a little while. And then I just got crypto pilled, and I was like,
Crypto pilled, and it never went back.
I never went back.
That's how it happens, though.
I was like, I need to just bet all of my money on this.
Yeah. I think it was a wise decision.
I hope so, yeah. But like I said, you got to get over the initial like learning curve.
Well, again, it was one of those things, to your point that you're making, is like you can only consume yourself with one industry so much, right? My thing was trading, futures, equity options, and like I was so interested in the crypto space too, but you can only spread yourself so thin, especially to understand things at an in-depth level. That's why I'm like very excited to ask these questions, because I don't have the time to dive into industry like you. So I'm like, cool.
Yeah.
Somebody that, puts all that time and energy, I have questions and they can help me out too.
Yeah.
So
Anytime.
We'll go back and forth.
Yeah, definitely. I want to come on and chat futures too.
Yeah, absolutely.
I never made it to futures.
No?
I only made it to equity options.
Not yet.
Not yet.
Yeah.
Not yet. You could probably convince me to do futures for sure.
At least a micro contract. We'll get them, guys. We'll get them.
So, but yeah, that's all we have today. Be back here on Wednesday. We got one of our recurring guests, Greg. He'll be in the studio. He's from Amber Data. He breaks down the crypto options markets, which I think is really interesting and relevant, just to see how some of this stuff's trading. But without anything else, we'll let it go, and I'll talk to you tomorrow.
Cool. Thanks, Dan.
All right. Peace, guys.
Peace, guys.
Later.